Okay. Good morning, everyone, and thanks so much for joining us on day 4 of our 6-day marathon Metastock Traders Conference. My name is Greg Lewis. I am the marketing manager for Metastock, and I'm coming at you from our satellite studio down here in McAllen, Texas. Today, Jeff, the organizer, orchestrator, and host of the event, is coming at you from Salt Lake City. Oh, excuse me. Beg your pardon. So, first things first, if you can imagine, there's a lot of logistics involved in getting an event of this scale organized and executed, and there's a lot of moving parts, and some of those parts aren't working so great this week. So Jeff has really had to zig and zag to make things work this week. So go ahead and give him a big virtual hug this morning. If you're not comfortable with that much virtual contact, maybe just give him a virtual pat on the back, but he definitely deserves it. And so far, I think we've had a great event with a few hiccups that are noticeable by those on the front end, but in the back end, it's been quite a struggle, I think, for a couple of us. So anyway, having said that, there are some changes in today's schedule. As of now, it looks like Jeff Gibby will be the first speaker this morning, rather than what you see on the schedule, which was Kelly Clement. And then this afternoon, you may have been anticipating Tyler Wood, but he has been held up in air traffic somewhere over the skies right now, so he's not sure he's going to be here in time. So we have put Zaheer Anwari in his place for this afternoon. You will see that on the schedule, but things are actually going faster than our web dev team can keep up with. So when you look on today's schedule online on metastock.com/traders-conference, it may or may not be the actual schedule. So we apologize for that, but mostly, people are here, and they are most all the speakers are actually attending and presenting, but not at the time it was originally scheduled. So for that, we apologize. All right. Again, we are Metastock. If you haven't heard of us, I'm going to go ahead and play a little video so you can find out more, and then I'm going to check in on Jeff and see how things are going on that end. Thank you so much.
Hi there. Greg Lewis, Metastock Software. As the marketing director, I get asked all the time, what is Metastock? How can I help my trades? Well, stick around for about 3 minutes, and I'll tell you. Metastock is an award-winning software and data package that has been helping traders for over 35 years. Simply put, Metastock is a tool for traders like you to analyze the markets. Metastock helps you take the guesswork out of trading by offering a methodical, systematic approach to some key questions all traders come up against. Questions like, how do I decide which securities to trade when there are literally thousands to choose from? Which strategy should I use, and how do I test that strategy before spending my first trading dollar? When should I enter and exit a trade? How can I effectively manage the securities I'm interested in? And of course, how do I know where prices will go next? At the core of Metastock are the Power Tools. The Power Tools give professional-grade analysis tools to private traders like you and me. You can scan the market with the Metastock Explorer to filter and sort securities that show buy and sell signals based on your criteria. The Metastock System Tester lets you test most strategies through a process called backtesting, which allows you to see how your strategy would have performed over time. You can easily manage and monitor the securities you are interested in with Quote Center. Quote Center lets you sort on a variety of criteria to view the data that's important to you. Then just double-click on a security if you want to see its chart. With the Metastock Forecaster, you can even take advantage of patented technology to view probable future prices. If you're an options trader, you're going to love Metastock's Option Scope. Option Scope puts all the critical info at your fingertips, displaying sortable, customizable, color-coded options data, including the Greeks. And Metastock has solutions for traders of all levels and interests. If you're just getting into trading, you will appreciate the education offered by our many built-in systems. In addition to pointing out buy and sell signals, Metastock explains how they work in an easy-to-follow commentary window. Metastock has built-in systems based on popular strategies like MACD, Bollinger Bands, turtle trading, candlesticks, and many more. Metastock even has the very popular and exclusive Rahul Mohindar oscillator system, or simply known as the RMO. And as you become a more experienced trader, Metastock grows with you. Advanced analysts will enjoy the comprehensive list of trading systems and indicators and the ability to build their own systems. And if you're a day trader, you can't do better than Zenith, the real-time news, data, and analysis package offered by Refinitiv, a world leader in market data. Add on the world-class support, and it's not hard to see why Metastock has won the Stocks and Commodities Reader's Choice Award for 26 consecutive years. To find out more about Metastock and how it can help your trading, visit metastock.com or contact a product professional via phone, email, or chat.
Okay, I hope you enjoyed that little video. There's been an update. Adrian Manz has been able to join us last minute this morning. Now, he had to cancel yesterday for personal reasons, but now he's able to go in this morning. So let's look at today's schedule, such as it is. Now, the first speaker is supposed to be Kelly, but he went yesterday to fill in some places. Anyway, the first speaker today is Adrian Manz, and he's going to be coming up in about 3 minutes. Then after that, it pretty much goes as you can see here on our website for today. Jeff Tompkins is coming up, Peter Dalal, AJ Brown, and then Zaheer, who was supposed to speak on Friday, is now speaking for Tyler Woods, who, as I mentioned previously, is somewhere flying over somewhere. He can't make it this afternoon. And then finally, wrapping things up today will be Jeff Gibby, and then Kevin Nelson, and then Daniel Sinnig. Now, that's the schedule as we know it now. As it is, things have been pretty fluid around here. So we're hoping that we can do better today, but we do have Adrian Manz right now getting ready to go, and in about 2 minutes we should be able to start with him. So again, we sure appreciate you joining us. We sure appreciate your flexibility and willing to watch us anyway. And I have to say, despite all the issues, I think it has been a really good conference thus far. We've had really good feedback and some great presentations. And we do enjoy bringing this to y'all. And on that subject, if you would like to like and subscribe and ring that bell, then you'll be notified whenever we have live events like this. And we have these, what we call marathon events, about once a quarter, multi-day events. And then once a month, we have a full day event. And then weekly, we have several 1-hour webinars. So it's a lot of value add in here. You know, there's a lot of stuff you can learn from all these guys, and it's a lot of professionals in one place at one time. So I would definitely take advantage of that opportunity. Speaking of opportunities, go ahead and chime in. If you have questions or comments, go ahead and put them in the chat. Jeff does pass them on to people, the presenters, when the time is appropriate. We do this, simulcast this on YouTube and GoToWebinar. If you're watching on YouTube right now and you want to be eligible for the giveaways that Jeff does, go ahead and go to metastock.com/traders-conference, or just go to metastock.com and click on the banner on the top and register. And that way you can be eligible for the giveaways that we're doing. You become immediately eligible as soon as you register. So we'll be starting here in about 30 seconds. You can watch here on YouTube or GoToWebinar, but of course you have to register to watch on GoToWebinar. It's pretty much the same experience. I think that's about it, folks. I'm going to go ahead and go back and make sure we're good on the other side and let you listen to some jazzy music for about 20 more seconds. Thank you so much for joining us again, and have a great, great Thursday.
All right. Hello, everybody. Good morning. GoToWebinar, YouTube. It's good to see you. Thanks for coming in. Let's go ahead and kick off. My name is Jeff Gibby. I'm going to read legal disclaimer. I'm going to talk about our sponsors, and then we're going to kick off with Adrian Manz today. So Charles asked, hello, Neil. Hello, Charles. It's good to see you guys. If you can hear me and you are in a good mood, say hello today. Make sure we get that participation going. Charles asked, why can't I see the chat on the GoToWebinar site? So with GoToWebinar, one of the things that really bothers me, enough to maybe even get off of GoToWebinar in the future, is I can't just let you guys chat. It's always moderated. I've done research. It's actually GoToWebinar. If you want to be able to see it, I have to send it to you. So you'll notice right here, Charles, where I'm talking about your comment that you just made. I had to actually kind of go in and send it out for you to even see it. And it's something that GoToWebinar does not allow. They do not allow unmoderated chat, which is why a lot of times when you chat in, I might put a period next to it. Hello, Kevin, like this, and send it to the chat. It's just something GoToWebinar. And it bugs me because I just want you to be able to hey, I like this idea, and chat with each other. GoToWebinar does not allow it. So other than that, though, GoToWebinar is really good, aside from that. So let's go ahead and kick off. Today's demonstration is designed to instruct you on using Metastock and the accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. Metastock shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. So good morning, everybody. Let's see. Good morning, everybody on YouTube. If you're watching us on YouTube, make sure to hit like and subscribe. It helps a great deal. Charles, you're welcome to go to YouTube if you want. We simulcased it, so if you prefer being able to chat with us, you can definitely watch us on YouTube. You're welcome to stay and go to a webinar as well. So what I try and do is just send all of the comments into the questions area so you can see them. Real quickly, we're going to say thank you to Stocks and Commodities Magazine for sponsoring the event. Great sponsors, great magazine. Check it out at traders.com. Hello, Paul. Good to see you. Thanks again for CMT Association for sponsoring the event. We will be hearing from somebody at some point. It was from the CMT, and they are a great, very well-respected, very well-reputed organization, cmtassociation.org. And of course, AAII, American Association of Individual Investors. You've probably heard about the AAII Investor Sentiment Index, all that kind of stuff. They're a great partner. We appreciate their sponsorship and their help and their support. They've done a great job. So with all that out of the way, our first speaker today, of course, we're Metastock. We'll be talking about Metastock as we get going today, but I'm going to go to our speaker first. Adrian Manz is our presenter today. You've seen me. I've held up a couple of his books. I like the patterns that he talks about. They're very visual. They're all kind of a baseball analogy and a baseball metaphor. And he's got some really, really terrific patterns. So without further ado, Adrian, let's go ahead and get you started. I'm going to do a couple things right here, just so you know. I'm going to make you an organizer instead of a panelist, so that way you can see the questions as they come in through GoToWebinar. And then I'm going to make you the presenter. And then I'm going to hold on here, and I'm going to tell you as soon as we can see your screen, which we can. I do see the presenter view, though. Perfect. I think I see exactly what you want to do. Adrian is welcome to the room. I know we've had you in here a bunch of times. I hope you're doing well. Is there anything special that you want to lead off with before I let you go?
No, I had sent you an email that everything that I'm going to talk about today was from sort of the second book that I did, and I'm gonna send you 5 copies of that you can use as a prize for some of the folks who are watching.
Oh, cool. Awesome. I did see that, and I'll get that added to the prize list for sure.
No, yeah, that's great.
I can see your screen. I can hear you, and I'm gonna get out of the way. It's your turn.
Okay. All righty. All right, you guys. So welcome, and it's early, at least here on the West Coast. I was supposed to be here yesterday. I had a friend who had a health crisis, and that sort of ate up my day. So I missed, and Jeff was kind enough to reschedule me. So here we are, bright and early on a Thursday morning. What I'm going to talk about today is one particular pattern, and it's a pattern that has been sort of the lion's share of what we do. And I think you're going to find it interesting because, for one thing, all of you guys, I think, a lot of you guys are Metastock users. Most of you guys might be Metastock users. And the pattern that I'm going to talk about, which is a bread and butter trade for us, is one that the software is excellent at scanning at. And I'm going to show you how to do it in a couple different time frames. So I think you'll like this. I think it's going to be pretty interesting for those of you who haven't seen me do this one in a while. So let me start by telling you who we are, because there's always folks who don't really know us. My webcam's not working, otherwise I'd be on camera. But that's us. That's Julie and me. And we have been around for a long time. So sadly, it's a lot longer than we sometimes want to admit to. So it's been since probably 94, 95 that we've been working with the markets. We were graduate students, and everything that we did was about data. And we were working on PhDs and MBA, and I was working with a guy named Peter Drucker. He was fantastic. He was my committee chair, and he really helped steer sort of what I was thinking and the direction that I was going with things. And rather than wind up with a career with a Big Six consulting firm, which was what I thought I was going to do, the data collection that we did while we were in graduate school prepared us for just a life of analyzing markets, trading markets. We've been out there forever, sharing our data with, it started with a Dutch market making firm, Vandermullen, that used to be on the floor of the New York Stock Exchange. And it just kept going from there. We started publishing our trading plans for them, and we used them. We had them down on the floor, right? Phil Carone had the stuff on the floor in the booth as little as 5-6 years ago. We were still doing that stuff. Still had a very tight integration with our friends down there. It's a little different now. It's much more electronic, just across the board. But we sure loved the specialist system. We loved the interaction, the psychology of it. Julie and I both have PhDs in psychology. Organizational psychology is me, so I'm an INO psychologist, and Julie is a social psychologist. I'm going to tell you that probably comes in as handy, or even has a more beneficial role than the part of it where we are analysts, because the psychology of this thing is really what drives most of what happens in the markets. So markets are, even if things are electronic, even if things are algorithms and algorithmically driven, most of what's going on behind the algorithms was developed by people, and those people are the thing that makes markets move. So it's no longer the case that we know, for example, Jason is the guy on the other side of the Kohl's trade, or the Harley trade, or the Disney trade, or whatever it is that we're trading, but we're still analyzing the information that's in front of us, much in the same way that we did back then. We put Trader Insight together. That was in 1997. It's been around since 97. We like doing education. We are PhDs. We thought that we were going to be teaching college classes. Julie has taught some college classes, actually, but it's a passion. So people ask all the time. We run into people at some of the live shows and things, and they'll ask us, well, if you're such a hotshot trader, then why are you teaching? And we tell them all the time that you're not going to make any money teaching, and what trading really does for you is affords you the opportunity to teach. So we really enjoy it. We get to travel with our son almost constantly. Jeff knows him. I think all you guys know him. Jeff and Kelly, everybody at Metastock knows him, because we've done a bunch of stuff with those folks. Guys at the exchange know him. We travel all over the world and trade our own account from all over the world and try to do educational things whenever we're somewhere. So we'll do a conference in Paris, we'll do a conference in London, we'll do something, some sort of a show somewhere that makes travel not just a fun thing to do with our family, but also a business thing that makes sense, both from a business perspective and a tax perspective, right? You want to be able to roll things in and have things make sense. So that's our story. That's where we are. That's where we come from. We love what we do. And I think that that's conveyed in sort of the passion that we have for everything and the people that we work with. We have got a show called Trader Nation. May or may not be around in 2024. We're thinking it is. It depends on all these strikes. The writer's strike really hit us. It's considered a scripted show. And when the writers went on strike, we were on the Scripps network. So Scripps was the one that was going to be involved with the program. And as it turned out, the writer's strike put a damper on it in 2023, and the actor's strike. There's lots of things going on that are preventing that from happening right now. But hopefully, next year you'll see us, and you'll be avid fans of Trader Nation. And what you're going to get from that show is the psychology side of what we're doing. We go through, and in the episodes that we did, it was all about, the first one was called The Gamblers, for instance. So we went through and took a look at traders who we've worked with at our boot camps, at our, these live training things that we do. And, we go through those crowds and we find personalities, and we like working with the personalities. And the show is about how those personalities become profitable in the markets, trading the markets, in spite of themselves. So how do they get over their hangups? How do they get through, say, being a gambler or being aversive to risk or being too accepting of risk or being somebody who doesn't necessarily follow through on things or being somebody who's very, very, overly attentive to following through on things. There's lots of fun stuff there, and it's interesting to watch how these people manage to go in there and pull their trading together and make a living in this crazy business. I've done a bunch of articles over the years. I think I should probably do another one for stocks and commodities, just because we're always speaking for them somehow. But I like to write, I like to present, I like to get out there, and most of the stuff that we publish is a little bit more technical than other things that you see out there. We rely a lot on statistics. We rely on a great deal of sort of the backdrop of what's behind a pattern, as well as just the pattern itself. So we just want to make sure that whenever we put something out there, it's got a backbone and it's something that people can look at and replicate and figure out for themselves. It's not really the kind of thing that you're going to plug into a piece of software and back test, because there's intervention required by you in picking the best setups, the best stocks to trade. And I'm going to go through that in a second here. So today's going to be all about one of the patterns from my first book, Around the Horn, A Trader's Guide to Consistently Scoring in the Markets. Jeff very kindly pointed out that was written around a baseball metaphor. The original title of that was it was a statistical thing. Okay, first off, so it's a multivariate analysis of covariance in the United States equities markets. And, within that book were things like, a hierarchical cluster analysis of volume and all this kind of stuff. And, the publisher, George, who's a dear friend of mine, was also sick this year. So God bless him, and he had a heart attack and he's coming back from it. So he's in good shape. He's going to publish a new version of that book in 2024. That one's not currently in print. We ran out of them last year and decided it was time to update it. But that book is converted to this baseball metaphor where things are called, where patterns or setups are called things like fastball. And fastball is the one that we're going to go over today. Fastball, infield fly, line drive. The worldwide version, Beat the Street, is published by Harriman House. And beat the street is much more. It's a a fastball is an expansion of range and volume with a statistical background to it and all this stuff. But really, the patterns are the same. And if you have a piece of software like Metastock that's good at going through and combing for patterns that can be quantified, you're in business. So, Trade Secrets, that book is all about the strategy I'm going to talk about today. That one is in low stock. I'm going to say everywhere. I'm sending 5 copies of it that I have over to Jeff, and or he'll send me the winners' names and addresses, and I'll send them out directly. Whatever he wants to do. That one is taking one of the strategies and around the horn and just trying to demonstrate how robust it is. It's taking fastball and it's saying, look, you can trade this thing on a daily chart, you can trade it on a weekly chart, you can trade it intraday, you can micro trade it. And I'm going to show you those today. And I'm also going to show you how Metastock goes and finds those during the trading session so that you can do live trades against it and put yourself in front of a bunch more opportunities. So one of our best friends, a boot camp alumni, I don't know if he's in this picture here, Paul Serpina is probably somewhere at one of those tables. He just got started with the Metastock platform and with the add-on, and he just loves it. So he thinks it's fantastic. And all the guys who are using it, the thing about it is, you need to look at it and just say, in order to set these trades up, I have to do some work. This is not a set it and forget it thing. This is not about just, rolling the platform out, pushing a button, and then having it auto trade everything. You still need to know what you're doing. You still need to study. And once you've looked at this stuff, my engineers love it because they can figure it out. Metastock has all the patterns that are in around the horn are represented in the scanner. They're also on their site. So you don't need the book. You can go to the site and you can read about the patterns that you're going to be scanning for. It gives a really good explanation of everything. And I think the important thing is you go through and try to see how this stuff fits your psychology. I'm looking at these pictures here. So these photos are of a couple of the live events that we've done, the boot camps that we've done. One of those is in Chicago at the Chicago board there. That's, Julie hangs her credentials there. I'm a New York guy, of course. We live in Pacific Palisades, California. We do, to further add to the confusion, we do the boot camps in Miami Beach. Look around that table. Every one of those people has a very different psychology. So any one of these tables that I'm looking at, we've got a guy in the bottom left. He's a farmer. We've got a rancher. We've got a guy who's a chemical manufacturer. We've got a guy from Toronto who sells, I don't even know what, he's got a big sales organization. We've got a fellow who's sort of off the grid, lives on a boat. We've got, a lawyer. We've got another lawyer. We've got an engineer. I'm looking around. Everybody has a very different psychology. And I think that the key to this thing is always that you don't say to yourself, if it makes money, I will make it fit my psychology, because that's just not how we're wired. That's just not how we work. The important thing in trading is that you go and work with something and develop your psychology and develop the strategy so that it makes sense to you, so that you're comfortable with it, so that your risk is sized appropriately, so that everything that you do is something that's in your comfort zone and something that you can then go and put out there and execute every day, just religiously, reliably, and get yourself in front of opportunities instead of getting up and running away every time there is an opportunity. We've had guys over the years come to the boot camps who say they've got trading systems that work, but every time a trade comes up, they hesitate to take it. They get up and go get a cup of coffee. They go to the bathroom, right? They'll do anything to not be in the room when the trade goes off. So a lot of that event, that's an event that, these guys get. There's a 600-page manual. There's a whole week of online learning. There's like 40 hours of online learning at least. And then there's a whole week live that we do down in Miami Beach. And that week live is a lot about just interacting with these guys and just working through the psychology, and then spending the next year of their life, on the phone and everything. We only do this with 20 people, and we do it once, sometimes twice a year. So we try to keep it small so we can stay real tight with everybody that we're working with. And, the point is, if you're looking at a strategy like this one, fastball, the expansion of range and volume strategy, you want to make sure not only that you understand the mechanics of what the strategy is, you want to make sure that you understand the mechanics of how the strategy works and what it is that a volatility-based strategy like this one is going to mean in terms of what you're sitting in front of over the course of a trading day. It's a pretty simple strategy in general. It's really the non-statistically based version of the guidelines here is it relies on maybe 4 or 5 points. You're going to see a breakout from a consolidation or a pullback. I'm going to show you idealized examples of this and then some real examples as well. And also the results from the last, I think, 6 or 7 years where you can see how big a part this plays in our trading. But it's a breakout from a pullback or a consolidation. So you want to see a trending move, then you want to see a pullback or a consolidation. And then statistically, what you want to see happen is that the bar that forms on a daily chart has the widest range of the past 10 days. We want to see greater than average volume. And we want to make sure that we're going to enter the next day beyond the extreme of today's bar. So in the case of a long, we're going to go long above the high of today's bar. In the case of a short, we're going to go short below the low of today's bar. And it's all based on where the bar opened and closed. So we want to see it. In the case of a long, we want it to open low, close high, open at the extreme of the bar, down at the bottom of the bar, close at the extreme of the bar, up at the top of the bar, vice versa for shorts. And when that happens, the indication to us is that, first off, everything is driven by Alex. Everything is driven mathematically now. And what it says to us, opens low, close, pushing the market all day. When the market closes out at the high, you go through and you look at what's that closing range look like. If it was really pushing into the close, that's a tell. So what that tells us is that going out of the day, institutions did not get done what they needed to get done on this particular stock, and the expansion of range and volume is going to continue the following day if the institution comes back. So the way that this looks, again, this is an idealized chart. So this could be a daily chart. This could be a weekly chart. You're always going from a longer time frame to a shorter time frame when you're trading these things. If you're a swing trader, if you're trading this with options, let's say you would probably be looking at weekly charts or even monthly charts for the setup, and then trading it on a weekly or a daily time frame. If you are an order flow trader, like Julie and I are, then you're going to be looking at daily charts in this case. So this would be daily bars, and you're trading it intraday. You're just looking to capture the order flow during the trading session when you can get in front of the opportunity. So in this case, we've got a big move to the upside on a daily chart. We've got a pullback in our trend. So a big trending move. If you're an ADX fan for scanning and all that stuff, you can have Metastock just say, ADX has to be greater than 30, DI plus greater than DI minus. And then it starts looking for the pattern. Here's the pattern. Widest range of the past 10 sessions, shoots up and out of this pullback that we're in. And now we're saying we're going to get long 10 cents above the high of that daily bar the next trading day. And then we're always target support or resistance when we set these trades up. So in this case, we're going to look for a resistance level up above that bar with the orange arrow next to it that says this is the place that price is likely going to reach a threshold. Institutions will leave their orders out there forever, right? So if you go and you run into sell side order flow, you run into a spot, there was resistance before, and on the daily chart, if it's going to hit that resistance again, you're going to run into trouble the next day. So that's where you want to put your exit for a profit. Same thing here. This is a pullback in a trend. We're moving to the short side of the market. Market's moving lower. As it moves lower, it pulls back, and we get the widest range of the past 10 sessions. And here, what we're going to look to do is we're going to go short 10 cents below the low of that daily bar in the next day's trading. So in the next day's intraday trading, we're going to go short. And again, you could do this in different time compressions. I'm just going to talk intraday today since that's where Julie and I do our trading. There's also a consolidation version, and the consolidation version does pretty much the same thing, except that this is bidirectional. So you could go and have a trade like this one where it's a move to the upside, consolidates for a few days, and then gives you a pop up and out of the range. And then here we would be looking to go long, and it used to be 1/8 of a point, right? So it used to be 12.5 cents above, but we use 10 cents now, 10 cents above the high of that bar. The next day, we're looking for a long. In this case, counter trend. So now we have a distribution range that forms after an uptrend. And when we get the markdown started in this next bar, we're going to look for a short 10 cents below the low of that daily bar in the next day's trading. So this should all just make lots and lots of logical sense. They're very simple ideas. This is a trend move. We're trending lower. We get into a distribution range. And again, we break down. And so when this markdown happens, 10 cents below the low of that daily bar, it's the widest bar of the past 10 sessions. Big volume, opens high, closes low, 10 cents below that low. We are going to look for an entry on the short side of the market. And then here's the reversal again. Now we've got a trend to the downside, consolidates, a pop up and out of the range. Again, widest range the past 10 sessions, big volume, opens low, closes high. We're going to look to go long above the high of that bar in the next intraday trading session. So all this stuff can be, we set these up with conditional orders. You can set them up so that once you're confident in the trade that you have in front of you, you can go and you can pop this out there ahead of time. You have to make sure that you've gone through and vetted it. So you want to confirm that everything that you're looking at has a logical profit objective. Again, as I said, you have to go and identify where. This is why you can't really back test this stuff, because the machine's not going to go and find for you where the logical stop is. It's not going to find for you where the logical target is. You need to do a little bit of the work yourself. It'll find the patterns for you, but then you have to go and vet the pattern and say, there's 10 fastball setups today. Of the fastball setups, which ones make the most sense in terms of where I think they can go if things are going right, and where I would get out if things are going wrong. Once you do, you're just setting up conditional orders. If last price is, in the case of a long, greater than or equal to the high of the prior trading session, then buy stop limit, and your stop would be 10 cents above the high of that bar. Your limit is just however much you're willing to accept in terms of a slip. So the entry is real simple. And then the stop out will just be based on an intraday assessment of where support and resistance was. I'll show you that in a second. And your stop will just be a stop market. If position equals long, then begin, right? Then if last price is less than or equal to whatever your stop price is, get me out, and put a limit order at the exit order for a long side profit. So if it hits the limit, you've got a sell sitting there, and everything can be done very, very simply and put together the night before. The software that I use to trade with uses a lot of bracket orders, and those bracket orders are quick, and they're co-located at the exchange, and it's a very easy way to get the orders out there and not have to sit there and do them during the trading session. Because what you want to do is figure out, what's my allowable slippage going to be? Where do I have to set this order up for it to make sense? Within the allowable slippage, am I still going to have an acceptable reward to risk ratio? And if all of that stuff is going correctly, right, then the whole purpose of the conditional order is just to make sure the price is moving in the right direction when you get into the position. Okay, so it's a mouthful, right? But I'm going to show you some examples. I'm going to show you how I find these with Metastock, and then we'll go through and pick one apart. So if you're looking at a scan, and then the way that I set the scans up is, in this case, I've selected the New York Stock Exchange because this is definitely where the around the horn trading plan that I put together is all New York Stock Exchange listed securities. We also do NASDAQ stuff, but that's a different trading plan for us. That's more active. We have to be in front of the machine for the NASDAQ stuff. The NYSE stuff is pretty automated. In this case, you can see I just selected the fastball pattern and I scanned for it. You can also do an all pattern scan. If you look at the top of the Metastock scanner there's an all pattern scanner that had been run. And, it goes through and it picks for you all the different patterns that I have in around the horn and says, here's an infield fly for tomorrow. Here's a line drive for tomorrow. Here's the switch hitter setup for tomorrow. We'll find fib retracements. It finds all the stuff that we trade. But the results that you're looking at the bottom there, those are going to be the fastball trades. And you can see it gives us a list. And what I have to do then is go through each one of those and just say, is it set up exactly properly? Because sometimes the machine will find things that, close off. You can tell it. You can actually tweak it to have it do these things even more precisely. But I prefer to be able to just sort of see the bar chart and take a look at what's happening and make the decision for myself. It's just a matter of picking them apart. I only found one in this batch that was perfect. And you can see here, the stop came down. And as it came down, let me just see if I don't know if I can mark this up. Let me just see if I can mark this for you, right? As we're moving lower, got this trend, moving lower, and then we consolidate here. All right, so it's a very sloppy drawing. I'm sorry about that. But as we get the consolidation, we get, these are very tight range bars. It doesn't exactly look like, this looks like the ideal bar, but, this happens to be the bar that created the scan. So if the scan pops up and it says that is the acceptable parameter, then your job is to go through and start figuring out, okay, well, does that then give me a setup that's going to have a risk reward ratio that makes some kind of sense, right? But by looking at the daily chart, we can see where we think price is going to go. I'll draw that line in a second. But what we can't see is what an intraday chart is telling us about the same price action. So if I'm doing a stop for, in this case, Eversource, right? This is Eversource Energy. If I'm putting a stop in place, what I'm doing is I'm going through and I'm looking effectively at where the bodies are buried. So if I look at that line that I just have on the chart there, and I see that line represents where the support was in the closing range going into the end of the trading session. So everybody see that at the end of the day there is really telling us a lot about what's going on. So first off, you have the trending move higher. Whoops. You have the move higher going on. And then let me get the pen back here. Okay, so you have, this move up into the close. So we've got a very strong, persistent buying scenario here. The buyers have come back after a consolidation intraday, right? Very, very common. We've got that consolidation intraday, and now we've got a move up into the close that says the buyers are back. Once we're identifying this as an opportunity, what we see is that at this level right here, we've got a lot of support and resistance, and we really managed to stay above that going into the close. And the one time that we poked above there and broke back down through, we had this happen, and that moved back down again. That's something we don't want to participate in. So that's going to be the stop loss on this trade, because to me, if it goes and it hooks up above and it comes down below, the most likely thing that's going to happen is I'm going to track back into the range, and maybe, just maybe, the buyers that I'm looking for have finished what they're doing and they're gone. So that's going to be my stop. That's the logic behind how I set a stop. When I'm setting up the profit objective, I'm doing much the same thing. Now you're going to bump back out and you're on a daily chart. So on your daily chart, you're looking for where do I think price is likely going to go before it runs into some selling pressure? We're going to be long. Where do we think that price might reverse and go short? So if I'm looking at this chart here, what I see is if I get into this level right here, where we had some support, that support became a threshold level, became a resistance level. When price broke down through here from above, so when price hit this level before, boom, it came and sailed back down into here. And then the next time it came and it careened all the way down into here. So my best guess when I'm looking at this chart is that when price gets to this threshold right here, I'm very, very likely going to run into a reversal. And as an intraday trader, as somebody who's putting this plan together for tomorrow's trading day, what I want to make sure of is that at the first reversal of the order flow, we're order flow traders. At the first sign that order flow is reversing on us, we're going to be able to get back out again. So it's pretty easy to structure it all. So that when I put these trading plans together, I get very specific. So I'm putting together a plan that's got every contingency effectively worked out ahead of time so that I can set these up as bracket orders. You can see here, I've got the long is set at an entry $56.71. So 56.71 is 10 cents above the high of the expansion of range and volume bar that opened low and closed high and told us we were likely going to have a push back up into the trading range. 56.71 is going to get us long. The stop, that one was from the 5-minute chart. So on the 5-minute chart, we said if it gets down through that 56.22 threshold, there's a high likelihood that it's just going to bomb lower and it's going to keep moving in the opposite direction. It's going to move against us. So that's where we want to get out. And again, this is why for those of you who love to tinker with the back tests and all that, it's very, very difficult to back test because you have to find the stops and the targets. So if you're going to go and plug all that in, I'll show you in a second how we analyze things. We forward test, and I think you will make yourself crazy if you're trying to figure out a way to automate this completely. But you can automate the entries, you can automate the exits. So 56.22 is the exit for your stop out, and 57.45 is going to be our profit objective. That was on a daily chart that was overhead resistance. So that gives us then a ratio of 1.51 to 1. So that just means for every dollar we stand to lose, we stand to make $1.51. We know the pattern is reliable over time. It has a high rate of profitability. So really just anything down to about 1 to 1, I'll take and put on my trading plan. And then there's other things here, like the money management rules are $57.08 is 50% of the distance to the target. And what we do is program our software to say, if we get to 50% of the distance to the target, go ahead and move the stop to break even. And if it gets 10 cents to the target, it moves it to the 50% level. And then if it hits a target, it takes us out of the target. So that's either something that we load up ahead of time, or it's something that Julie does here in the office. A bunch of people, we just did a live event down in Orlando, Florida, and people said, you guys have been trading together for 27 years, I guess it's been. It's hard to believe too. And husband and wife trading team, how do you keep from killing each other? And it's because we set this stuff up ahead of time, and everything is pre-planned. So there's really no room here for a lot of discretionary decision making, and it sets up just this thing where you're looking at your data, you're looking at how things have played out in the past, and you have an expectancy for how they're going to play out in the future. You can go through and statistically analyze them. You can do an SPSS study, you can do studies in Excel and find out what the statistics are, what the metrics are. And when you look at that data, it all starts to make a whole lot of sense. And then you can just, believe what you're doing and have the courage of your convictions instead of going in and trying to find opportunities on the fly. Here you see it. This is our trade. This is what happened on the day that this thing went live. So if it's below our entry price, which it is down here, right, then buy stop limit at the entry price. So when it gets up to our entry threshold, which is this line, it's going to buy. And you can see there that by just narrowing down the slippage and saying, I don't want a big slip. I don't want to do a market order. I don't want to get filled up here somewhere. I want to get filled close to that line. Look at the bars. The bars don't, on the New York Stock Exchange stuff especially, they don't just blast through usually. They hover somewhere, they'll pop up above an entry point, they come back down again like they did here. And then look at our target. So if you go and evaluate the target, really what happened when we hit our threshold line? Almost exactly the same thing. I keep advancing these slides on you. Almost exactly the same thing as happened the first time when we were looking at, if it does that again, I'm going to get mad here. When we were looking at it on the intraday chart, it's got that same elasticity, the same price elasticity above there that it did the first time. Could you have captured every penny of the move? You could have tried. You probably would not have done it. So I just admonish people all the time and say, you want to be in the order flow. You want your target to be in the order flow so that as it trades through you, you get out at your price profit objective and you're not worried about trying to chase in order to avoid that run back down into the range. Because look what happened. When it came back down, it did exactly what we thought it was going to do. It started moving lower and eventually made its move, all the way back down into the range and back down to what was our entry price on the session. So if you pick these apart and you look at what's going on, this is the analytics that we do internally with all of our trading plans and all of the trades that are triggered. So this is strictly the around the horn plan. This is strictly the stuff that is non-discretionary. These are entry stop target. There's no maximum favorable excursion and no outsized positions and 1,000% returns and all that because we're just taking one option trade on or trading some illiquid currency pair or something. These are just all the trades that have set up on the New York Stock Exchange listed stocks. I have MetaStock look for things that are trading above $35 a share, 30 to 35 bucks usually. I try to limit it to stocks that have a minimum of 350,000, 400,000 shares a day in order flow. And, sometimes we'll widen it, sometimes we'll narrow it, but they're very liquid stocks to trade on the big board, right? And if you look at it here, if you look at, fastball in 2023 so far, we had 161 times that it presented and it triggered 109 times. What that tells me is, so the reason that I analyze the data that way is I want to know what the pattern distribution is that was actually found when I scanned the market for these patterns. And then I want to know of the patterns that were located when I scanned the market and then I selected the ones I was going to put on my plan, how many of those actually triggered the next day. That tells me whether I'm introducing selection bias. Do I just like the fastball setup? So, I'm overrepresenting it and then it never triggers. So I just want to see those pies, those first two things make sense together, line up together. I want to make sure that my long and short setups sort of are represented in the long to short profitability. It doesn't have to be an exact match, but I just want to make sure that I'm not all short and the only profits that I made was on the two longs that I took during a year. This is just a way of keeping yourself in check and making sure that your psychology stays in place and stays working for you. And then you can see there's win, lose, scratch. The scratch would be that money management rule, 50% to target, it gets you out at break even. Those are the little green section of that overall profitability pie. And then look at pattern profitability. Fastball is that blue bar down at the bottom. 2023 has been just volatile, and out of the profitability of the trading plans overall, you've got $22.58 per share traded that is represented by just that fastball setup. So if you have a $100,000 account and you're leveraged 4-to-1, that's what this asset allocation stuff is on the left side. Just lets us know if we're having allocation issues. I tend to trade fixed lots, so we don't do asset allocate. Asset allocation would be if you have 4 stocks on a trading plan today, you put 25% of your trading capital into each one, and that's how you're going to run the day. The 30, 36, 31 is if you're trading 1,000 shares, 2,000 shares, 500 shares, you multiply it by the 36, 31. That's what that particular plan did for the year. But look at these going out year over year. So this is 2022. 2022 again, fastball represents the lion's share of pattern profitability. It's just been a really, really solid pattern. There's been a lot of volatility in the markets. Here's 2021, 2020. You can just see how it started shifting away from being a normal distribution to a very heavily skewed distribution as time went on. So going back to 2019, right, as the further back you go, the more these things are going to present sort of equally as you're doing your scans for them. But you can see here that almost always fastball's a standout. It is the cornerstone, as I said, of the trading. It starts all these around the horn cycle trades. It gets you in front of all these opportunities. But that expansion of range and volume as volatility has been increasing. It was high in 2016 as well. As volatility goes up, the pattern really becomes the standout. And if you can just wrap your head around this one and scan for it and look for these opportunities, I think you could be pretty happy with what you can do if you're trading these guys live. Okay, so that is pretty much how the pattern played out over the years. I think that looking at it this way is helpful. And sometimes when I look at it this way, the response that I get is, well, maybe I should only trade fastball. And then I say, well, then you're skewing your distribution again artificially yourself. So you want to make sure that you're not introducing selection bias, that you're looking for everything, and that when you do look for everything, you're setting them all up every day. And again, you want to keep an eye on which ones are the standouts, because I know, for example, that if fastball is presenting a lot, then the next thing that I'm going to see likely is a lot of infield fly setups, because those are extension reversals, and fastball is an extension move. And infield fly is what happens when markets get tired. And switch hitter is what happens when markets get tired. And backdoor slider is a consolidation that happens after a fastball setup. So these things start making sense in context. They start making sense in terms of why you think something is going to happen next and why you think something just happened. And then you can put the profitability portion of the picture together as well and not put yourself in a position of making decisions based on how much money you'd like to make or how much money you're willing to lose, because the market doesn't care about either one of those two things. Market cares about order flow, and the market is going to reward you for identifying support and resistance targets. It's going to reward you for using support and resistance stops. And as long as you keep your head on straight about all that stuff, you're going to feel like you're in front of opportunity every day instead of, possibly being in front of a locomotive. So when I do the intraday scan, so this is something that I showed the guys at the last boot camp, and we drilled this, and this is it's a fun drill to do because Metastock has a good way of sorting out things as they're happening on the fly. And when I run the scan intraday, I'm looking for the same thing. So if I run that fastball scan, so now Julie ran this for me yesterday. So what we know from yesterday's scan was that we had an opportunity for possibly a bunch of different entries on these fastball setups. And what we're trying to figure out is which ones are setting up intraday in a way that we can go and manage them as live trades. So now we're going to add discretion to what we're doing. And in this case, you're flipping through, you're going to flip through all those charts. You just pop up a chart for each one and seeing, do they really meet the spirit of the pattern? So now you got to do a little bit of picking apart of what's in front of you. So this pattern, set up when we had a move up from the bottom of that red line to the top of the red line. Again, I don't have my usual pointer, so I'm sorry about that. But you go and you get that bump up into a new high, and that's above the central pivot and above first resistance. That's what those two lines on the chart are. So central pivot is the lower line, first resistance is the upper line. And when you get up in there, then you have got the opportunity. I'm sorry, I don't know why this keeps advancing on me. Then you have the opportunity to figure out, is there a good place to enter a trade for a long move based on the expansion of range and volume that already happened. So when the scan happens, it says to us, in those first 7 bars of trading, we've already made a fastball expansion. If this was a daily chart, if we were evaluating it on a daily chart, that first move alone would qualify it as a fastball setup. And then that pullback to that second resistance line, that's a real logical place to take a trade. And it becomes an even more logical long when we see this. So that move higher gives us a bunch of information. So I don't have the fib for the initial swing, but the initial swing, the fib study overlaps with R2, tells us the entry is really good. And then when we do a swing analysis on that move from R2 up to the high, then what we see is there's an expansion of 50% expansion at $17.83. So $17.14 up to $17.83. That tells us we've got a very likely inflection there and a bunch of reversals that are likely to happen inside. And you can do whatever you want to do with those. If you're a fib guy, or if you're a fib gal, or you just have some metric that you like to throw on the charts in terms of, are things trading geometrically, then what you can do with this stuff intraday is pretty cool. So it gives you the opportunity to go and capitalize on a setup as the order flow is hitting the tape, as the institutions are doing their buying and selling. You can get in front of the opportunity, and you don't have to wait for the next trading day. You've got this discretionary stuff. The important thing is you have to be able to go through and set that trade up completely, just the same as you would on the daily time frame. So if you're good thinking on your feet, if putting these things together during the day still allows you the courage of your convictions, then it's a great thing to do. If this gives you palpitations just looking at it, trying to figure out intraday what's going on, then it's probably better to pass on taking the trades, just work on analyzing them. And once you get very comfortable analyzing them, you can go through and really start picking some things apart and having some fun with them. And the other thing I'd say is you don't have to have real-time data to do this. You can use the delayed data. As a matter of fact, I think for the fastball setup, it's actually better to have the delayed data, because what's going to happen is if you're on real-time data and it's giving you a scan and you're trough to peak and you see, holy cow, this thing's expanding, the temptation is always going to be to jump on the momentum. And really the nice thing about doing this from delayed data is you have to wait for the pattern to be in place. And then usually what you catch is a setup that's already involved in a pullback. So this is all good stuff. I mean, it's just really, I thought today, focusing on the tool was sort of a fun thing to do, as opposed to going through and doing all the theory. But this is how I use the tool. This is how, if you guys are using the scanners and you're using Metastock to evaluate what's happening in the markets, this is a way that you can put yourself in front of opportunity instead of having to go and scour the markets and hot lists and all that kind of stuff to go and pick apart, is something actually happening? Here you go. You've got confirmation something's happening. Now all you have to do is set it up in accordance with your rules, your risk tolerance, your ability to go and pre-program trades. All that stuff fits very nicely when you're doing this kind of analysis. So I don't really have an offer or anything for you guys outside of, if you want to see what we're doing, just text Julie. That's her cell. So, text it during the day, not the middle of the night, so we're not waking up all night. And if you just send your name and email to her cell phone number, they're 310-383-8138. If you send her a text message, then we'll give you, a 2-week open house to everything that we do. You can have more if you need it. If you need more than 2 weeks, you just let us know. And that gives you then access to everything that we plan, which is there's 5 different trading plans that we're working from. We do a lot of futures trading. We do a lot of stuff that's based on intermarket analysis. So we're doing an intermarket analysis of ETFs, of stocks, of, super cap technology stocks, and then going through and trading the NQ. If you're interested in the NQ, if you're interested in trading the triple Q with options, and all that stuff is part of what we do. And you can look over our shoulder for the next couple of weeks and see if it's something that you're interested in. We get a lot of people apply for that boot camp every year. There's about 600 people apply, and we try to talk to everybody and just see if it's really something that fits them. And we whittle it down to about 40 people a year who we work with. So we're a small shop. We're not a big education company, but the people we do work with, we work with one-on-one, and that's, as I said, the luxury that the trading business really gives us, is we can do all these things that we love, and I think we can do them right. I think we provide some of the best trader education you're going to find anywhere. All right. That's it. That's my 2 cents. I'm sorry that I wasn't here yesterday.
We're glad you made it. We're glad you made it today, Adrian. It's good to have you. We do have a question from Alan in the chat. He wants to know when you use a curveball. When do you use the curveball?
Oh, the fastball. This setup, you mean the fastball setup?
Well, yeah, I think that's probably what I meant.
So it's a market cycle pattern. So if you follow around the horn is really about following the market around the horn, about following the cycles that the market goes through. If you were trading a straight up index, if you were just going to trade, say, spiders, diamonds, Qs, then you would definitely be looking for the start of a markup or the start of a markdown, right? That's where you're going to spot those very easily on the chart as the market goes through its natural cycles. Fastball is going to be the cornerstone that starts the cycle. So usually what happens is it'll go fastball, then you'll see it'll fly, then you'll see probably a switch or pullback. So there's a Fibonacci retracement ratio. Then a lot of times you'll see a line drive or another fastball. So it's all about the cyclicality of the markets. If you're not trading just the index, then what'll happen is you'll see it more frequently. You'll see it pop up almost every day. It's just it pops up sector by sector. So as we rotate through different sector groups, say the consumer discretionary, consumer durable, you get banking, oils. I don't really like to trade oils, but oils will pop up frequently. You'll just see that gradually it'll work its way around all the sectors that you're used to watching. It's a good idea to have your indices ready. If you don't subscribe to S&P indices, you can use the ETFs to monitor what's going on. And a helpful thing to do is, let's say you get a Harley Davidson and Polaris pop up on the same day. Then those are consumer discretionary. Those are motor vehicles. It's more consumer discretionary. Then you want to pop over real quick and just take a look at the consumer discretionary sector. Is it doing the same thing? Is this a move that's just in sympathy with what the sector's doing, or is, say, Harley or Michael Kors or some one company a standout in the sector? In that case, to drill down and see, was there news on it? Was there some kind of earnings news? Did something cause that expansion to happen?
All right, and then real quickly, Arco wants to know if you have suggestions for stop losses.
Stop loss. I would just say always use
one.
The metric that I showed you here of using natural support and resistance is the best way to set stops. If you want to limit your losses, do not do it by adjusting stops. Do it by adjusting share size. So if you're hell-bent to take a trade, if you see a setup, something that you think is just too good to pass up, and then you look at it and you say, but the natural stop is $1.20, and I don't want to lose $1,200, Well, if the natural stop is $1.20, you're going to need to set that stop at $1.20. You're going to need to set it at support. Or you have to set it at resistance, right? Whatever your drop dead spot is there, you have to set it, and then just say, well, I'm going to lower my share size. I'm going to drop down to 100 shares. I'm going to drop down to 50 shares. Whatever it is, make it so that you can trade your discipline without letting fear of getting stopped out mess up the trade.
Perfect. All right. Thank you so much, Adrian, for joining us. I appreciate it.
Thanks for having me. And again, sorry about yesterday.
Hey, it happens. I'm glad we got you. I'm glad we were able to get you in today.
All right.
I hope everything goes well.
Okay, thank you. Thanks, guys. Thanks for being here today.
Cool. Let me go ahead and do this. I do want to show you how easy it is to run these explorations and kind of get that. So let me go ahead and make myself the presenter again. We'll go ahead and show the screen. And I've already got it run, just so we can kind of keep everything going well. Kelly and I both talked about our favorite tool in Metastock is the ability to scan. I just want to show you real quick how it works with around the horn. And so I've done the search right here. I've got all the around the horn patterns. Right here is the all pattern scan. And if I just run that, which I've already done, it's going to give me a list of all the stocks that have any type of a pattern. So let me show you the report that came up when I kind of ran that. Here you've got like a 3-2 buy, a 3-2 sell, 3DS buy, any of those particular patterns. I know he didn't talk about all of them today, but they are all covered in the manual, and they are all covered in the book that he did as part of it as well. But he ran a scan. One of the patterns that I kind of liked and I wanted to show you is the infield fly right here. Let's see, and there was a couple. And I just opened up the chart. It kind of displays it there for you. There you go. There's your infield fly. So very, very easy to do, not hard at all. I love kind of the way that it's integrated into Metastock and the way that it works. And Adrian's been doing this for a number of years, and the patterns have stood the test of time. In total, you've got about 11 patterns. You've got fastball, line drive, the backdoor slider, the double hitter, the infield fly, 3-2 pitch, and the switch hitter. And it's only $300. So here at the conference, we're going to actually do a little bit better than that, even though it's already really, really cheap. It's $249. We will back that with our normal money back guarantee, 30 days to evaluate it, see how well it works for you. If you like it, keep it. If you have Metastock and you haven't got this yet, you should pick it up. It's some classic patterns that Adrian's been talking about for a number of years. So you can give us a call, 800-882-3040. You can visit us online at metastock.com/saleschat or metastock.com/conf promo. Those will all get that for you. And give it a go. Again, there's not a lot of times like you'll buy software and you don't get like any money back guarantee or anything like that. We want it to work well for you. We want it to be something that helps. Most of our customers, we're in it for the long term. Most of our customers, as I've said multiple times, have been with us for decades because the tool helps them make money, helps them with their trades. And that's why we can kind of offer this to you, let you try it, see if you like it. Is it going to fit for your style of trading? Because we number between 1 and 10,000, number between 1 and 10,855. If you're watching this in YouTube, give me a number between 1 and 10,855. Go. And let me go ahead and figure out what that price is going to be. Let's go, guys. I'm waiting for you to give me a number. All right. And while I'm waiting for that, because I know there's a little bit of a delay, I'm going to come in here and go to my prize list, and we'll kind of figure out what the price we're going to give away right now is. So all right, I'm going to give you a course. All right, I see the numbers coming in. Thanks, Chuck, Reg, Neil, Jackie. Very much appreciated. We're going to give away a course from tradingwins.com. If you remember, Vince Vora came in a little bit earlier this week, and he talked about his victory method for Metastock, one of our most popular add-ons. And we're going to give away a course that he did that's called Chart Patterns That Work in Any Market. So I'm going to give away 2 of those. I'm going to give away one in one to number 12456, 12456 from Chuck in YouTube. So 1, 2, 4, 5, 6. Oh, Chuck, you threw me a curveball right there. That's going to be Mange S with a, looks like it's from German, like a German email address based on kind of the thing. So if your name's Mange S, you might have just won. Let me go ahead and kind of make a list of that. And then the second winner that we'll go with is going to be from GoToWebinar 7659. So let me pull that up real quick. 7659. Okay. Jack S. Okay, Jack, you're also the second winner there. Thank you for that. If you remember, quite a few times yesterday, I did prizes just on audience participation. And I'm going to remind you of that because if you have questions, if you give us numbers, if you do stuff like that, I'm probably going to do a couple of those today too. So I'm just saying. We're, of course, Metastock. Metastock's been rated the #1 software in its price category for 30 years in a row. And just making a note of this so I don't lose it later. Okay. Help you scan the markets, test trading ideas, forecast probable trade movements. It's an awesome software. It's been rated so highly for so many years. We're doing a trial today. We're doing an extended trial. Thanks, John. If you buy a month, we'll give you the second and third month for free. We've been talking about it all week. Metastock.com/conf promo, metastock.com/salespchat, 800-882-3040. Let's move on. We don't want to get too much behind today. Our next speaker is a person with a great name, Jeff Tompkins. Jeff is awesome. US Reg Stokes is coming in on Saturday to present. Yeah, she had an internet issue yesterday. A lot of schedule changes today. So our next presenter is Jeff Tompkins. Jeff got his start teaching people how to trade on udemy.com, which I think is awesome. He's going to talk a lot about his trade trend method for trading. And in the time that I've known Jeff, he's really exploded. He went from being a very well-known teacher to like a hedge fund manager. Jeff, we love having you. Let's go ahead and get you talking. How are you doing today?
Good morning. I'm well. How are you, Jeff?
Good. Let me go ahead and make you the presenter. I can hear you. You should be able to see everybody, the questions, all that kind of stuff. Yeah, I will make sure I can see your screen before I let you go.
It's always a good idea.
Yep. Cool.
Got it? All right. Off to a good start.
Okay, I'm out of the way. Your turn.
All right. Sounds good. Well, yeah, thanks, Jeff. It's always a pleasure to be here. I love these Metastock events, and welcome to all of you for being here. Thanks for taking time out of your day. I promise to make it worth your while. So we're going to talk about my Slingshot setup. This helps us determine when to buy and when to sell. It's a unique setup that I devised a number of years ago and use really religiously in my trading. And I'm going to share it with you guys today and how it works and what it can do for us. So before I do that, I'll read a quick disclaimer. We, of course, know that trading securities and options involves risk. Prior to buying or selling an option, an investor must receive a copy of characteristics and risks of standardized options. Investors need a broker to trade securities. It must meet suitability requirements. We will be looking at some past results together today. And of course, know that anything I share as it relates to past results is not indicative of future performance. Some of the things I share may be based on actual trades, real money trades. And again, just know that due to the time-critical nature of trading, brokerage fees, activity of other subscribers, we don't guarantee that anyone will mirror the performance that I share. All right. So let's start out by looking at some of the problems that we encounter with trading. Then we're going to look at the solutions. So when we talk about why the market is so difficult to trade, and let's just be honest, it's not easy. And I think that if anyone tells you it is easy, then you should be skeptical. There are a host of difficulties we can encounter in trading and investing. And I think most of that can be boiled down into psychology. And I say that because even if you have a really good system or a really good indicator that has proven itself, you still are you're the trader, you're the investor, and ultimately have the final say. And you're the decision maker. So there's always that vulnerability of not adhering to your indicator or your system. So I think that's an important thing to realize and to recognize and accept. And maybe you've seen a similar psychology curve to this in the past, but I think it does a great job of explaining whether we're, an active day trader or a long-term investor, that roller coaster of emotions that we all face as humans as we, interact with the markets and place trades and make investments. And that is that anytime we place a trade or an investment, we start out with some degree of optimism. We're enthusiastic. We likely not going to get into a trade with negativity. We are putting this trade on for the purpose of it working out well and making money. But we, of course, know that doesn't work out perfectly in all situations. Sometimes it does, sometimes it doesn't. So really what we want to address is what happens when it doesn't. Well, what typically happens for most people is that exuberance and the euphoria quickly can turn to anxiety, denial, fear. And this is, if you look at this curve kind of in the context of how markets work, how they move, we often see this play out in the markets. So think of like a bear market or a market crash. A market crash is a good example. When markets crash, they crash very rapidly and very, extremely. So we often see markets go down a lot more rapidly than we see them rise. And that's a psychological response, right? And that's where the anxiety, denial, fear come in. People panic sell. They're afraid of losing money. And then that can go back up the other way. After we get out of that situation, there can be some degree of relief. The bad stuff's over. We're now hopeful again. And we end up repeating this cycle over and over again. So it's very interesting. And I devised the Slingshot setup to help us address that and overcome it. So that's where the Slingshot comes in. So when we look at the psychology of failure, anytime we enter a directional trade, of course, our goal is to buy low and sell high. But as we looked at on the psychology curve, that actually goes against our human instinct. Instead, when a security goes down, we panic and we sell it. And when it's already gone up, we buy it. It's the fear of missing out. So we're either afraid of losing money or we're afraid of missing out, making money. Those are really kind of the two baskets. And then to compound the problem, as I mentioned, we're wired to repeatedly make that same mistake over and over again. So we often will buy high and sell low because that's what our emotions tell us to do. All right. And without a solid trading plan, we're vulnerable to our emotions. But even if we have a solid trading plan, there's that added component of having to adhere to it. All right. So if we're lacking a strategy that can identify momentum shifts, meaning we don't know when to get in, and ideally that's on a directional trade buying low or get out and selling high, this can pose a major problem for inexperienced traders and investors. And to add to that, it can pose a major problem for experienced traders and investors. Again, we all have that vulnerability. So what we want to do today is turn the tables. And instead of being greedy when there's a high level of financial risk and fearful when it's actually probably the most appropriate time to invest, we're gonna flip this on its head. So we want to be fearful and actually sell when there's a high level of financial risk. And although I hesitate to use the word greedy, we want to buy when it's really the best time. And Warren Buffett put it perfectly: be fearful when others are greedy. Right? So this is what's often termed a contrarian approach. And it's the contrarian approach that I built the Slingshot setup around and built my indicators around. So what I'm going to give you guys today to make this easier, number one, we're going to discover the Slingshot setup that's forecasted 100% of market rebounds, which sounds incredible. When we apply this to the major indices like the S&P, the Dow, the NASDAQ, the Russell, going back to the dawn of the market, this setup works out. And you'll understand why that is. There aren't many things in trading and investing that have that kind of success rate. But I'm going to uncover that for you, and you're going to see how and why that is. So first I'm going to show you how to identify the setup. I'll show you how to trade the setup, how to profit from the setup, how to get near the bottom and out near the top, how to apply the setup to any market, any time frame, how to eliminate the majority of your losing trades. So we think like when we talk about losing trades, that's kind of with the hindsight assumption that you actually placed a trade and it lost money, it didn't work out. But I like to look at it as if you don't get into the trade in the first place, you can't lose. You can't make money, but you can't lose money either. Okay, so when I say that, I'm talking about how do we know when to just not be in the market and not have the potential to lose. Okay, and I'm going to show you a little trick for that. We'll go over some trade examples, look at some charts on meta stock, and then stick with me to the end. I'll show you guys how you can copy my success, get my trade signals, my indicators that I use to make a living in the markets. I do trade for a living. I'll give you a little bit of background on myself here in just a minute. But these are all things that I use to actually make a living in the trading world. So let's start out imagining if we could buy low, sell high without guesswork. Because all too often we incorporate some degree of intuition or guesswork or whatever you want to call it based on probably a hindsight bias. Okay, so it's very difficult not to use hindsight bias in trading, but we probably all do it to a degree. But we want to eliminate that as much as possible. And there are ways to do that. And there's a volatility study. This is one of the indicators we're going to look at today that's made it possible to buy low and sell high since the very dawn of the markets with an incredible degree of accuracy. And it's the setup that I've coined the Slingshot. And again, when we apply it to the major indices, this plays out over and over again. And the reason for that is markets have a long-term upward trending bias. All right. So up until, it'll happen again, I'm sure. We've posted an all-time high on the S&P, right, back in, was it late 2021, early 2022, before the bear market. So we haven't come back up there yet. But I'm confident to say we will, because prior to that, every previous all-time high we've ever posted in the major indices since the very beginning of the markets has been exceeded. Okay, so this happens. It's just the nature of the market. They go up over time, but of course they go down too. And the Slingshot's going to help us with that because it also warns us of potential market sell-offs. And we're going to look at volatility bands to do this. So when we talk about volatility bands, and I'm going to reveal this on a chart so you can visualize it. They can only stretch so far, so they have to bounce back. That's just the way that markets work. I call it a rubber band effect. And it actually makes it possible to identify tops and bottoms. It makes it possible to identify vulnerabilities of market sell-offs and opportunities of rebounds and those types of things. So this is what it looks like. And this is one of the more severe crashes we've experienced recently back in early 2020, the Corona crash. So I like to use this as an example. But notice that, and if you were following the markets or trading back then, you'll remember that S&Ps hit a new all-time high right before this crash. Okay, so in February. Now, when you've got a decade-long secular bull market, there's always this temptation. I mean, we don't know for certain when it's going to end, and there's always a temptation of or fear of missing out and temptation to jump on the bandwagon. Okay. Generally, it's not a good idea to do that near all-time highs. That's when the market's vulnerable. Okay. So this is where a lot of, and this is totally verifiable by looking at order flows and buy and sell side activity. There's a huge amount of buying at market tops. Okay. And there's very little selling until something like the Corona crash happens and people get trapped. They get trapped on the long side, and this is where that psychology curve comes into play. Then they get, go from, optimism and euphoria to fear and despair and taking losses, right? So if we look at this from a contrarian perspective, this is when we actually would want to sell, all right? And what happened? I mean, and this happens over and over again with market crashes, black swan events, bear markets. Even after an extreme sell-off like this one, I think the S&Ps were down like 35% in just a matter of 3 or 4 weeks. But notice that eventually, and this is just basic supply and demand, right? Enough demand presented itself to entice buyers to come in and drive price back all the way back up to where the I call this a volatility expansion, where that's the kind of the initial part of that sell-off back in February, where that started. Okay, so when you think about this from a perspective outside of the market, so we knew much less about COVID back at this time. We didn't know, it was still in its infancy. We didn't know, the global impact and all of the things that were to come. So it by no means had resolved itself. So people panicked, markets crashed, and before anything really even improved as it relates to the catalyst of this crash, the markets were back up where they started. Okay, this is psychology of trading. Okay, this has nothing to do with what caused the catalyst that caused it and a resolution to it. Okay, so markets are not necessarily logical. They're driven by fear and greed, and they're driven by supply and demand. Okay, so we're going to come back to this chart, and we're going to apply the slingshot to this. I'm going to show you how you could actually navigate this type of situation. Quick background on myself. Again, I'm Jeff Tompkins. Pleasure to have you guys all here today. I appreciate you joining. I have over a couple decades of experience trading the stock, options, and futures markets. I received my professional training back in the early 2000s as an intern at the trade desk at Morgan Stanley. About 8 years ago, founded Altos Trading, where I'm the chief investment strategist. We currently have over 50,000 members in over 100 countries across the globe. As Jeff mentioned, I'm also a hedge fund manager. I launched my hedge fund back at the beginning of 2020. So we're coming up on our 4th year. Haven't ever had a negative year in the fund. And a lot of what I teach here are methodologies and indicators and systems that I utilize in my hedge fund to accomplish the results that we have. And I'm also the founder and creator of the Trade Trend Signal software, which is an indicator I'm going to also be talking to you guys about today. So by the end of our session, you'll discover one trade setup that's produced massive returns. If you look at the percentage gains applying this setup to going back to the very beginning of the stock market. In fact, it's so reliable, it's worked 100% of the time. I haven't been able to find a single failure when it's applied to the major indices like the S&P, the NASDAQ. And it happens over and over again. Again, we'll look at it on the chart. But whether you're just starting out or you're a seasoned veteran, you've been trading for a long time, I think this is really crucial information for today's markets because it is centered around volatility. It's centered around contrarian psychology. And it's those two things, I think, when used correctly, are the key to overcoming a lot of the drawbacks and failures we face as traders and investors. So you're going to discover why volatility is one of the only leading indicators of market direction. As most of us have probably heard, most indicators are lagging to one degree or another. Most of them lag very extremely to the point that when I say extremely, I don't mean lag like on a time horizon. I mean, they lag that if you use the information that it's presenting to you, the historical information it's presenting to you in a live market, it likely doesn't have any real value. So it's easy to get fooled by these lagging indicators. They look great in hindsight, but don't necessarily work well in foresight. So volatility is a bit different there. If you've heard of implied volatility, that's exactly what it does. It actually, and it's incredible how accurate it is. If you look at implied moves, for instance, that can be extracted from implied volatility from the aggregate pricing of S&P options over 30 days. And if you look at what option pricing models, forecast for implied moves, like on the S&P, they're incredibly accurate. Okay, we go outside of them every so often, but They're remarkably accurate, and they're in no way they have no lagging component. They don't use historical data whatsoever. So that's pretty cool. So volatility is important, and not only can it help us identify buying opportunities, it can also tell us when markets are vulnerable to a sell-off, and that alone I think is critical. It can tell us how to identify when the market's likely to go up, how far the market is likely to go up. This is a big one too, because it involves what I call the trader's dilemma. So if you do get into a successful, directional trade, how do you know when to get out of it? That's a tough thing, and often we face that's a psychological component as well. We face that dilemma, and the emotions start coming in. Like, I don't want to dump this successful trade and miss out on it becoming an even better one. I also am fearful that this successful trade could reverse on me and evaporate all of my, my profits that I've achieved so far, or even turn to a loss. So we all face that as well. And then I'm going to show you guys how you can get your hands on a really incredible tool. Again, one that I use to make a living in the markets, one that I use in my hedge fund, and one that eliminates a lot of these problems I'm talking about. So let's talk about a slingshot. Okay, why do I call this the slingshot? Well, if you imagine a slingshot and you're pulling it back, right? The muscle energy from pulling the elastic bands back is transferred to elastic energy in the bands. So then, of course, we can only stretch that back so far. And once you release it, the elastic energy is transferred to the stone as energy of motion. This is what in physics is called kinetic energy. Okay, we're not going to get into a physics lesson, but kinetic energy actually, in its principle form, happens in markets as well. Okay, in the form of supply and demand. All right, so we get buying pressure in periods of demand, and we get selling pressure in periods of excess supply. And so when we stretch the bands back, and again, they can only go so far, they're overstretched, that's where we get a buy signal. Okay. And we can enter the market with a higher level of confidence that prices are going to go back up to the initial resting point of the band. And I'm going to apply this all to the chart. I just want to give you, make sure you have an understanding of it. So how do we do this? What tools are we going to use? What indicator? Well, again, we're going to use volatility. And so there's a number of volatility indicators out there. And these volatility bands are going to tell us when prices move too far from the mean or the average and is likely to reverse direction. Okay. And the tool that I use are the Bollinger Bands for this. Bollinger Bands are a great indicator that can help us pinpoint turning points in a security when used correctly. So like every other indicator out there, you give that exact indicator to 10 different traders and you're going to get 10 different approaches to using it, right? So there are a lot of ways to use the Bollinger Band. I'm going to show you a unique way, and this is where the slingshot comes in. This is what it looks like, okay? So prices, and I'm going to explain the bands here momentarily, but prices at the lower band, I just want you to notice that, okay? And there's some other nuances I'm going to point out, but prices at the lower band, well, obviously there's a sell-off in this chart, right? You see price, rotating lower, trailing the lower band. Eventually, there's enough demand, buyers come in and drive price right back up to the initial volatility breakup. Okay, so this is the slingshot. Okay, quick just background of Bollinger Bands. Just probably a lot of you are familiar with them, may have even used them, but some of you may not. So I just want to give you a quick overview of them. They're basically three bands. We take a simple moving average of the securities price. That's the center band. And then the outer bands are standard deviation bands. And that's basically a mathematical measurement of average variance. Okay, so that's what we're going to use for the volatility component. All right, we're not going to go into all the calculations of standard deviation. Like most indicators, you can customize the settings. So generally with the Bollinger Bands, you can customize the center band, the mean, and the number of standard deviations for the two outer bands. Most platforms, and I believe is the case with Metastock, default to a 20-period simple moving average and a 2 standard deviation band. And that's the settings those are the settings that I use. So likely that's what in your platform is what's going to default to. But those are the settings that I use. Now, how can we use the bands? Well, as I mentioned, like other indicators, there are probably countless ways you could use the indicator. So there's a lot of subjectivity to it. Here are some of the more common ways for Bollinger Band traders. One is to buy at the bottom band, sell at the top band. And that can work in very specific market conditions. The problem is, as we're going to look at with the Slingshot, price can hug the upper or lower band for extended periods of time. All right, so it can work in very specific situations and then fail miserably. So this is kind of analogous to having a strategy where you have a bunch of small wins and then you have a really big loss. Okay, so for that reason, I don't like to use that approach. Another is band contraction and expansion. This is actually good, and it is a component of the Slingshot, and it can be a good indicator of an impending big move in a security. But it's kind of limited there. It doesn't actually tell us necessarily which direction the move's going to occur. So I don't use that as a standalone approach to the Bollinger Bands. The other is buy or sell at the middle band. Okay, so this is kind of like a moving average type of strategy. And that can work in certain circumstances as well when the markets are in a strong trend. But of course, markets are not always in a strong trend. So this approach fails very frequently in sideways ranging markets or non-directional markets. So for that reason, I don't use that approach. Now, the Slingshot is a unique way to approach the markets with the Bollinger Bands. And what we do is we wait for the lower band to break. And by the way, this can be applied in the other direction. Okay, but we're going to focus on using it to identify sell-offs and buying opportunities after a sell-off. But we wait for the lower band to break, and I'll explain what that means on a chart. Price will hug the lower band, ultimately rebound to where the breach initially occurred. Okay, this is the Slingshot. All right, so in the interest of time, I'm not going to go over the history of the Bollinger Bands and whatnot, but the key thing to understand here is that price can exceed or hug a band envelope for prolonged periods during strong trends. And if we wait for that lower band to break and then wait for a buy signal, we exit when price returns to the breaking point. Okay, this is the Slingshot. And it occurs with astounding accuracy, as I mentioned. I mean, the major market indices always return to the initial volatility breakout. Do you look at examples like the 4 big corrections we had back in 2018, the flash crash of 2015, the flash crash of 2010? These are all black swan events. The 2008 mortgage crisis, the markets lost more than half of their value that year, rebounded, obviously. 2000.com bubble, terrible crash, rebounded. The Corona crash, as we just looked at, every black swan event, market correction, major crash, bear market. This occurs over and over. So let's go back to the Corona crash chart. So daily chart of the S&P, all right. Notice what's happening back in January and February on the very left side of the chart. We've applied the Bollinger Bands here. So markets are hitting new all-time highs. Volatility is actually very low, and we know that because the standard deviation bands are horizontal and close together, the 2 outer bands, okay? Now, something obviously major changed here towards the end of February, okay? So number one, price is coming down into the lower 2 standard deviation band. So we're at a 2 standard deviation move from a 20-day mean. Something else critical is happening here. We're getting what's called volatility expansion. So notice how the outer bands are diverging. They went from being relatively narrow and horizontal to diverging. So this is what we look for at the start. And this is how I identify pending or looming potential market sell-offs. Okay, this is a big clue when we get diverging outer bands and price starting to trail the lower band. Okay, that's the start of it. Again, this is where a lot of longs get trapped, and going back to that psychology curve, panic ensues. Panic selling, loss taking. So that can, of course, only go on for so long. Price will only trail a 2 standard deviation band for so long before it reverses. Okay. And we're going to talk about the buy signal, but I want you to visualize this now as the slingshot. Okay, then what happens? Well, price comes back up to the initial volatility breakout. Okay. So it's like an upside down triangle. This is a slingshot. All right. Does it work on individual stocks? Yes, it does. Okay, this happens on equities as well. This is Apple, the daily chart of Apple. Obviously, the stock was in a very strong uptrend. Okay, this is, again, when you look at kind of the mid chart there, where there's a vulnerability of getting trapped because there's too much supply, and eventually excess supply will cause panic selling. And until there's enough demand coming back into the market, prices isn't going to go back up. Okay? But notice how Apple trails the lower band. What also happened, and this could have tricked you if you were using the approach of buying at the lower band. We get these two, if you're a candlestick guy, you get these two bullish candlesticks, reversal candlesticks, and you think, oh, well, these candlestick patterns happen right at a lower 2 standard deviation move. It's probably just a retracement in the context of the uptrend, and Apple's going to go back up. Well, there was a clue that that's not likely what's going to happen, because when price came down to the lower band, there was a volatility expansion. So notice that the outer bands diverged simultaneously. The sell-off ensues. It creates a buying opportunity, okay? And if you look kind of right around that 168 level, that one horizontal 168 price level, buyers came in, okay? Going back to the very left end of the chart, there was obviously a demand point there and a level of support. Well, it drove price back up to the initial breakout, volatility breakout. Price obviously continued on to move higher, okay? But that's what it looks like. This is another example on the QQQs, okay? Notice on the left side of the chart, we have relatively narrow, close together, horizontal volatility bands. As price comes down to the lower band, simultaneously the outer bands diverge. A sell-off ensues. Creates an incredible buying opportunity, though. And price slingshots right back up to that initial volatility breakout. There are also mini slingshots in here. As you get more familiar with the strategy, you could see on that sell-off, there was a number of mini slingshots. Does it work on intraday timeframes? Absolutely. This is all based on psychological, fear and greed, supply and demand. So you're going to see this regardless of time frame, regardless of asset. Now, on this chart of advanced micro devices, a 5-minute chart, we're in relatively low volatility. Earlier on in the trading day, you see that price is actually rotating between the 2 standard deviation bands, so upper and lower bands, and it's sideways. It's in a range, right? This is what we call a trading range. But when it came back down to the lower band, you could easily get tricked if you're using the approach of buying at the lower, selling at the higher band. But what happens here is that we get a volatility expansion. Okay, so the bands start to diverge, right? And price trails the lower band. Okay, and of course, like all the other examples, it creates a buying opportunity and drives price back up to the initial volatility expansion level. So a lot of you are probably wondering, well, how do I identify the buy zone? The sell zone, or the point in time when price touches the lower 2 standard deviation band and the bands begin to diverge, is more obvious. As far as the buy zone, there are a number of ways that we can do this. One is we can look for price to come down into a level of support, as we looked at on Apple. Okay, we can wait for confirmation that price is going to rotate higher off the support, off that support level. You can. We could go on and on about different approaches, waiting for, for instance, after you've had a number of subsequent closes outside of the band, like on this chart that you're seeing on the screen, and then you get a close back inside in other words, between the lower 2 standard deviation band and the center band, the mean, as confirmation. That's not as reliable to me, but that would be a method. So there's a number of ways, but that's the trick, is how do we identify, when the band is overextended and ready to snap back? So what I've done, and I used to, I've tried a lot of different approaches here, but I wanted something more reliable and more consistent. So I spent many, many years, in fact, over a decade, and thousands of hours trying to determine when momentum is shifting and a new trend is starting, and then develop that into an algorithm that I could apply to the Slingshot setup, and reliably, predict market trends using this setup. So I'm gonna show you what I've developed here in a second, and it gives us a buy and sell signal without having to figure out the guesswork part of it, and it does it up to 3 candles in advance of the move. So that's the really cool thing. So my goal was to develop something that didn't have the major problem that so many indicators do, and that is that they lag to the point that they're really not very useful when you go to use them in live trading. So that was the goal here. And I found that when you formulate the right combination of momentum indicators, you combine them with volatility studies, you combine them with price action, that you can actually accurately identify buy and sell signals near the outer bands. All right, and that's what I programmed in the trade trend, and in partnership with Metastock, and Metastock has done an incredible job capturing this algorithm and making it work on their platform. And we're going to take a look at it here in just a second. It can give us very accurate buy signals, and that, by the way, can be used outside of the Slingshot, but is a great supplement to the Slingshot setup that I'm teaching you guys today. And it uses a blend of algorithms. So it's looking at momentum, volatility, ATR, average true range, a number of different variables. And then it's actually projecting future price movement. So it's giving us an advanced buy or sell signal. And I'll explain that here in just a second. But you can use it for any asset, stocks, ETFs, futures, Forex. You can use it for any time frame. You can back test it. It doesn't repaint. So that's another problem with a lot of indicators, is to some degree they repaint, and then you back test it and you're just back testing form fitted data. That's not the case. This is not a repainting indicator. I love to use it for options. I use this as a core tool for all of my options trading decisions. So it's got a lot of really cool stuff. One more thing I'll show you, and then we'll go over to a Metastock chart, is I mentioned, eliminating a lot of your losing trades, and doing that by just not getting into a trade to begin with. And this is something that I've also programmed into the trade trend algorithm. Is it's an approach and an order type to get into your trades, because most people get in with a limit order or a market order, the most common orders used to place trades, and even exit them. Now, a buy stop and a sell stop order does something a little bit different. So if you're taking a directional trade and you want to go long an asset, again, you could get in with a market or limit order, but a buy stop order tells us that we only want to get in if there is follow through on the move in the anticipated direction. So we place a buy stop, and that would be at a price above the current market price. You can do the opposite with a sell stop. So if you're shorting a security, you can place a sell stop at a price below the current market price. Now, how does that keep us out of a bad trade? Well, they're still going to be losing trades, but over the thousands and thousands of trades that I've done, I can confidently say that this has kept me out of trades that, if you think of trades that you've done in the past, and maybe you got in and immediately the thing reversed on you and went against your forecasted direction, right? And you're in a losing position pretty much right off the bat. All right, this can help eliminate that, because we're not even going to get in if that were to occur. We wouldn't even get into a trade. Okay, so let's take a look at that principle, because it's programmed into the algorithm. So I'm just gonna look at a daily chart of the S&P 500 ETF, the SPY. Okay, so I've got the Bollinger Bands here plotted. I've got the trade trend indicator plotted here as well. I'm going to zoom in a little bit so you guys see this because there are actually a couple recent slingshots. Actually, three of them, three really nice ones. I'll show you. Let me get my drawing tool up here. So, okay, let's look at the indicator. So, in the symbology and what it's telling us. So we've got a series of green and red diamonds, right? Okay. So a red diamond is a forecasted sell. A green diamond is a forecasted buy. All right. So this is just the forecast prediction. It's not an entry. Okay. So an entry, as I mentioned, is executed with a buy stop or a sell stop. Okay. So when we get a forecasted buy signal, we would enter if the high of that candle is broken. Okay. And you'll know if there was a confirmed entry if it's followed up with a green arrow for a forecasted buy or a sell arrow for a forecasted sell. Not every forecast will result in a triggered signal. This one did not, even though it actually did forecast this down move. What happened here? Well, our sell stops below the low of the candle. These signals, we've programmed the algorithm for them to be valid for 3 candles after the forecast. So of course you can see candle 1, 2, and 3 never came down to the level. It didn't happen until candle 6 or 7, right down here. So no red arrow, not a triggered signal. This one did trigger. This triggered on the next candle. So you see we came up above the high and price took off. Okay. This is a sell, not trigger, just because it actually was another great signal, but didn't come down in time. Same thing with this buy. It's actually still a great signal, but didn't occur within 3 candles. All right. So that's how the indicator works. Now let's look at Slingshot. All right. So what's happening? Here's a great one. This just happened in late October, early this month in November. So what happened here? Well, we had a sell signal. We had volatility contraction. So notice how the outer bands are converging. Okay, price comes down to this lower band. Okay, simultaneously we get volatility expansion. Outer bands diverge. Okay, this is the start of the slingshot. There's a sell-off. Actually, the algorithm did an incredible job at exit right at the turning point of this. Okay, so this is the exit candle when the indicator told us to get out. The buy one came in a little later than I would have hoped, but this was a pretty shallow slingshot. You know, it only extended for 4 or 5 days, but that's what it looks like. And of course, price came back up. This is what I call a slingshot extension. So I love this buy signal, and is one I would trade because it's part of the slingshot extension. And what that is after you return to the volatility expansion level, that's somewhere around like 422, 423 here, that level. If you get a buy signal, like in the case here, and a confirmed entry, often these slingshot extensions go on for a good amount of time, make pretty significant directional moves, and as in this case. So that's kind of a more advanced nuance of the slingshot. But there's a good slingshot. Here's one. Actually did get a buy signal here, not a triggered one, but there it is again. Again, here's one. And this is a good example of one. So you want to look for that volatility contraction. Okay, this is a warning sign. As price is touching the lower 2 standard deviation band, look for diverging outer bands. Price sold off. S&P sold off here. There's our buy signal. There's the return. And there's also a little bit of a extended slingshot there as well. So that's what it looks like on an actual chart. And again, some really good recent examples. And then applying the trade trend indicator to the slingshot setup. Now, one other cool thing that I'm going to dig a little deeper on here with the indicator on the Metastock platform. So let me get back to my So what is so incredible? I mean, there's a lot of incredible things about the Metastock platform. And one of those is the expert commentary. So yeah, we've got the signals, the symbology here that we can look at, but then how do I know what price, to get in? Well, Metastock has what's called an expert commentary. And it gives you all that information. So if you pull it up side by side with your chart, you can go back, actually in any point in time. It gives you it in live markets, but go back at any point in time and actually look at the commentary that gives you the entry prices, the exit prices, the trailing stops, which is also built into the algorithm. So like if we look at this sell signal, this was back on October 19th. All right. So this is just the forecast. So the forecast came in on October 19th. We don't short the SPY at this point. We're just being told that the algorithm is identifying a vulnerability of a market downturn. Okay, so what it does is it gives us a suggested entry price. In this case, that was 425.62 on the SPY, using a sell stop limit order. Okay, so if price comes down into the suggested entry price of 425.62, we could place our order ahead of time. So on October 19th, I could have put this order in with my broker and waited. I don't have to do anything. If we don't come down to the entry price, there's no trade. Okay. But if we do, hits the entry price, we're triggered on the trade. So that's what happened here. So if you go to the next day, October 20th, it tells us that the suggested short entry price was reached, initiating a short position. Okay. And then it gives us a stop order for tomorrow's trading. Okay. So each day, and you'll see if we go to the next trading day, which will be a Monday, October 23rd, it tells us what the new trailing stop level is. Okay, so each day, the algorithm is actually gauging volatility to give us the most opportune and viable stop level, and it does it with quite incredible accuracy. You can see obviously here on the exit was literally right after the lowest candle here. That was October 27th, right? So then you see, of course, if you go on to the next trading day, we've got in the commentary, it tells us the short stop order value was breached and a short position should be closed. So you've got it all spelled out for you here as well, which I think is really cool because I've never seen another platform do this in this way. So I think it's a really great supplement to the chart and the signals that appear on it to help us actually use that information to trade. So I wanted to share that with you. So that's the expert commentary. Okay. So those are some examples of slingshots, the trade train algorithm applied to the slingshots, and I can just zoom far out on this chart. You can see all of the trade trend signals here. I mean, you get the real high level overview. You can see all of these slingshots, the buy signals, okay, the sell signals at the tops. And again, these are not repainted. These are actually provided before the anticipated move. So if you look at the red and green arrows, way zoomed out here, going back years, you can see that these are occurring near major turning points in the market, not after the fact, but before, often before that move occurs. That's the accuracy and forward-looking ability of the trade trend indicator. Okay, so let me get back over to our slides. All right, so that's the slingshot, the trade trend indicator. Do I use it myself? Of course, I don't provide our members things that I don't personally use. It's in fact every product and service that we've developed at Altos and provided to our members are used by me personally. So this is an example of, this is back from the Corona crash in 2020 I used the slingshot right at that time. So this was in February during the sell-off. So I lightened up on my positions. I was mostly in cash. I was being cautious because I saw the S&Ps coming down into that lower 2 standard deviation band. I saw the bands diverging. Of course, I was aware of the uncertainty around COVID. So I lighten up my positions, but I put on some shorts, relatively small position sizes. You can see there, just 1, 2, 3, 4 contracts. At the end of February, did over $13,000 just with very small position sizes. As when the buy signal came in March, again, I'm just using the Slingshot and the trade trend indicator here. I loaded up on my positions. I knew the volatility expansion was likely over, and that markets were likely going to rebound. So just use the same approach. I just traded more positions, still the same position sizing, 1, 2, 3 contracts. I did over 27,000 that month. So total of 40,000 just in that one Slingshot setup on a daily chart. And so that's real money results of what I taught you today. Okay, it's exactly what I taught you in real markets in my personal TD Ameritrade account. So you can use this for any market, any asset class, any time frame, any size account. These things are of course up to you. Now, what makes Trade Trend unique? You get the buy and sell signals before the move occurs, so you get it up to 3 candles in advance. Again, the algorithm gives us a forecasted buy or sell signal up to 3 candles in advance of an anticipated or forecasted move. You have plenty of time to go ahead and enter your buy stop or sell stop order if you decide you want to trade one of the signals. And again, I zoomed way out on that SPY chart. I could have gone out further, but if you look at every market crash, black swan event, bear market, every downturn in the market, Trade Trend's given a sell signal for it. And that's pretty incredible. All right, so this is flash crash of 2015. Sell signal came in August 19th. There was the sell-off, gave a buy signal in October. 2008 mortgage crisis, May 21st, sell signal came in. There was the sell-off. Okay, so notice these sell signals are coming in before the actual major sell-off. Okay, 2000.com bubble. This one, it caught a little bit on the later side of that, the Slingshot in particular, but sell signal far before catastrophe. And there's a buy signal in September before the rebound of that 2000.com bubble. So yeah, all systems likely, not guaranteed, can produce winning trades. So what you want to ask yourself is, can they keep you out of the market when conditions are favorable? This is often when we end up giving back profits on our losing trades. So ask yourself, can it do that? This is what my goal for Trade Trend is. Again, here's just real money Slingshot results I trade futures as well, as I mentioned. This is purely applying the Slingshot with the Trade Trend indicator on Metastock to E-mini S&Ps, the NASDAQ, and VIX futures. Has allowed me to do over $28,000 in a day with over $122,000 in open profit. And again, over $13,000 a day, over $152,000 in open profit. There are losing trades, of course, but I've been successful, one with the Slingshot, the Trade Trend indicator, because my winning trades far outpace my losing trades. Okay. So that's the important thing. So I want to thank you guys again for being here today. I have a promise to make to you, and that is that I want to assist you further in helping you have days like I've shared with you. And I want to give you access to my tool, which is Trade Trend on Metastock. I don't hold anything back. Okay, so I give you everything that the indicator is capable of. There's no added features you later have to get, and everything is there. It's all built in. You get the advanced buy and sell signals. You get the trailing stops, and I reveal my strategies that go along with the indicator, like I've done today, the Slingshot. But I actually do that. I'm going to invite you to attend our sessions. We hold those every Tuesday at 7 Eastern, where I teach a lot of other strategies in addition to the Slingshot. Okay. So you get 12 months of Trade Trend. Again, you can apply it to any market. You get this for the Metastock platform. You get 3 months of Metastock and their data. You get exact entry and exit signals. You get live interactive trade sessions. So again, those are every Tuesday at 7 Eastern. We do record those, so you can, if you can't attend in 1 week, you can watch the recordings. And I host those myself, so I'm there to support you. I'm there to coach you. You get direct access to me on those weekly sessions. We also teach trade adjustments on these to help fix losing trades, and we do a lot of these around options trading. I give a lot of the things that I'm currently trading. I share my personal trades with you on the sessions. And again, you get everything that comes with the trade trend indicator. And I wish we had more time to demo it and look at a lot of charts and stuff. It's just fun to do. But obviously we have limited time. So I'll show you what's in the package and how you can get it. Again, you get an entire year of trade trend on Metastock. Normally we retail that for $14.99. You get our weekly live trade sessions. Those retail $5.50. You get personal coaching. Normally I coach a starting coaching package for me is $19.97. And also get our Facebook group access. We have around close to 900 members in our private Facebook group that use our indicators, our methodologies, our strategies, and you can interact with them and share ideas, trade ideas and things. We're throwing in our training, and I'm going to go a little bit more into that. That goes far beyond what we had time to do together today on our hour session. So on top of that, because I like people, there's always a learning curve with a new indicator, a new tool. I like people to, hit the ground running, get off to a quick start. So what I do is I research my top 2 trade trend picks every single week on Monday. I send those out Monday evenings after market hours. So you can see what I'm looking at. You can see what my 2, in my opinion, 2 best picks are for the week. And I send those out to you via email. So that's an alert service. And we're throwing that in the package as a bonus. Normally we retail that service for $9.97 for the year. It's done incredibly well. In fact, you can go to our website and look at the track record. It's called our Fast Money Alert Service. And I'm also going to throw in our How to Create Risk-Free Trades ebook. That's a $97 retail value. So we have over a 5,000 retail value on the package, which we're discounting 80% for the Metastock Summit today. So this is just for today, and we're doing it for 25 spots. So we're not, obviously, we'd love to have more of you, but we don't also want to be overwhelmed. Metastock does an incredible white glove treatment to get you guys set up with the indicators, the platform. Our team as well is there to support you. I'll give you our contact information here in just a second. So we have to limit it so we don't sacrifice customer service, obviously. Here's the link to claim one of the 25 seats, altostrading.com/Metastock. And you can get 80% off the package, all of the bonuses, breaks down to just a few bucks a day. Really good deal. Again, we don't do that. We only do this at the summit. So this is the one chance to get the 80% discount on this full package by going to altostrading.com/Metastock. And I'm looking at the clock. I don't know. I'd be happy to take questions. I don't know if Jeff will allow me or if I have
Let's
time.
do a rapid fire one. We did start you back.
Okay, I can do
a couple
that.
minutes late. So comment in the chat, Maverick says, on the Altos Trading weekly webinar, Jeff Tompkins does a really good market recap. So I'll have to look that up. You'll have to send that over to me. I'm really
Yeah. Well, I appreciate that.
Cool. Let's see. Michael says, thanks, Jeff. Looks good. Thanks for sharing Slingshot trade trend on Metastock. Jackie has a question. Do you wait for the 3 candles in the short-term time frame, daily, weekly, or monthly? So what time frame do you have a recommended time frame? I know with Metastock you can apply it to any time frame, but is there something that you recommend?
Yeah, just to clarify, is that for the Slingshot or trade trend or both? Or
let's see. Let's say trade trend because I shouldn't specify.
Yeah. I mean, what I always tell people is you should trade in the time frame that you're comfortable with, that suits your trading style, etc. And as far as the indicator, it can of course be applied to any time frame and any asset, and it uses the same methodology, the same principles, regardless of the time frame. So the big difference you're going to notice across different time frames is the number of signals. So you'll see fewer signals on a daily chart than you would on a 5-minute chart. You'll see fewer signals on a 5-minute chart than you would on a 1-minute chart. So it really kind of depends on how fast you want the signals to come in and how actively you want to trade. But it uses the same methodology across time frames. And I don't think it has one time frame that it's better in. I think it's really just a function of your trading style. And very good question.
She clarified for Slingshot.
Okay. Slingshot. There again, I would probably give mostly the same answer, but with the caveat. So if you apply the Slingshot to an intraday, let's say a 5-minute chart on a single stock, let's say Tesla. Okay. I'm sure you're going to see the Slingshot play out many, many times successfully. Can we correlate that or equate it to how it would work on a daily chart of the S&P? I would say no, because the simple, obvious point that there are companies that have gone bankrupt and their stocks have gone to zero. Well, then the Slingshot is no longer going to work, So we all, I think, are confident that the stock market is not going to crash to zero and there's no longer going to be a stock market. And, historically, obviously, markets have gone up over time. So that would be a bit of an apples to orange comparison, And so as far as the Slingshot, I think it is a great tool to utilize with any asset on any time frame. But if you want the cream of the crop, it's a daily chart on the major indices, the S&P, the NASDAQ, the Dow, the Russell. That's where you're really going to see the incredible accuracy. Of course, it just takes longer to play out on a daily chart than it would on like a 5-minute chart, but also a great question.
All right. There's a ton of more comments and questions. I'm going to keep this on time.
Yeah, I'm going to put our contact information in the chat so that you guys, if I didn't get to you, hopefully this goes, let me make sure this goes out to everybody real quick. All right, so this is going in the chat. I'll put our contact email. That is support@altostrading.com. And then I'll give you our website too. We do have a toll-free number. You can just go to our website, which is altostrading.com. Our toll-free number is there at the top if you prefer to call us with questions or to order, either way. We do have a few seats left, so if you want to claim one of the 25 and get the 80% discount, make sure to go ahead and do that. altostrading.com/Metastock. Thanks, everybody. I hope you got a lot out of it. I hope to see you all again soon. And thanks so much to Metastock and Jeff Gibby for inviting me. It's always a pleasure.
All right. And thank you very much, Jeff. I always appreciate having you in here. You do such a great job. I also want to reiterate, if you have any questions for us, you can give us a call. If you want us to send you some charts, we can. Jeff, great job. I appreciate you. Thanks for everything you do.
Thank you.
All right, cool. And so the contact details, if you want to give us a call, I know we did kind of, let's see, altostrading.com/Metastock if you want to order that special package online. You can also call. We'll help you set it up, 800-882-3040, metastock.com/socialchat. The thing I also like about Jeff is he always does a really good job of showing it, and it is a full integration to Metastock. It has the scanning, the testing, all of that kind of good stuff. And he does a great job. So really, really appreciate him spending some time with us today. 800, and yes, of course, we do offer it with a 30-day money-back guarantee. Thanks for that question. Let's go ahead and kind of get a little bit on. I know we're running a little bit late. We are going to give away a prize, though. And to keep it fast, what I'm going to do is I'm going to say that we're going to give away Stocks and Commodities. So we can do kind of two things at once. So thank you to Stocks and Commodities Magazine for sponsoring the event today. I'm going to give away 12 month subscriptions to Stocks and Commodities right now. Okay. And the way I'm going to pick this one out is going to be basically on audience participation. So if you've said something in chat, if you've asked a question, if you've given a number, anything like that, there's a good chance you're going to win. And what I'm going to do is using my very, very good random method. I've got all other things open here. I'm just going to kind of like look over the other way, highlight a comment. Charles G, and go to webinar. You were asking earlier if you should go to YouTube. I don't know if you did. But if you're still in there, let us know in the chat. You just won a free month. So let me go ahead and click over here. We'll find somebody else in YouTube. Okay. John Andrews. Okay. Oh, well, you have your full name in there, so that's okay. John A. Okay. John, I don't know if I have your information, so email me at jeffrey.gibby@metastock.com. I'm going to put that in the chat, and then that way we can hook that up for you. If you guys are in the US, you will get physical magazines. If you're overseas, I haven't looked you up either, but if you're overseas, it'll be digital magazines. So when you email me, John, make sure you include your address. So Basila says, great presentation. Thanks. I'm glad you enjoyed it. It doesn't look like I scrolled very far on that. All right. Cool. Let's go ahead and kind of move on. You know, we're Metastock. Things are going well today. Thanks for everybody for coming. It's good to see you. Our next presenter has been a partner of Metastock for a long time. I'm going to say like 15 years maybe. I know he's used Metastock for even longer than that. He created one of our most successful add-ons on a subscription basis called the FX Traders Advantage. And he's really smart. And I like the way he's going to talk about his ingredients method for trading, but he does such a really good job with this. So we really appreciate him. And we're going to bring him in here and get him started. Peter, how you doing?
All right, Jeff, can you hear me?
I can hear you, yeah.
All right. Good
I
afternoon,
sent the screen share over to you too.
Yes, I am doing it.
Okay, cool.
Oh,
How you
that
doing?
looks. Fine, I'm doing all right.
Good. I can see it.
To, previous speaker did a great job.
Yeah.
You did a great job too.
Thank you. I'm just here to keep the show running.
Oh, we starting, I guess, late.
Yeah, about 10 minutes.
Yeah.
So,
no problem.
and we tried to not get too stressed out over the time. We'll try and make it up a little bit later. Let's go ahead and have you do it, Peter. I'm going to get out of the way since we are a little bit late.
All right. You could see my screen, right?
We can. It's coming through.
Okay. So we're going to get started. How is everybody? I'm in New York, so it's a little bit cold here. Hopefully you have better weather than I do. All right, so we're going to catch up some speed, and so we don't take away from the previous, the upcoming speaker. All right, so my name is Peter, last name is Dalal. I've been in few years in this business. So the way in which we're going to talk a little bit about topics very quickly. So, and you could see here. So the idea here is to simplify the trading and how to do it with few things, right? Regardless, all the noises are there. And I've been trading that one since 2000. I started actually 2005, 2006, doing my own trading. And that's how it was developed. And along the ride, I developed so many things. So don't get overwhelmed. It's a kind of software itself, but you do not need to learn every single thing. Pick up your spot and play with that. And then if you like something else, then you do practice those. So basically, we're going to talk about 5 patterns out of many of those usually comes often, so that creates a lot of opportunity. And later part, I'm going to show you how I exploit them, every component of that. Little example, we will open up our eyes how much strategies you could do with that. And there is a trade, few hundred every day with this software. You just have to scan, utilize what Jeff has created for me, and apply. Okay, so that's what we're going to talk about, some in the bullish side, bearish side. Then I am going to show you, which we were not planning to do it. I asked Jeff, right? And Jeff agreed very early in the morning. So we're going to throw you as things which we were never planned to, or we didn't even talk about it. I felt that I will give it to you anyway. So basically, I'm registered, my company is registered with CFTC. We got some obligations and lawyers on my neck breathing every time. So I'm going to be short, but I still have to show every slide, and I'll pick up the important points to talk about so we don't take away too much time from, regular disclaimers, or we want to be short. So trading is risky. Everything which we represent here is for education purpose only. There is no buy, hold, or sell recommendations. Even though the arrow will be shown in a live chart, that doesn't mean that I'm recommending it. It's for education purpose only. And do not risk money which you cannot afford to lose. CFTC Rule 4.41, everything we do, even on a live room, everything is hypothetical. The reason why nobody can guarantee the profit or losses, and it is not going to be repeated 100% because human errors, lack of liquidity. So even my own trading, I cannot repeat hour later because market conditions change. So how you could compare 1 hour to another hour that is going to produce 5% or 10% or whatever. So those things in theory is good, but we telling you this is all hypothetical. Options, the software has options, symbols, right? Options are risky. You should get education for free going to this site, Option Clearing Corporation, and they have a pretty good education and a class collection of a lot of webinars. Please do that before you spend any money learning options. All right, my company is also registered, so we have to tell that on behalf of my company, I'm not giving you any recommendations, right? And trading is risky. Again, intellectual property rights, my lawyers and team is very particular about it. Every single thing we have tried to patent, as well as we have registered trademark, service mark, education also is trademarks, right? So everything we do falls under intellectual properties. Please respect that. And we don't need to talk about it. That was done by previous administration. Again, we are required to give you my registration number of my company, 352991. If I come across today any security, if I'm in a trade, I'm going to tell you I'm in trade, right? So basically, but sometimes things happen, overlooked, but I'm not taking any responsibility that I'm going to tell you all what I've been trading or my money managers are trading. Because I also firmly believe to be a CEO of the company, not a slave. I do trade, but also I have brokers trained for Magic Trader for many years and pull trigger for me. So I could do other things. Testimonials, we are registered, so agency do not like us to put testimonials, but we have customers for many years. Some of them are 15 years here. So we have a lot of follow through. Again, this is a scalp swing method is very particularly designed based on my experience to bring the drawdown close to zero or zero. And there are, hopefully in the audience, there are people, they will tell you, yes, it is true. We develop a method using Magic Trader. We cannot guarantee every time, but we know how to get there. So that's scalp swing is also registered trademark of my company. Again, the reason why I did, and based on what we're going to talk now, the Magic Trader development. So I'm going to talk about how to trade with Magic Trader, how to use simple trading strategy, find the best opportunity in minutes, which is Meta Stock Explorer. It's pretty good. And boost the trading confidence with 5 patterns. We're going to focus on that. So I will spend a little bit time. So we set up a understanding with you how the chart finds these things and what it tries to tell you. Don't get intimidated by so many colors of candles. They are designed and we own the patterns. So what the basic thing was when I traded on a Wall Street as a prop trader as well as institutional trader, what I learned that general public have no idea. There are particular points, institutions and kind of institution trades. And we also trade with them, but we have no clue. So the games played by them, you have no clue, right? So I figured out And say, for instance, on a buy side, there are 4 different compartments, right? And different kind of institution comes in and they put their money into, right? So in a simple way, the colors of the candles are based on those price. We call them as a price perceptors and sectional price perceptors. So all buys are not same, all sales are not same. So this is the reason why you see different candles. Also, there are particular points where institutions likes to step in and change the trend, right? And also they put a lot of money. Say, for instance, yellow candle here, right? That's a warning sign. But before the trend took place here, the bull showed up. And why before is, this is a daily chart. So we figured out what is happening in a 15 minutes is reflected with a symbol YB4, which is my favorite because it's a low risk trade and institution trades with 15 minutes, 60 minutes. I wanted to know, looking at daily, weekly, so those symbols will show up. But it is still a warning to go long and you could take the entries at that time. That's the simplest way to do it. Then they are enlarged here, so you could see here. Right, that we call that as a catalyst. There are a few types of catalysts, right? We're going to come across and we're going to talk about it. Then this color, when you take the trainings, this color is my favorite because many institutions, heavy duty, they comes and put the money, right? Those are these colors here, you could see here, right? That's why they are there. Then this is a turquoise bar continuation of the trend. So they put money to bring it down to the levels they want to do it, right? So in fact, the software talks to you with a different color and we teach you how to do that because it's important for you to know what institutions is thinking, what they are doing. And over the period of time, including my alert room, I have bought evidences, right, and showed to them when options are traded. Also, you could see it when institution dark blues the position because I have those data, right? And we compare here with the symbols. And there are people in audience, they will tell you, it's not happening today. It's been happening since many years, right? We cannot tell you to believe it, but you're going to believe when you see it, right? So it's not a big deal, but this is how they trade and I want to know. So I don't have to ask my friends on Wall Street what they're doing today. I eliminated that step. So you as a retail trader can benefit of institutional knowledge. I got it and I created something which is unique. So we call this one here as a B1 symbol. That means it's advanced price perceptor. So I know those institutions which I traded with, they are going to take position, right? And there's no guarantee, but I need to know, right? So this way, look at here. This symbol came in normal technical trading. This is right, open and close, and this is bearish. But also some traders are smart. There's a tail here, so there was a buying came in or whatever came in, right? But I want to know if the institutions took the part or not. And last thing here, we want to talk about these symbols. This is very important. I don't never took a credit that it's artificial intelligence or whatever it is, but software has a forecasting capability. So what that means, here it says that symbol, blue symbols, and here is blue symbol, here is blue symbol. Results are very obvious in front of your eyes. So it's telling that it's a future highs. That means it's going to go higher. There's no guarantee, right? But I wanted to know what the risk is. So on a scale of 1 to 6, what is the risk? So it's a 3 risk. So it's a little risky, but I could still go in there because when you are too far away from these two lines, risky. So that's why they took some profit and they're still going. So these numbers has a meaning. 3 means forecaster. With forecasting, we're going to go higher. So an ordinary trader like yourself or institution, whoever wants to use that symbol can benefit. At least they are aware of that if you short it, you're going to get a painful experience going forward, right? People do it. They keep shorting. And I was one of them too. So, but you got to know when to short it, not just blindly short it. And there is no such thing like averaging and all this thing. I don't believe it because you could get hurt. So there are places you could short it, you could keep shorting, and institutions knows it very well. And I was fortunate to know an eyewitness right on various trading desks. Now we're going to make it simple. Out of all the noises, what we need to do. So there are 5 bullish patterns it creates on a regular basis, and it happens every day in any time frame. So this is easy to learn, and it is also easy to figure out what to do. So when you see a simple green line, right, and I'm going to show you where, that means the direction is going long. So you don't need to draw trend lines. So where are we going? I don't have time to worry about it. So software figures all out. Then in a health window, there are 3 lines. When they are parallel, right, it looks parallel here, means we're going in bullish direction. So health is good. So security is good. You don't have to worry about it. And the value on the purple line has to be 4, blue line has to be 1, and it has to be above 0. That means we're going in the right direction here, and we have a security health is pretty good. So we have no problem taking the risk. Always there will be a losses because market can flip in a dime. If news came in, president spoke about something which makes market crazy, right? So at that time, your stop will protect you, right? And get out. Green spike, that's an entry spike. So if you can recognize this triangle, you did it, you made it, right? That's what you have to learn, go back to school days, right? Recognize, cubes and colors and things like that. So this way, it's not too much stressful. So technical analysis I practiced before I created Magic Trader along with my daughter, right? I was one of you and going crazy, right? I don't want to go crazy. So simple thing, you look at that, it eliminates all the technical work I had to do, and I could focus on trading instead of worrying about it. So this is a pure health. I'm going to show the health indicator, right? And basically that line, right, it's a juice of health indicator. So if it is green there, you go for it. That means we are okay. And ribbon, Metastock software comes with a ribbon as a standard, right? So we utilize, but all ribbons are not same. This is done based on the new inventions, and it is based on a horizontal time risk. So when you go further, it increases the risk. So all the risk involved in a trading related to the time, they track by this simple shaded line. All right. So once you see green, you're good to go. And same way, we could apply this thing on a bearish side. So again, number 1 is vertical line. That means we're going bearish. And in this case, 2 lines, purple and blue, are below 0. That means we're going down. Then red spike, that's an entry for going bearish direction. So these and this lineup, things could be pretty good in trading. So you got to be a matchmaker here, right? You got to find those, and it's easy to spot because you can't miss that. It's on a plain sight, you cannot miss it. And again, on a health, the juice of the health window is this small line, and which is on, that means we could go bearish here. Same thing, what we did it with the ribbon for a bullish side, it shows red color, we're going down. That's much you have to learn. Now let's apply one by one on at least bullish side. So it's the same chart, you show it. So this is that first line, direction line right here. So that means we're going long. You don't need to go and worry about higher highs and lows and whatever, right? So it is going long. Software says we're going. Then those lines which we talked about, they are parallel and about 0 line. That means we're going long and health is good. So this is a health window, right? And I didn't mention, but these are the two lines. They are not the lines you talk about it. They are custom made to every time frame, right? So they have nothing to do with the lines you talk about, right? And at one point I used those lines, but I do not even know how to even select them from Metastock software. I forgot all about because it's been many years now. I don't even have idea, right? I trust my software and it works, and it is not working the same way those other lines you are used to. These are custom made, totally new invention, right? So, and it's been good for many years, and I don't want to go back to the virus we had. This line predicted that whatever the administration was telling, a few months is going to be over. We knew it's not going to be over for a long time. And I was very vocal about it because people were hurting, right? So those lines help us. And basically this software, if Refinitiv gives us the data, anything, number of children born in every state, I could plot it and I could tell you what is going to happen next. It has been done. So it's not some kind of theory. Those lines are very powerful because they have inbuilt capability of dynamic, adaptive, and forecasting. But you have to learn how to do it. So number 3 is this entry spike, which is easy to spot it on a chart. And that's about it. We're going long in this case. Then 4th one is that juice of the health window. One simple line, that means everything is good. And here is the catalyst, the bull. So we're going long. That's why you have to identify and learn some nuances, and you will be okay. Make it simple. Then we have this ribbon, number 5. So ribbon is green. So where are we going? We're going long. Along the line, you could utilize the symbols to your advantage. If the forecaster is telling you we're going to go long, most likely it's going to go long. And when you put a arrow here, it will tell you future high. So software is telling we're going to go long. So don't try to be a scientist at that time. Just keep it simple. Learn the symbol. So it's more or less learning the symbols. So this is the actual chart. So I put those symbols, what you saw in a chart. So this is the direction we're going. It's a green, so we're going long. 2 lines are parallel, so we're going long, right? And it's about 0, so we're going long. 3rd is entry spike, right? Metastock comes with this as a standard drawing tool, but these are specially custom adjusted. So what it is, that also another the direction line. So the base comes here. The confirmation comes here. So when you see here, right, this day, yellow bar, that means you are going long. And good thing is what we figured out, it will start showing earlier half of the spike when you scan it. So you don't have to wait for it, but you get an idea. This yellow bar and all of the things that are happening, we're going long. If you want to wait for that, fine. You could wait until the end of the day or once it goes about these magic lines. And that's how I started teaching people. And so far, so good. And that's where the scalp swing method will come. So you go and drill down to smaller time frame and look for a match. And if they're matching, drawdowns could be 0 or close to 0. Sometimes it's 1 penny, 2 pennies, 3 pennies. That's it. And you could live with that. People losing 10% in a drawdown, this is much better deal. And you have to learn scalp swing to minimize your drawdown. Now, what I did, I added something here. It's the same chart, but I added something. So when you scan, they line up, it's very strong message. However, I'm going to show you later, offset has a more opportunity than line up itself. This is strong, very strong, but the other ones also, you don't want to miss the opportunity. That's how we could tell you simply 200 is underestimating in any market condition, right? And hopefully somebody's in the audience put a comment, number of strategies Magic Trader has it. You guys are not going to believe the number of risk I discovered and pile for patterns and number of strategy involved. I was very conservative when I started. I said, oh, it's only 50 strategy. Now they're in 100, they're seeing and eyewitnessing because I started teaching over the period of time. And so magic trade is huge. It's like an ocean and galaxy together, right, in trading. But keep it simple, right? Now, this lineup, right? And there is an offset. So when you scan it, if there is no phi matching, but there are a lot of opportunity even with not lineup. So what do you need practically? At least two of those 5 things we talk about and yellow bar or turquoise bar and you're good to go. That's what you have to look for, and scanner gives you all these things. And Jeff probably will show you probably later on some of the scanning because we're going to catch up the time. All right, now let's talk about same way the bearish side. So this is number 1, we're going down. Number 2, parallel, that's what we want to know. We're going down. Then it's below zero line, we're going down. Then anti-spike, this says red color, we're going down. But as I mentioned, it has to be at the base. So you wait, right? Because everything is red. So you wait and wait for a bear. And this software comes with calls and put signs. So in this case, you have a put plus means plus, but you don't need to know much about it. It says that plus means it's a stronger. So bear is stronger, right? So we go and buy the put and look at the result. And same way we had a forecasting things. So here is this symbol minus 4.5, right? So when you see that, you could add more lots to short it or short it more. And that's about it. And when you go on a scale of 1 to 6, it's minus 6 came in. That means it's risky to stay in a trade and get the hell out of that. So this is very simple way to identify. Yes, it is true because we went 2 years with the regulators and they rip apart everything what I did develop. And they also came to conclusion out of all these things, we have taken care of risk identification every step of the way. So I came to this industry, 1 buy and 1 sell arrow, right? And we trade. What happens in between if I want to get it? And I run businesses. So I don't have time to be perfect. So I want to pick up in between somewhere I have less risk. So this magic trader invention allowed me to adjust to my life. So I don't feel, FOMO, right? Fear of missing out. I have plenty. I can't even keep up with that. And you could scan most of the things. So that gave me a freedom and confidence that I could trade any condition, anytime. And I got plenty things to choose from. And that was one of the things I always missed it. Distraction comes in, I'm in a meeting, and the damn trade moved. And I'm sitting there doing nothing. I said, I will never have, when I'm ready, I have plenty girls to dance with. Okay, not in a bad way. So plenty symbols to dance with. Now, it's the same chart. What I did is I put the lineup, same lineup and offset. So it is also true. It doesn't have to line up 100%. That's why I created separate. So you could see this is a lineup, but also the direction line and spike could be have an offset. And direction line sometimes line up right away and sometimes take longer. It is designed purposely, right? So it checks so many things before direction line comes in. Now, it's not a big deal. Don't get nervous. What I did, it just wanted to show you amount of opportunity get created with offset and perfect lineup. So look at here. There are 5, right, opportunity with different securities got scanned in. So I put it on a table. Different security the same day, right? Lineup was only 5 of them, right? And offset was 22. And the symbols which you saw on a chart, they have their own kind of understanding. Plus is means strong, plus is little less strong, and this is good, right? Then bounce, and this is one of my biggest bounce means I wanted to know when the exchange of the risk takes place. That means there is no more selling, they neutralize all the sellers, and we are going long. So that also tells me if I want to buy calls, and not every symbol will have a call. The software figures out, so I don't have to worry about it. Only thing I got to see which option, right, chain I'm going to be using with the nearest strike price, right? Or I want out of the money, or whatever the option strategy I want to take it. So that helps me. I don't have to do all work, and I could get it done. That's why those symbols are there. As long as it's a call, we're going long, right? And you still have to, we have a volatility indicator, specially customized, right? It comes with the software. You could get trained and worry about volatility there. This is one of the screenshot I did it so people know what to use to find those things. Those 5 ingredients or 5 patterns, you could use this one, right? And the slide will be there, and select them. So on a bull side and bear side, you will have whatever you need, right? Directional move, and pick up what you want out of the 5, and catalyst also comes with that. I'll tell you a little bit. We're going to cut down the timing. So my daughter was involved since she was 9 years old on all my businesses, right? And that's how she grew up. So she got multiple exposure in multiple businesses at the same time. And my father had 16 of them. So I still, cannot be like him. He was a very smart guy. And he was not even graduate. He went to 4th grade and parents died. So he was visionary, very intelligent, right? So I learned a lot from him, right? He died, I was young, 20, 21 years old. But from beginning, he got me involved in multiple businesses. So, my mindset worked that way. That's what I did with my daughter. You could see all these things. And I had a bunch of licenses, right? As I needed, I get a bunch of licenses on a Wall Street because I was doing a lot of deals behind the scene, keeping low profile, mergers, acquisitions, right? And hanging around with all these geniuses there. So I could officially go there. I was going unofficially. Then said, you got to get Series 7 at least, and 6 will sponsor you. And I started negotiating big deals for big publicly traded companies. So they said, we can't pay you. Okay. So that's how I wound up with that, necessary, right? Then I got my Series 3 and 34, and I let go Series 7 because of the brokers. I made a decision. I would rather have sponsorship by myself, and I kept 3 and 34, and my company is still in business, right? So basically, a lot of people, I've been writing for years. Years means years, more than 30 years. A lot of groups I used to handle, but I kept always communication with the grassroots. With traders are my life, right? And at one point I had 40 groups for traders, and that's how we did my first product, and it hit biggest score for Reuters back in days, right? So long story short, I educate people, regardless they are my customer or not. No holds barred. Just give it to them the right stuff. Every morning I write, right? And I send them the market analysis, what I see it, and a lot of people benefiting. And this is not because of Magic Trade. I was doing before that too. So if you want it, you could send me a request. So I will put you on a broadcast list. Your privacy is contained because broadcast does not give you your number. So don't worry about it. But I need your legal name and your last name too, because we are registered, right? And I urge you to go on this site. There's a lot of free institutional knowledge. You will get it, right? And today we all used to with apps, and we didn't do the apps yet from old school. Now what I did this morning, I came up with an idea, and I sent it to text to Jeff. I said, this is what we're going to do, because this is very important. Gamma squeeze. I've been very outspoken because my professional life started with, right, prop trading with a hedge fund. No, I did prop trading, and then institutional. I went to institutional side, and that was one of the famous hedging company in the whole country, and I learned a lot from there, right? And all these things, like gamma, delta, I realized, right? And what did happen, I couldn't program the option data, whatever the complication. So I said, all right, I will do artificially. And that's where we created delta and a gamma indicators, right? And this is totally without any option data. and people are in audience, they will tell you, right? Before I go further, let me give you some example right there, right? Look at this daily chart. My gamma, right? It's not a part of that, but I'm going to give you the, what do you call, the alerts, right? And commentary. So you know what to look for. In this area, right, was gamma squeeze. And it started before that, and we call pre-squeeze entries. It happened somewhere here. And then continuously telling, and I knew it, I wrote it, and look what happened today. Right? And it's not after the fact, it is before the fact. And I educate people. So once you get a magic trader in a room, you will get it. And I write almost every day, including sometimes Saturday and Sundays too. Now I will do another chart. Look, it is also was on a scan. TDG. Oh, TDG is that, okay, so AMAT. And I continuously telling traders that this is what I see. I can't tell you what to do because I'm advising. So regulators will be on my throat, right? Here, right here, we got a pre-squeeze, right? And look at what happened. And multiple squeeze warning, including this morning. We had, right? And I did not plotted it because that doesn't come with that, but I will tell you in the alert room and commentary on WhatsApp, this is what is happening. So you get trained for that. Look at here. And even if you don't have it, right? Look at this here. Institutions are coming and we're going to the moon ride, right? Here is risky when it plus sign comes in. So, and we are far from the main risk reversion area. So I train people, take profit or put tight stop. Look, they're already doing it here, right? But when it's so hard, right? But I see here what is happening, right? So if I will tell you a little bit about it, what happens here. After certain levels, if it breaks it, right, or market makers, right, see the option flow, traders think that out of the money call concentration went up, so they have to buy equivalent delta. So now they had to buy either security equivalent, may suppose this was a whatever 30 delta, so equivalent of 30 delta, they got to buy that much stocks, right? Or they have to hedge with the future, otherwise they get whacked. So what happens here, artificially stock gets pushed up, and also short covering starts because now they got caught by surprise, right? So that adds more fuel to the fire, and this is the direct representation of that phenomena, right? And we know way before when institution was taking place here, right? This color belongs to the institutions like Goldman Sachs or Merrill Lynch, and they are coming there. So I know this color, right? It's been time tested. I'm taking, but even though its risk is more, we are far in the horizontal scale, I could still enter because gamma squeeze is happening. So this is what I wanted to show you. We're giving away for free based on what Metastock decided, but you talk to him, right? So basically what it needs to be you need to do, he will tell you, right? We came up with this last hour because this is very necessary in this current market condition. All right, I'll tell a little bit about this one, right? Because let me see, we are running out of time, right? So every market, you could use this software, so you don't have to worry about it. And it is a risk-based software, not a price-based. Yeah, we always care about price, right? Because it comes out from our pocket. But software was designed initially for me, an institution, to reduce the risk, right? It was never given to the general public, right? And Jeb, Kelly, and I spoke about it, time to descale the strength of this software in a way, because it's overwhelming otherwise, right? The gamma is not a retail product, right? But we have many customers, right? They love it. So I said, all right, I'll give it to, at least we cannot give you the indicator at this moment, but at least I can tell you what is happening. So look at the other things. All right. And this is what reason was that truly I was traveling with Metastock at that time with the Reuters stuff. And I did not see my children for a long, long time. We were traveling 3-4 cities a week and repeat 65 cities. And it was too much, and overseas too. Right. So I said, I got to get rid of this technical, too much analysis problem. So it's not a garbage, but I don't use it. I put it away in a bin. I don't want to. That doesn't mean those things are bad. I will not do that. But I don't use it because other things are much efficient for me, right? And my traders feels the same way. They don't go through this RSI or whatever. Because that's for me, I graduated already. I spent enough years, 20 plus years to teach people. I don't want to do it. And I traded too, institution too. But I learned a lot of things, what they were doing. The bonus, I will just spend 2 minutes, right? As I open my mouth, it's not only 5 patterns. There are hundreds and hundreds of patterns. You just have to have somebody show it to you. And these are very powerful patterns. Look at the V, all right? And do not compare with other things. If they make, I have no clue if other software do. I keep my blinders on, so I keep my integrity. Right? I write spiritual thing, and people will tell you, I never Google it. I never even open the book or never listen to gurus. It has to come from inside, not from outside to inside. I firmly believing that, and since child, I had the same one, writing Z to A, not A to B. And I proved to the school that it takes less time. They don't have to believe me. Right? So I just want to give you an idea. These patterns are very powerful, and it produces, for me, it's good results. And you could see here, that's what I wanted to give you as a bonus, right? You could have these slides go up and down, existing guys too. This is what you get. Look at that, right? So this is one of the few hundred. And in audience, they will tell you, the eyewitness, all this, I'm not claiming which is not there, right? They see it on a regular basis. 50 was over exaggerating, look like. I said, we'll see as we go along. And look at that. So you existing user, start using it. It's very powerful. Look at this here. Every time frame has that. Look at this. So it's not horizontal time freeze. There is a way to trade it, and you could get a few more entries. And this is what I want people to start opening their eyes. All right, I'm done. Jeff, take it over, please.
I'm coming. I
want to catch up this week.
Early.
And we'll
All right,
do
thanks, Peter.
question and answer after you're done, if we have
Thank
time.
you. Yeah. I appreciate it. Thank you. I was expecting you to go a little bit longer, and I didn't have anything ready, but I'm ready. So thank you very much. I do want to talk a little bit about how this all works, how it puts together, how it looks in Metastock, because Peter's done such a great job. We didn't have a lot of questions for you in the chat, Peter, but Michael has been talking a lot about how he likes what you've had to say, and there's been some good comments. So let me go ahead and jump over here. And what I'm going to do is I'm going to go ahead and make myself the presenter here. Okay. And then I just want to talk a little bit about what's included in the add-on, because it's very, very inclusive. So all in all, there's about 58 different indicators, 47 scans, 2 expert advisors, 35 templates, 127-page manual. In there's 102 different symbols, highlights, a commentary window, all that kind of stuff. I just happened to have this chart actually open brown. I think it came up on our initial scan, and that we did a little bit earlier, and I applied the Magic Trader template, and I think it's a really, really good example of how clear it makes everything. So you can see you've got the horizontal lines, the health indicator that are kind of showing up here. You've got your yellow bar that's shown up. You've got your spike that came in here, the horizontal time risk. And this is just a random chart that I just pulled up. If I was looking at this chart, it'd be very, very clear to me in terms of what's coming in on the chart and how everything looks. Eugenia says, it's awesome. Eugenia's been a long-term customer of Peter. She goes to the room. She's really, really She's great. It's an awesome and it's easy software. It does what it's supposed to do. One of the things that I'm going to actually say that has been impressive to me is the people that really kind of get into Magic Trader. They love it. They look at it. They use it. It's something that they do all the time. So in any case, let me kind of get back to what we're showing here. The other thing I want to show you, in addition to kind of how everything is kind of spelled out, I want to show you the expert advisor and the commentary that Peter put together with this. And a lot of times, if you've paid attention in the last couple of days, I really like commentary. And one of the things that I really like is how well Peter put together a commentary for this when he was building it. So let me go ahead and load it up. Here you're going to see a bunch of values for kind of like what the indexes are doing, what the S&P is doing, et cetera, et cetera, et cetera. But if I'm just kind of learning about this, I want to know what's going on in the chart. Right now, I can tell you right now that all of the 5 ingredients, the magic direction line is bullish, the health indicator is bullish, the spectrum spike is bullish, the pure health is bullish, the horizontal time risk is bullish. So all of that is actually kind of laid out for you. And if I kind of just come down here and just show you through this stuff, it's going to have a lot of different details that it'll give you. And of course, we've talked a lot about how scanning works. There are quite a number of different scans that are available in Magic Trader. Let me just show you one real quick. So I'm going to go ahead and kind of pop open our Power Console. I'm going to go to the scanner. And what I'm going to do is I'm just going to unselect this one because I've got it done. But let me just go ahead and kind of clear out the thing. I love 19, how it allows me to kind of search. But here are all the Magic Trader scans, okay? And what I'm going to do here is I'm just going to do a real quick scan on 5 ingredients. I can scan any market that I want. I'm going to do the index constituents. If you're watching this in like Singapore or Malaysia, something like that, you can do your market. You can do India. There's over 321,000 different instruments that are included in Metastock. So you'll be able to scan whatever you want. For the purposes of the scans that I'm going to run today, though, I'll do the Dow Jones Industrial, the NASDAQ 100, and the S&P 500. I'm going to go ahead and start that and just kind of show you what comes back. But I want to reiterate, you can scan anything you want. There's a list in Metastock. If you're an optional trader, you can just scan the optional stocks. If you're primarily focused on ETFs, you can scan those ETFs. If you want to do futures, there's a list for that. So the data that we get is the data that's provided by, it's now London Stock Exchange. It used to be Reuters, and I would say Reuters, but then it became Refinitiv, and now it's owned by the London Stock Exchange Group. It's one of the most professional, high-quality data providers out there. And you can see right here, now I've got kind of a matrix list of everything that kind of has one of those 5 ingredients. So if I highlight over here and I want to find these, the bullish indications, we can kind of go ahead and do that. If I have questions about actually what's being run here, this is health bullish, green spike. Any of these columns are kind of labeled out. But if I wanted to see everything that had a green spike on the current bar, here we've got a list here. And you get used to these. If you have questions on how they run, you can highlight over them. One of the things that Peter does a really good job of is training. There's a huge, very, very comprehensive training course that's available as part of it. And as soon as you actually sign up for this, you're going to get access to it. So I mentioned kind of the add-on. The add-on's great, very, very comprehensive. The thing I like about Magic Trader is it's an add-on that's going to kind of grow with you. So the more you go to kind of Peter's room, the more you go through the training that he provides, the more you go through that, the better it's going to work for you. But in addition to that, it's all also very, very well put together. So here's kind of some of the topics they talk about in the educational room. You've got all kinds of stuff in here: volatility messages, trading plans, stock effects related to Russia, Dow options, Q&A, mean reversion. You can just see a ton of just different topics. The room is basically $299 per month for this particular room, and it meets Tuesday from 5:45 a.m. and Friday at 5:45 a.m. And they normally are scheduled to go about 2 hours. I understand they usually go a lot longer than that. During the market open, 5 days a week, you'll receive messages from Peter about anything he's interested in or looking at. Those come during every day the market's open and on Sunday. So all that's part of available is $2.99. We've had such a good reception from this, which I'm going to go right here, that we've actually kind of put together a bit of a package deal where we want you to try this out. So normally the Magic Trader Elite would be $199 times 3 months. The Educational Alert Room would be $299 for 3 months. And then the Gamma Squeeze is going to be $200 for 3 months. And so if you added the prices of that all up and put them together, it'd be about $2,044. Here at the event, as part of the conference promotion that we're running, just to get started, what we're going to do is we're going to kind of have you pay $448. So for $448, you're going to get 3 months of Magic Trader Elite. You're going to get 3 months of Peter's Alert Room, and you're going to get 3 months of the Gamma Squeeze service. So this is only good for a week. You want to go ahead and kind of get in touch with us by November 16th. And you can do this by giving us a call at 800-882-3040, or you can visit us online at metastock.com/saleschat. So there we go. Oh, and Peter, I want to say thank you. You actually we're back in time, and I didn't expect that until my turn. So Peter, that was a great session. I really appreciate you spending some time with us, going through it. Take advantage of this. One of the things that's impressive to me is once people get started in this room, the feedback that we get is just really, really good. People like Udini and Javan and just come in and month after month tell us about how much they enjoy kind of the room and the services. So go ahead and sign up. If you don't like it, you can cancel at any time. 800-882-3040, metastock.com/saleschat. Okay? All right, very cool. Thank you, guys. Thanks again, Peter. I'm going to go ahead and do this real quick. And we'll go ahead and talk a little bit about, I guess we'll do stocks and commodities again. I usually try to do a different one every time. Our sponsor today, Stocks and Commodities Magazine, Stocks and Commodities. I remember when we decided that it would be a good idea to do a full day session and to invite a bunch of our partners in that are smart and know what they're talking about with the markets. That was about 11 years ago. And remember, we called Stocks and Commodities and we said, hey, we got this idea. We're going to bring a bunch of market experts together. We're going to do a big webinar. And they liked it. They've been sponsoring the events that we do ever since then. And we really, really appreciate it. If you're looking at, if you're doing technical analysis, you should have, I believe, in my humble opinion, you should have a subscription to Stocks and Commodities Magazine. And you can do that at traders.com. They've got 17,000 articles that are available, 1.3 million subscribers. They've been publishing articles consistently since 1982. So thank you to Stocks and Commodities for sponsoring today's event. We appreciate all the work that you do for us. It's prize time. So let's go ahead and do a prize. This time we're going to do a number draw. So what I'm going to have you do is give me a number. What I would like you to do is actually provide me a number, anything between 1 and 10,855. Type it in the chat. We're going to do 2 winners, as we always do. And let me tell you what the prize is. I'm going to go ahead and pull that up. So 1 second. Okay. All right. I like this one, actually. Give me some numbers, guys. Thanks, Ken. All right. I can't give away prizes if you're not helping. Okay. All right. Okay. All right, Ken. We're going to go with the number you give, 10,750. Let me go ahead and take a look at that. No. Let me tell you the price. I'm still waiting for somebody to give me a number in YouTube. Give me a number, YouTube. The prize that we're given is called the McMillan Advisory Bundle. If you remember a couple days ago on Monday, we had Larry McMillan in here, one of the best, super good option strategists, wrote what a lot of people consider the Bible around technical analysis and trading options. And his name is Larry McMillan. What he's giving away is what he calls his McMillan Advisory Bundle. It's 1 month of the Daily Strategist newsletter, 1 month of his daily volume alerts, and 1 month of his option strategy newsletter. So thank you again for all of the presenters, and Larry included, for presenting at the event. Let's go ahead and figure out who our winners are. Neil, thanks for coming up with a number. Thanks, Metastock. Let's see. Ken, we're going to go with the number you gave us, 10,750. And let me go ahead and tell you who that is. That's going to be somebody that registers somewhat later. A10. That's going to be a Roger B. So I'm going to go ahead and kind of make a copy of that. We'll put it over here in the prize list. Okay, and then we will go with Neil. Neil has a number for us, 2935. Okay, and that would be Tammy D. Okay, and let me go ahead and make a note of that too. Tammy D. Let's see, do I have the country in this list? I erased the country. Tammy D with a Gmail address. So Tammy, congratulations for that prize. Let me go ahead and make a note of that. Okay. And there you go. Congratulations, everybody, for winning. Let's go ahead and go to the next speaker that we're doing. AJ Brown. I love this picture of you, AJ. Very stylish, very, very cool. AJ's been at a number of our conferences now. I've known AJ for a number of years. He used to live in San Jose, I remember, because we've had a lot of conversations about that. He also has, I think he's in Denver. Are you in Denver right now, AJ? All right, well, hopefully his audio is going to work when we actually go to talk to him.
I just had to press the unmute button. It's a user error. Yeah.
That is my kryptonite also, AJ. I always that's why sometimes when there's transitions, it takes me a long time to be like, where's my button?
I know, right? I'm currently at my beach home in Myrtle Beach, South Carolina, but we do have our main office. It's actually a little north of Denver in Fort Collins, Colorado. So yeah, we're all over the place here.
Cool. Yeah. Let's see. I just sent everything over to you. Let me see. AJ Brown is widely recognized as the most disciplined option trader. We've been actively trading equities and options since 1997. Coincidentally, I think that's the same year I started at Metastock, actually.
I think we've talked about that.
All right. Well, let's see. I can see your screen. I can see you. I'm going to get out of the way. Thanks for joining us today. Looking forward to it. It's all you. Uh-oh.
No worries.
You're cutting in and out pretty bad right now.
Yeah.
I'm only catching the first of every word that you do.
By the way, amazing. Am I free?
It's
frozen up.
Oh, okay. I think we're coming back. Maybe
I'll stop sharing my camera.
Jeff, if he turns off his camera, it might help. Oh, it looks like he may have already.
I thought he did. Yeah. Yeah, he's all of a sudden just chop. AJ?
Stop sharing.
We're off to such a good start, AJ. I can't hear you at all.
Okay. Can you hear me now, Jeff?
I can right now. Yes. It's not great, but Jeff, I can hear you now.
Okay.
It's okay. Rotate the satellite. I appreciate that suggestion, Michael.
And my little bit good enough.
Yeah, that's rough. Let's see. I'm not sure. I'm not sure if it. It says that it's almost internet related right now. I think it might be the wireless connection, AJ. But we are not getting much of what you're having to say. Mm-hmm. All right, let's see. All right. Well, I want to. All right. Hold on just a second for us, guys. Oh, AJ is gone. Let's hope. I think he maybe tried to reconnect. So let's go ahead and do this real quick. Let me go ahead and make me the presenter. Okay. And then we'll show this picture of him. And I think we have, let's see. Okay. All right, cool. I think we have no choice, guys. No choice at all right now, but to wait for AJ while we give away another prize. What do you guys think about that? All right, so in the interest of...
Jeff, I was just going to suggest you should give away something.
Yeah.
May I be of any assistance?
Let's have you pick out a prize. All right. So let me go ahead and go over to my magic prize list here.
Alrighty.
And let's see. We just gave away the Macmillan prizes, right? I love Larry. He does such a good job.
Yeah.
Okay. Let's go ahead and see the next list on the next prize on the list. Okay. And this one would be full year access to the ETF Sector Plus trading system. Value of $997. ETF Sector Plus.
Who provides that?
Well, it's a trade system indicator. I forgot to put who it is from. Give me just a second. We can figure it out in a second.
Okay.
Control B. I have everything but that. But Gmail's so good. So this is actually a price that's available from Jeff Dish yesterday. So Jeff came in and spoke yesterday. He did a really, really good job. And him and Mishti do a really good job all the time. So it's ETF Sector Plus. What I'm going to do is, it's a prize valued at $997. So
do you need a number?
The system trades the top 3 performing sectors according to the trade strength indicator. It provides with all the entry and exit information you need so you don't have to do anything more than follow the system. It also includes additional insight and opportunities to find trades by the discretionary trader. So there you go. That's the description of it. Now I know who it's from. Greg, give me a number. That number, do you know what the range is that we're looking for?
Between 1 and 10,585 or 4,000. I don't know.
10,855.
10,855.
So,
okay, I would say 777.
Ooh, okay. That would be Satish P with an AOL address. So that probably narrows it down. You'll know if we're talking about you with that particular one.
Hey, Jeff, I do see that AJ Brown has logged back in and his mic is live. You might want to, AJ, are you there?
I am.
Oh my goodness, I can even hear him.
Yeah, that's awesome.
I apologize, folks. I don't know what's going on, but I'm ready to get going. I just won't share my camera.
Yeah, I think that's a good idea. And you sound great right now, so don't touch anything. All right. I'm going to go ahead and make you the presenter.
Okay, and we'll get going. I'll try to shorten my presentation to keep you guys on time.
Take the time you need.
Okay.
I'll shorten mine later if I need to. So I don't see your screen yet, though. I can see it now. So you're good. We gave away an extra prize while you were gone. So.
Oh, fantastic. And I have to say that that Macmillan prize that you gave before I lost my connection was awesome. And so was that offer you made right before for the Magic Trader package. You guys should really take advantage of that. And this is from, somebody who has nothing in stake. Those are all great things.
All right. And your audio is now great. So I'm going to let you go. And I'm not going to touch anything on my end.
All right. Very good. Hey guys, my presentation today is called A Behind the Scenes Look at How I've Been Creating 7-Figure Income Selling Options, and pretty much some tools on how you can do it as well. And there's a lot of PowerPoint presentations, and my presentations are known for having a lot of notes. Also, I've got examples that I'm going to be showing you. So if you could, please take out a few sheets of paper. If you're taking electronic notes, get ready, because I'm going to talk a little bit faster. I'm bound and determined to keep Jeff on schedule here. So let's keep going here. Listen, we got a couple of facts happening in the market these days. The biggest fact is that there's a lot of uncertainty going on. We've had a week of rally, but before that, we had 2 or 3 months of some downturn. Who knows if this week is going to go out there? In the real world, there's all sorts of skirmishes. You never know what's happening. But in the markets, if you play it right, you can set yourself up for months, if not years to come. And that's a fact, right? That's something that one of my mentors from over 20 years ago told me. And so that's kind of cool. Here's the scoop. Money's not created, despite what the talking heads tell us, money's not created or destroyed in the markets. It really simply moves from one person's hand to another. And so the key is figuring out how to put yourself on the correct side of that transaction, right? I always hate it when those pundits are on the evening news saying $4 trillion was erased from the market today. No, it wasn't. Market is just a place where transactions go from left to right. So you just got to make sure you're on the correct side of the equation. So before I always get started, I like to know who I've got on the line. So if you could please answer this question for me. I'm wondering, are you guys out there because you want to learn how to invest yourselves? In other words, be the fisherman, be 100% reliant on yourself? Or are you looking to learn how to invest, but have seasoned investors review your investments before you make them? In other words, learn how to fish, but have expert fishermen there to help? Or are you like listening today because your main goal is you'd like to be there with the seasoned investors and follow along, taking insights from them? Or is it just something else altogether? What do you think? A, B, C, or D? Would you guys let me know just with a little insight as to, your main goals? Great. I'm getting all sorts of thoughts here. All right, it's a little bit mixed between all the extremes. So I'm going to try to cover as much as I can and see if I can appeal to all of you folks. So I always do this. I'm going to rush through this part because I always like to set the standard with this old comparison of getting the $50,000 paycheck right this minute, or would you prefer to get that penny that doubles every day for a month? Now, don't forget, the penny that doubles every day for a month comes with some strings attached. You have to learn how to double that penny every month, right? Or every day for a month. And there's work involved. There's activities involved. It's not just taking the payout up front. So let's run through the scenarios. After the first week of the month, if you took the penny, you're up to 64 cents. And you're kind of regretting at this point because you've been putting a lot of effort into, the activities to do this focus. But at the end of 1 week, 64 cents is all you've got to the end of your name. Then we come up to the end of the 10 days, right? That's the first third of the month, right? $5.12. Boy, that $50,000 sounds really good. All right, let's go to about 2 weeks. This is, if you think of a month as about 4 weeks, this is about halfway through the month. We're at $81.92. Man, we're starting to almost regret that we didn't take the $50,000 because we're already halfway through the time period and nowhere near even a exponential version of that 50,000. But now let's get to 3 weeks. Now the month is 3/4 of the way over, and now it's starting to make sense. You've got about $10,500. There's a couple of lessons here because at day 24, we finally surpassed the $50,000 and then it grows from there. A couple of lessons there is that number one, the penny was the right answer, but number two, there's going to be a lot of parlaying and focus and activities. And if you get distracted for a moment from a consistent practice, a consistent business of focusing on your investment in a certain way, if you get distracted by the next shiny object, you know, it's always on the back nine that you make the real gains. They talk about that. That's called compound interest. I'm not sure if it was ever really attributed to Albert Einstein, but they say it is. Compound interest is the most powerful force in the universe, and I would agree with that. Hey, I want you to take a look at this particular drawing, this chart. I'm going to come back and explain it more towards the end of my presentation. But as you can see here, we've got two curves going exponentially from the left to the right. We've got along the horizontal axis, we've got 1, 2, 3, 4, 5, 6, 7. We've got some gains that go all the way up to 180%. Key is that this is an exponential curve, almost like that compound interest discussion. I'll come back to this because this is actually an example trade I'm going to show you. So here's the scoop. If I there are folks that will tell you that they can double your money every day, but that's usually a rare occurrence, if ever. And if you look at the other days of losses, it usually doesn't play out. My goal when I was starting to be an investor, an active investor, a passive trader, was to figure out, how could I do this every year? And so if you reverse engineer this, right, you're talking about earning 6%. You want to write that down. Earning 6% on your money every month. If you do that, then your investment more than doubles every year, right? So if you start with $1,000 portfolio, which a lot of my program participants do, in a year, you've got $2,000, a little bit over. And then in 2 years, you got the $4,000. In 5 years, you've parlayed that into $33,000. And in 10 years, you're a bona fide millionaire. And I almost argue that being a millionaire these days isn't like it was when I was growing up in the 1970s and 1980s. Now you almost have to get to the status of a 10 millionaire for it to be significant, right? How many with the show of hands agree? That's what we call inflation, right? But still, in 10 years, if you're starting with $1,000 and you just stay focused, knowing that in the first couple of years, your efforts may seem for naught, but as you keep going and keep building the momentum, the other thing I like is if you can grow your portfolio to a $100,000 portfolio, you could actually generate $100,000 plus per year by focusing on these small goals, right? If we aim for the moon and hit the stars, that's great. But if we just focus on the moon every time, we'll get there. So I like this because the median income for a salaried position in the United States is $87,000, right? Now, of course, if you live on either one of the coasts, you know that that's just a pipe dream. But for everybody, it's this number. And so here, instead of putting in a salaried work effort, which is 60 hours per week is the typical salaried job, this is letting your money work for you. So what are we talking about? My focus is selling fade to decay, optimize option premium. Now that's word salad, isn't it? What we're talking about is profiting on time passing by. So I have focused on options since 1997. And a lot of people think options are a great substitute for an underlying symbol, stock, ETF, index, as a directional, kind of incorporating leverage. But they forget that there's other focuses, other influences on an option price. And one of those is time passing by, right? Because options are wasting assets. So I have been, for all these years, focusing on that. How do I profit? How do I make myself on the correct side of the equation of time passing by, which is a pretty reliable variable? If we ever get to the point where time isn't passing by, where 60 seconds doesn't equal a minute, and 60 minutes doesn't equal an hour, and 24 hours doesn't equal a day, and 365 days doesn't equal a year, we've got probably bigger things to worry about than, even investing our money for the future. So with that said, I want to just make sure you got this down. What minimum returns must we make monthly on our portfolio to more than double our money annually? Is it 0.5%, 1.5%, 5%, 6%, or 10%? Please go ahead and answer now. Do you remember? You could type it right into the chat. Absolutely. The number was 6%. So keep that in your thoughts. We aimed for 6% returns on our investment. Now, a lot of people who aren't familiar with options, they're saying, aren't these options risky? Well, remember, if you're trading underlying symbols, right? Stocks, commodities, indexes, ETFs, typical way to make money is if the profit, you buy low, sell high. And if you're elegant, you probably know how to make money by shorting, where you sell to open high and you buy back to close low. That's cool. You've got two directions. But the cool thing, and why I've focused on options my whole existence, is because you can make money also when things go sideways. You can make money on time passing by. You can make money even if there is increased fear in the market or increased confidence in the market. In other words, the last time mathematicians looked at the options vehicle, they came up with, instead of one or two different ways to profit on patterns that you find in the markets, 27 different ways. So that's why I focus on options. In fact, they're the opposite. They were created to hedge against risk. So, okay. Some people are saying, and I know we've got all experience levels here, but some people are still wondering, well, what really is this option? So from a technical point, it's a financial instrument. It's called a derivative. They're typically bought and sold to hedge risk. That's against the equity options are against stocks, indexes, and exchange traded funds. That's not how I'm using them, right? I'm selling their premium. You might want to write this down. Selling their premium to generate income. I'm going to just buzz by this. A quick question. Have you guys heard of me before? Because I know that Jeff and I go way back, but maybe I'm new to you guys. Just give me a little Y or N in the question and answer area, and I'll know whether to spend more or less time on telling you guys about me. I don't think I have to go into too much information. I can get right into the meat of the presentation. I got all these different, assets out on the web. So if you ever want to look me up on YouTube or listen to my podcast or Facebook, Twitter, I've got articles you can go check out. I've got white papers I've written. You can reach out to me directly, either through my website or by calling me on my phone. All that information there. By the way, if you're on any of those socials, you're welcome to hit that like and subscribe button. It always gives me some extra cred in the world. I founded this company called Trading Trainer. As Jeff said, a lot of people call me the world's most disciplined option trader. I think in reality, behind my back, they call me the laziest options trader. I like to think of myself as an efficient option trader. That's because I'm an end of day trader. I don't like to spend my hours during the day watching charts. I like to come back for a few minutes every evening, do what I have to do, set some automatic trade orders for the next day, and be done. In fact, when I left my job with Hewlett Packard in 2005, never to have a job again, the last thing I wanted to do was create another JOB for myself, which I always thought was an acronym for just over broke. So I think of myself as somebody who's very efficient. I put the least amount of time, effort, emotional distress. If you're an active trader, you know that there's those ups and downs. And I try to get the most in return. I've been doing this since 1997, published this ebooks and published my newsletter every night since 2002, ebook in 2005, home study course you see on a lot of successful option traders' shelves. And just to let you know, I started from square one too. I started with a bunch of engineering degrees from UVA and University of Arizona. And then I've also got a strong background in commercial business and investing. In fact, when I went into the workforce, I never even used my engineering degrees. I went right into marketing for companies like Hewlett Packard and C&D Battery Technologies and things like that. Most recently, in my late 30s and all through my 40s, I just turned 50 this year. I became very good. I've been studying up on how to teach people using accelerated learning methods. And so this is kind of my resume. But when I first started trading in 1997, I really lost big. In fact, this was before a lot of the internet stuff. What it was all about then was going to a Saturday half-day event. And then at the end of the event, they made you pay a lot of money to come back for the all-day Sunday. And then at the end of that event, you'd pay a whole bunch of money to jump on a plane and go spend 3 or 4 days at some destination. I don't know if any of you guys resonate with that model that was in there. And a lot of those folks, they were, selling snake oil. And I tried to put into effect what they were teaching me. And not only did I spend $27,000, and back in 1997, $27,000 was a lot more than it is now, but I also gave back $85,000 to the markets making stupid investments. That was more than I spent on both my graduate and my undergraduate degrees in the late 80s, early 90s. Here's what I learned, because it took me 6 years to really get things going. It took me until about 2002, 2003 to get my portfolio successfully and consistently going. Here's some of the things you might want to write down, what I learned. This is just a bonus. Ready? Number one, focus on what works with you. Don't chase shiny objects. And pick something that works with your lifestyle. I've had a lot of people, I also teach a full-time options trader course. I've had a lot of people join that course only to find out that their lifestyle didn't allow them to be a full-time active options trader, right? So be honest, take inventory of what your life is, what you can actually put towards being an investor, and then match up what you're going to do, match up what you're going to do and what you're going to focus on so it fits into your lifestyle, not in the future, but now. Also, I would suggest, because this is what I wound up doing, hire a mentor who is not only currently doing what you want to be doing, but also knows how to teach, right? It's called guided discovery, way better than the way I learned over those 6 years, which was mostly trial and error. When I work with folks in my program, we have a guarantee that in 6 months they'll have it down pat. And that's because we have a learn while you earn type thing. So we want you to be doing, not just, learning and asking questions. Also, I recommend you join an investment group, right? Look over each other's shoulders. At HP, I learned something called leveraging with pride. At HP, instead of just developing a new printer or computer, we would buy the competition. We would buy the Canon printer, take it all apart, find out how it worked, and then incrementally make one thing better, put it together and put our name on it. Now, in grade school, that's called cheating. But in real world, it's called leveraging with pride, and everybody does it. And I don't know why we chastise, I'm getting on my soapbox here. I don't know why we chastise kids for leveraging with pride, because that's how the world works. You're always making incremental gains on what the last person did. So that's what you should do in an investment group. Don't be a lone ranger. You want to both contribute, share what you're doing, but also take what other people are doing and see if it works for you. And finally, surround yourself with like-minded investor. There's a lot of naysayers out there, and they will always try to convince you that pursuing this lifestyle of investing. I've been a full-time investor and trader since 2005, and I would never go back. But I realize I'm in a minority, and if I listen to all the folks that told me it wasn't possible, I wouldn't be where I am right now. So write those 4 down. Okay. In the honor time, there's one more thing I always like to tell everybody. I started a foundation where I take historically underserved inner city kids off the street. I teach them the same course I teach my program participants who buy the course, and it's awesome. I started this in 2003, and at this point, we started in Denver, but at this point, we're based in Chicago. We've got a partnership with the CBOE, and we last year, after the COVID, we had to stop for 2 years, but last year we actually graduated more than 100 of these kids through my program. So just wanted to put that out there because I think this is my favorite part of what I do. In fact, what we do, what we do with our paid program, the one that most people sign up for, is we take all the profits from that and we put it into this foundation. I don't actually personally make any money by teaching you folks, but what I do get from working with you folks is a better way to trade my own portfolio. My family and I live off of our investment dollars that we make off of what we do time for time. So let's get back to the topic here. How do we sell premium? Well, we're going to focus on 4 simple transactions. We're going to write some covered calls. We're going to write covered puts. A lot of people understand covered calls, but not so much covered puts. This is the opposite, right? We're going to flip the covered call upside down, make money not just in the neutral or up, but make money in the neutral or down. We also can supercharge these things. We can write covered calls against leaps. For you academics out there, that's called legging into bull call diagonal debit spreads. And we can write covered puts against leaps. That's legging into bear put diagonal debit spreads. Realize that 3 of these, and you might want to put some marks on these, right? These are cash trades. And that's good because a lot of my program participants are doing what I do in their retirement accounts. And those are traditionally almost always cash accounts. This guy over here, the covered put, is a margin, requires a margin account. And so just note that, because if you're doing this in cash accounts, you could still get the same effect from the covered put by structuring it as a bear put diagonal debit spread. But you just want to know which strategies work for what you're working with today. So some people are saying, hey, AJ, you're throwing around this term option premium. What is it? So you've got your in the money value and you've got your premium value. Whenever you look at an option price, realize it's made up of those 2 components. Now, academics out there, in the money, you can correlate that with intrinsic value, premium extrinsic value. Now, some people call extrinsic value time value. That irks me a little bit because there's way more in that premium component than just time. So I tend to back off from calling it time value. I call it premium value. So here's an example, right? And I used end of day prices from yesterday when I was putting together my presentation today. Yesterday evening, if we bought Ford shares of stock, this is the covered call example, we could buy a share of Ford stock for $10.17. And then we could sell back the Ford December 15 $10 call, we would make 51 cents per option share, right? So that would add like a discount on the Ford stock. We'd automatically have lowered our break-even price on our initial position by getting that credit. This option that I sold also acts like a coupon, right? Because as it gets closer to its expiration date, it's worth less and less. Options are sold in lots of 100. So every time I sell this, it's kind of like earning an instant dividend, right? I'd get $51 for every option contract I sold. Let's work through the scenarios. Number one, what if Ford closes above $10 on its expiration date of December 15? All right, so we paid $10.17 for Ford. We get $10 for being exercised or called out. So that results in a 17-cent loss. But guess what? We collected that 51 cents that kind of offset these losses. We wind up walking away from the deal with 34 cents per share. That turns out to a 3.5% ROI. Not bad for, about a month, right? We're aiming for 6%, so it's not good enough. But, some people are putting their money even into treasury bonds now. Making 3.5% in just a month is actually pretty good, even compared to what you can do in long-term bonds these days. But now, this is the more desirable case. What if Ford is going sideways by December 15th? It winds up closing around $10, right? We spend $10.17 on the stock. We got that 51 cents for selling back the call. The call expires worthless. We get to keep that 51 cents. We've made 5.3% ROI so far on our deal. And guess what? We get to do it again next month. In fact, we get to do it again and again and again. This is, again, the ideal situation. This is what, when we're searching for positions and patterns to trade against, this is what we like to do. Create these ongoing streams month in and month out. Now, of course, what happens if Ford drops by December 15? So if Ford drops by December 15th, one of the cool things is we collected that 51 cents. That lowers our break-even price to $9.66. It creates a profit buffer of 51 cents. Now, in a few moments, I'm going to show you how we can reduce our risk on reward even further than this. But just know this strategy has built in a profit buffer that it needs to drop all the way to 966 before we're even in the red. So I also would like to quickly just show you a real live trade. That was just a theoretical trade. Let me pull this one up here. Here it comes. This is from our trade worksheet. This was on the silver ETF. On October 9th, we bought 500 shares of stock at $20. On October 17th, a few days later, so we legged into these positions. That means you do the legs separately instead of all on the same day. We were able to sell the October 21 calls. We got 24 cents a share. And then we just waited. So we did one transaction on October 9th. A few days later, we did a separate transaction. In this case, the option did expire on October 20th on its expiration date, and we did get exercised. Again, the ideal would to have this keep going, but even if we got exercised in the first round, we got exercised at $21. We walked away with only doing 2 transactions. We walked away with 6.1% ROI. Not bad. That's an example. Now, let's keep going here. Let's check your comprehension. What does investing by selling premium create? I want you to answer all that apply. Does it create an instant dividend? A discount on a security? A profit buffer? An expiring coupon? And Kenneth is asking, how do I select underlying stocks? I've actually got some screeners that I use that I have built and I'm constantly tuning in our program. So I use those screeners, but you're looking for sideways choppy. That's the best pattern for selling premium against. If you answered this question by saying all of them, you're absolutely right. Okay, now I'm going to start answering question or asking you questions, kind of foreshadowing. So here's where it's going to get a little bit more complicated. Hey, how can we lower the amount that we're investing, increase our returns, and even convert a margin trade into a cash trade? Should we sell out in time options? Should we replace the security with options trading at parity? Should we give up, just focus on mutual funds? Or is what I'm talking about not possible? What do you think, folks? Now, a lot of folks are actually typing in sell farther out in time options. Let me warn you against that, because when you sell an option for its theta decay value, for the fact that it's a wasting asset, what happens is the more time you add on, the less profit you get. So it doesn't actually benefit us to go more than about, at most 5 weeks to expiration when we're selling premium. So I warn you against A. It's actually B, right? It's actually B. You might be saying, okay, again with the word salad, butthead, what are you really saying? What are options trading at parity? So option premium is the most when an option is at the money, right? But when we go really deep in the money, it winds up losing its premium. We target less than 5%, and it's almost completely in the money value or intrinsic value. In other words, we go deep enough in the money to where the option actually behaves exactly like the stock or the index or the ETF, dollar for dollar, but it's at a cheaper price. And you might say, okay, but these options have expiration dates. How far out should they go? Now, this was interesting. We go far enough out in time because we want to collect as many months, or if you're selling weekly options, as many weekly options as possible without having that initial covering position expire on us, kind of, killing a good thing. So we want to go out far enough so that its expiration doesn't interfere with us. Turns out that magic number is at least 8 months out. Write that down. Gonna go out at least 8 months. So when we're substituting options, at least 8 months out, really deep in the money, trading at parity. A lot of times we go for the leaps. Leaps are those January options, only because they have a lot of liquidity. So let's go through it, that same Ford example, but let's use a substitute option. So remember I said that Ford example, we could have used $10.17 per share. You can substitute that with the Ford June 2024 option, $6 strike price. That thing is only $4.30 a share. Check it out. This particular option has 97% in the money value and only 3% premium value. It's going to move almost dollar for dollar with Ford stock, but now we're incorporating a little bit of leverage. I don't mean out of the money, I mean in the money. So for instance, if I buy this stock, this back month option for $4.30, I'll still sell the near term at the money option, 51 cents back. That gives me my instant dividend of $51 per option contract sold. What happens if Ford closes above that $10 strike price? Okay, so we paid $4.30. We get $4. There's a 30-cent loss there. However, don't forget we collected 51 cents up front. That gives us a profit of 5.5% ROI if we get exercised right away. But now, what if we're going sideways on December 15th. This is the ideal case. Pay the $4.30, get the 51-cent instant dividend back, keep the 51 cents, make 13.5% ROI so far, and then we're going to do it again and again and again. This is the type of stock, the sideways stocks that we look for. Now, of course, there's always the question about what happens if Ford drops. We have that built-in profit buffer. Break-even price gets reduced. So in other words, even this strategy stays in the black for quite some time. Now, I am going to tell you about how we reduce the risk, the risk on return even further. But just know, even this strategy has a built-in profit buffer. Now, this is a perfect time, before I show you this, to show you another real-world example. We did a trade recently on AT&T. So on September 11th, we bought some AT&T June 2024. That's when it expires, this June of next year, $10 calls. We only had to pay $4.50 for these things. We bought 20 contracts. That's 2,000 options, right? About a $9,000 investment. About 11 days later, again, this is called legging into the position, timing your position. We got our 47 cents per share back. That reduced our break-even price down considerably. And then just like we saw with the silver ETF, when it came time for the option to expire on October 20th, we did get exercise. So again, we don't always get the ideal situation where these things keep going on, but we got exercised. And the thing to know about these diagonal debit spreads is when you get exercised, you get the difference between the two strike prices. So the difference between the 15 and the 10 is $5. When all was said and done, we walked away with 21.1% ROI that month on that trade. So that's pretty awesome. Again, 2 transactions. What happened on October 20th happens automatically. You don't even have to be there for that to do it. The brokers take care of the exercising and all that for you. Not bad. 21 point. Remember, 6% is our target. Aim for the moon. Sometimes we hit the stars. I'll just run through these slides. I want to try to. So let's jump to the next part. How can we drastically reduce our risk on return? What do you think? Should we sell half as much option premium? Maybe we should sell farther out in time options. Maybe we should collar the investment by marrying a protective option. Or is what I'm talking about not possible? What do you think the answer is? A lot of you are answering C. You're spot on. I'm just going to jump right now to a real world example. This is one of my favorite because this is one that lasted month in, month out. We started in 2020. The trade didn't wind up ending until 2022. But let's just kind of go through this one. I bought 600 shares of Pan American Silver. Back then, it was going for $34.73 a share. A few days later, I sold my premium. I made $1.76 a share. And then at the same exact time, I bought a protective option that was 3 to 6 months out. And it was at a lower strike price, right? I paid $4.75. What happened when it expired? It expired worthless, which means I got to keep the $1.76. But here's the beautiful part. I was able to roll out my protective option. What I paid for $4.75, as soon as that option premium expires, I don't really need the protection anymore. The protection protects the option premium. So I can sell it back. And what I'm doing that's kind of unique is because I'm timing and legging into these positions and legging out and rolling out, The protective option offers me protection, but instead of costing me money, I can roll it out at a profit. So now I'm creating two sets of profit. I get $1.76 for selling the premium, and look, I got $1.15 for rolling out the protective option. I did it the next week too, the next month as well. Sold $1.47, bought the protective option for $3.01, let time go by. I got to keep the $1.47 and I got to roll out the option, making a 61-cent profit. I just repeat this over and over, month in and month out. But the other thing I want you to notice is the break-even price. Notice what happened very early on with our protective option kicking in at $34 and our break-even price very early on going below $34. What does that mean if you're in it for more than you're protecting, for less than you're protecting yourself at? Here, let's get back to the presentation. This is that exact trade. So here's our break-even line. You can see the two lines here. This is if we get exercised or if we get bailed out. The bailed out is if the stock goes against us. If we get exercised, the stock goes in the direction of the initial position. The average time we stay in our positions happens to be 5 months. Now, that's a flat bell curve. A lot of times it's much less. A lot of times it's much more. But 5 months is where it tends to find its cap, right? So if you have a trade that lasts 5 months, you make 65% if it goes in your direction, or if it goes against you, you make 50%. Either case turns out to be pretty fantastic. Right? I don't care now whether the position, a lot of people say, well, what's your win-loss ratio? If I lose, I still walk away with 50% ROI after 5 months of being in this position. Does that make sense? It's because I'm profiting on time passing by. The other thing to notice is right here. Notice that no matter whether the underlying goes for me or against me, after the first month, again, it doesn't matter. Because if it goes against me, I'm still walking away with a profit. And as I get farther and farther into this investment, time-wise, it soon doesn't make any it doesn't matter if the pattern works for you or against you. It's all about time passing by. As soon as you have a lower break even than what you're protecting the trade with your protective option or your stop loss order, you have a risk-free trade. Very cool. So what do we have when our cost basis or our break-even price is less than our protective bailout? A risk-free investment. So let's review, and I apologize for not being able to get to talking about covered puts and about the bear put diagonal debit spread. All we did was briefly cover on the covered calls and the bull call diagonal debit spread substitute. So know that there's a whole other half of the equation, which if you're going to delve into this more, you want to do some self-study on the covered put and on the bear put diagonal debit spread, because in 2024, I'm almost 100% positive you're going to be using those strategies. Here's the 3 steps. Please write these down. Buy or short an underlying security, or you could buy that substitute option trading at parity that we talked about. That's step 1. Step 2, sell a near-term at-the-money option for its premium value. Create an instant dividend and log in that profit buffer. And at the same time you do that, collar the position with a married option that's 3 to 6 months out to protect your investment. And then rinse and repeat steps 2 and 3. Again, this is not day trading. In fact, for each position, we're only doing 1 or 2 transactions per month or per option cycle. If you're going to get into the weekly options, it might be a little bit more often than that. Now, a lot of people were noticing that I was timing my position. And somebody asked, what are we looking for? Are we looking, what pattern? I like the sideways choppy patterns, the one that other people say they can't trade. And so, for instance, if you're doing the covered call or the bull call diagonal debit spread, you do it at a bottom, and then step 2, you do at a top. That option expires on its expiration date, and then you roll out the protective option, rinse and repeat, rinse and repeat, rinse and repeat. And what we didn't talk about is if we're starting at the top, this is where you can use your covered put or your bear put diagonal debit spread. Start at the top. Then at the bottom is when you sell the put premium, you buy your protective call. The put premium expires on its expiration date. You roll out the protective call, rinse and repeat, rinse and repeat, rinse and repeat. So one thing I'd like to do, and I'm really going to run through this because I know the next speaker is waiting here. How would you like to never miss a pick? Minimize the amount of time you spend away from your loved ones, your passions, your career, whatever, gets you going. And of course, have support whenever you need it, because that's what it's all about, right? It's about saving your time. It's about creating your clarity, and it's about getting results. So I hope it's okay if I just take a minute here and tell you about my materials, my training, and my tools to see if they might be a match for some of you. What I do is for anyone who doesn't want to pay for a bunch of different data subscription, wants everything they need in one place, doesn't want to miss any of these opportunities, wants to spend more time doing other things, doesn't want to do this alone, wants step-by-step instructions. This is for someone who wants to get consistent and reliable results. So I'm just going to show you very quickly in our, this is what the web portal looks like. So when you join up with my program, you get access to this web portal. We have workshops every week. These are hands-on workshops where folks are actually, giving me and my coaches candidates that they think would be good candidates, and we give them their feedback on it. And then we pick the candidate of the week, and we actually plan it out in front of everybody so that everybody can take the trades on them, right? We also have a once-a-month learning webinar. We have all of the replays of these monthly learning webinars and these weekly workshops. We've got all of our screeners. We've got the tutorials. We've got frequently asked questions. And here's the part I like the best. We want you to actually, use our tools. We've got all sorts of cool tools that you can download. Use our tools, plan out your trades, and then before you do the trades, send them to us. So as long as you're part of the program, you have unlimited, send us your trade plan. We'll review it and give you the feedback so you're doing, you've thought it all through, and you just have to follow the recipe once you've planned your trade. Plan your trade, and then you can trade your plan. It becomes quite neat. We got a cool thing going here. So I guess the question is if you got the video tutorials, think about just what it is in your mind each one of those things is worth. The lectures, all the screeners that we have for finding the candidates, the planning tools we give you to make planning easy, the weekly live workshops and their replays. There's actually people in our program who keep renewing because they like the weekly live workshops. They're like, why would I go off and try to do this on my own when you do one every week? The trade reviews where we, look at your trade planning. What is that all worth to you? And then because of this conference and because Jeff is so awesome, I want to throw in a couple of bonuses. First of all, here's a double your money back guarantee. So I want you to do this with me for 6 months, not because I think it's going to take you 6 months to figure out how to do it. I think you'll probably figure it out in a week or so. But because I want to be there, I want you to join our workshops. I want you to learn while you earn. I want you to be doing it with us for 6 months. I want to be looking over your shoulder. I want you to send in your trades for review so that we can make sure before you actually put real money towards it that you're getting our feedback. And so do our program for 6 months. And if you're not turning a profit by the end, I'll give you the money you invested in our program times 2. Double your money back guarantee. I've been offering this guarantee since we started the program, and I put my money where my mouth is. Also, I want to give you a session with one of my coaches, right? My coaches are really good. If you know where you are right now and you know where you want to be, they're really good at helping you figure out what you need to do to get from point A to point B. So what's it all worth to you? You got the base, and then you've got your double your money back guarantee and your strategy session. So think about that. How much is that really worth to you? Because it's different for everybody. Here's the price you would find on my website. It's about $100 a month, $597. It's a flat fee. You get the 6-month program. I'm not going to ask you for any other money. It's no other charges. There's no subscription. And as part of this conference today, I'm lowering it by $100. In fact, in order to do that, you have to go to this website, optioninvesting.org/Metastock, and you have to put in the promo code. So if you go to that website, it's going to come up with the regular price. Let's put in that promo code. And I'm actually doing this in real time just to make sure my programmer set it up last night. It's 100 capital D, capital I, capital S, capital C. That's short for discount, 100 disc. If I click apply, sometimes I do that and it doesn't happen, but it did happen. So we're good. It dropped the price by $100. Now this is limited time, right? In fact, we're probably only going to honor this through Sunday. So if you want to take advantage of the $100 discount, please, jump on the bandwagon here. If you've got a mobile phone, you can just scan your screen right now. Here's a QR code to that website, optioninvesting.org/Metastock. And please write down that promo code. And of course, if anything's going wrong, you could just call us. Our phone number is right there. Call us and we'll make sure that the order goes through. We'll process it over the phone. And again, it might not be right for all of you. In fact, Jeff, thank you for allowing me to have the couple of extra minutes. And thank you.
Hey, thanks. Great job. And I'm glad that the audio held up for you. It sounded great as soon as we got you back.
Embarrassed.
Yeah, no worries. It happens. Like, I'm just glad it wasn't an hour of us trying to go. That would have been that. So I really like the way I said this to the guys. I think you do a really good job with the presentations. I like the examples. I like all the questions. We did have a question in YouTube that I'm going to ask you real quick. And I think it's, do you have any brokers that you like?
I'm pretty much broker agnostic, but I sure am on my radar. I've been playing around a lot with Tasty Trade. They're my new kind of who I'm playing around with and have the most interest. They got a lot of benefits. I use Metastock for my charting. I use Metastock in order to understand my timing. But our program is really around being broker agnostic. So if you've got a favorite broker and they'll deal with your options, we also have a couple of tidbits on how you can negotiate with brokers, because nowadays, honestly, you can take your money and run to whatever broker you want in a moment's notice. So do that. Realize they don't have. There's no commitment in anything like there used to be 20 years ago where, you made a relationship with your broker. So just take advantage of all these things. Realize they don't love you, and you can definitely abandon them if they don't treat you right.
All right. Thank you very much, AJ. Appreciate it.
Word.
All right. Very cool. Let's go ahead and kind of move on. Let me go ahead and let's do this. Wait. Okay, there we go. All right. I want to say thank you to CMT Association for sponsoring today's event, one of our 3 sponsors today. You can find out more about the CMT Association at cmtassociation.org. You can also call them at 646-652-3300. We will. That's a really good question, Oscar. Unfortunately, AJ's not here, but you can give him a call and he can help you answer with that. 970-266-8146. Thanks for the question. Unfortunately, just a little bit behind the wire there. Anyway, we appreciate CMT Association and all that they do. We're going to give away a prize real quick. I'm going to have you give me a number. The prize that we're going to give away right now is an Around the Horn book. I need a number anywhere between 0, actually go with 1, and 10,656. Go ahead and start typing that number. And while you do, I'm going to explain what this prize is. This is going to be one of these Around the Horn books, probably this very one that I'm holding right here. And I'll mail this to you. I'll go to the post office myself and send it out if you win. And now what I need from you guys, give me a number. Any number will work. I'm just waiting for somebody to type a number so that we can kind of get going. So numbers. Jackie, thanks for picking a number real quick. 875. Let me go ahead and kind of pull that out real quick. Okay, Timothy J. Timothy J, you're the proud winner of the book. I'll make a note of that in just a second. Thanks, everybody. I hope you're enjoying everything. Again, we're Metastock. You can get an extended trial. If you just go to metastock.com/conf-promo, you can give us a call, 800-882-3040, or metastock.com/sales-chat. Our next presenter is Zaheer. Zaheer has spoken at the Metastock conference. I think this is either a second or third time. I do know that we've been working really, really hard on getting something ready for this conference, and Zaheer's going to be showing it off today. And it's quite extensive in terms of what it is. So we're very, very happy to bring you in here, Zaheer. I'm going to go ahead and go ahead and make you the presenter. And we'll go ahead and get you started. How you doing, Zaheer?
Hi, Jeffrey. Hear me okay?
Right. I can hear you. I can see you. I can see your screen. Fantastic. Everything's looking good. We're starting a little bit late. We've been running a little bit late. I don't want you to worry about it too much. I'm next. So take as much time as, within reason, take as much time as you need, and I'll see you. I'll be here if you need me.
Fantastic. Okay. Should I jump on in?
Yep. It's yours. Go.
Okay. Excellent. Right. Hi, guys. Welcome to my presentation, the Market Advantage Toolkit, your upgraded solution. As Jeffrey alluded to, we've been working extremely hard over the last 3 months, I think, 3 or 4 months, to get our add-on ready for Metastock. So I'm really excited to be able to present this for you today. So let's dive in. First, a little bit about myself, my investing journey, how I've come to this point in my life. I started investing in 2007, 2008, specifically trend following, which I'm going to really talk about today. And my goal is really to get trend following back on the map. So I hope what I share with you today really resonates. Now, trend following came about in my life after I read Way of the Turtle by Curtis Faith. Guys, if you've not read this book, I highly, highly recommend reading this. It was an absolute game changer for me when I came across this book. Now, here's the thing. The reason why it really resonated with me was that if you look at this table is taken from Excess Returns, a comparative study of the methods of the world's greatest investors. It's there in the bottom right corner. Another book you may want to read. If you look at this table, notice at the top, you have trend followers. Richard Dennis was the pioneer behind the turtle trader experiment. If you're not familiar with the turtle trader experiment, guys, once again, I highly recommend reading it. Just to give you a sort of overview of the book, Richard Dennis and William Eckhart, who's in the second blue square there at the bottom, they both were very good mates. They took a bet. Richard Dennis believed anyone could be a trader. William Eckhart, he was a bit more of a snob. He believed you were born a trader. So it was that argument of nature versus nurture. What they did was they put an advert in the Wall Street Journal. This was in the 80s, guys. They invited people to an experiment where they took a bunch of novices who had no experience trend following. They taught them Richard Dennis's trend following strategy. I believe it was in a matter of weeks, like 2 weeks or 3 weeks, something like that. Over the next 4 years, they turned over almost $200 million. Fascinating, fascinating story. Now, not everyone was successful. Some people were dropped from the experiment. And the simple reason for that was because they couldn't follow rules. Those who followed rules were very successful. Those who didn't follow rules were dropped from the experiment. And imagine, guys, they were all taught the same rules in the same room. So it's just a simple process of taking a process, executing it, and following it to a T. Now, also note where Warren Buffett, Charlie Munger, and Benjamin Graham come in this table. Who do we hear a lot about more often than not? Are the guys in the red. Who do we hear very little about? The guys in the blue squares. So we have to really question, why is this? Why is it that Richard Dennis, who's one of the most successful traders we hardly ever hear about, yet Warren Buffett floods our media channels? And that took me on a journey as to where I am today and why I'm such a big advocate of trend following. Now, at the time, this is back in 2007, 2008, I was working in photography. That was my day job. We were in advertising photography. We had clients like Coca-Cola, Audi, Whirlpool. We were doing editorial work for Harper's Bazaar, Tatler, Vogue. So, you know, we were doing some really, really interesting stuff. At the weekend and in the evenings, I was also a TEFL teacher. If you guys aren't familiar with TEFL, it's teaching English as a foreign language. So the reason why I got into TEFL is that after my graduation from university, I traveled, I lived in Asia teaching English, had a really good time. There's no money in it until I came back to the UK, started working evenings, teaching Japanese businessmen English. Ultimately, I was making and saving really good money from all the days that I was working, all the jobs that I had, but I was short of time. I was often working 7 days a week. What I was seeking was an investment strategy that fitted around my very, very busy lifestyle, which also included, by the way, the gym, boxing, traveling, family and social life. I had a pet lizard who passed away a few years ago. I had her for about 11, 12 years. I was busy. I had things going on, including alongside the jobs that I had. But what I wanted was a strategy that did not compromise on time or profit. And that is precisely why trend following really resonated with me. I fell in love with the simplicity of charts, so technical analysis, to make my investment decisions, but holding positions like an investor. This is what really made sense to me. Look at the charts to make my decisions, but hold my positions as an investor. So this meant that I could manage my portfolio in minutes a day at the end of each day. I could continue to manage the demands on my lifestyle, but implemented simple, repeatable, and highly effective processes that compounded my money in the background. I learned to leverage powerful investor tools like Metastock, use my tech background because I've actually got a degree in software engineering, believe it or not, to learn about and create my own bespoke charting tools. And I have never looked back. What I created, guys, was a perfect hybrid approach. I used charts like a trader, but held and compounded my positions like an investor. I've used, perfected, and improved the same strategy for over a decade. It then became my goal to put trend following back in the limelight because even today, guys, there's very little information out there on good trend following strategies. There's plenty on day trading. You know, how successful you'll be at day trading remains to be seen. You know, the success rate for day trading is very, very low. There's, of course, a lot of information on value investing, but we've just looked at value investing and where Warren Buffett comes in that performance table. Remember, guys, a lot of money, or a lot of Warren Buffett's wealth actually comes from dividends payments. He doesn't have a prolific stock picking history compared to, say, Richard Dennis. But of course, you know, his dividends payments are in the billions. So you have to question, is that the right approach for you as well? Trend following, there's very little information out there, which is why it then became my goal, my mission, to make trend following more accessible to people. Now, ultimately, what's happened over the years is that trend following has been buried under the online misinformation of far lesser strategies, which is not appropriate for savvy, busy retail investors like us. Since I started my journey, I've now contributed. I've built up a profile, which I'm very proud of. I've been able to contribute and get my message across to some amazing platforms out there. Of course, I'm working very closely with Metastock now. If you search for my articles on Benzinga, I've been contributing to Benzinga for a number of years. Earlier this year, Pepperstone flew me out to Dubai to do a presentation. So my message is really getting out there in terms of how to invest in a very savvy and particular way for busy, everyday people like us who've got money, who've got families, who've got careers, jobs, but ultimately want to compound our money away so that we have a very comfortable future and a very comfortable retirement. Ultimately, also gain a set of skills that we can then pass on to our loved ones. Because guys, ultimately, the schooling system is not going to teach your kids how to invest. The schooling system is about building careers. You have to take the responsibility of learning how to invest, develop these skills, develop a large pot of money, pass that down to your kids to then continue the good work that you've set in motion, because no one's going to do that for you, certainly not the schooling system. I'm now the co-founder of the Phoenix Academy. This is our education academy where we teach people what we do here in terms of trend following. And as of July of this year, we had our fund, the Reversy Fund, incorporated in Luxembourg. So this is a very big deal for us. It's a fund for sophisticated investors. Of course, to have a fund incorporated in Luxembourg, you've got to have a track record. We've had the last 3 years of our track record audited and verified. So we are legit, and we're doing very, very good things now in this trend following investment space. And ultimately, that's all because I learned to follow and invest in stock market trends. Remember, guys, I've got a degree in software engineering, which I never really pursued. I worked in photography for many years. I was an English language teacher. I've got no background in finance or economics. I've never worked for a hedge fund or in the city. Ultimately, I've just learned in terms of what's available out there and got it working for me. And that's where I am today. And the really exciting news, as of October 2023, our complete trend following system, which we call the Market Advantage Toolkit, is now on Metastock. As I said, we've been working really hard over the last 3-4 months to get this ready, and is looking absolutely fantastic. And this is what I'm going to dive into today. So the question, is it possible to get consistent returns from the stock market, returns that outperform the indices from the comfort of home without giving up your life? I'm going to say that again. Is it possible to get consistent returns from the stock market, returns that outperform the indices from the comfort of home without giving up your life? And of course, the answer is yes, absolutely. And the Market Advantage Toolkit will help you do that. Now here, there are 3 simple steps to achieving consistency. So let's dive in, because I'm going to break all 3 steps down, and this is where the Market Advantage Toolkit comes in. So step 1, when to invest for maximum ROI. Well, this is market conditions. What I want you guys to grasp as I go through this presentation is how we are constantly stacking the odds in our favor. This is what we do as investors. As investors, we have to identify when is the right time to invest, what are the right assets to be investing in, and how to invest in those assets. That's ultimately what investing is. So we have to start by identifying the right market conditions. This is step 1, when to invest for maximum ROI. Very simple. Use the S&P 500 and combine it with the 200 simple moving average. This is what the S&P 500 looks like right now. I've just taken a screenshot of the chart. Now, what you have at the top is the weekly time frame, and at the bottom, you have the daily time frame. The black line going through each time frame is the 200 simple moving average. Just a bit of a history lesson, guys. Old school traders used to draw charts by hand. We have the privilege of charting software, technology that does all the hard work for us. But old school traders didn't have this luxury. So they had to draw charts by hand. Because they had to draw charts by hand, they were very selective with the information that they put on their charts. What they discovered was that the 200 simple moving average was a proven indicator of the long-term trend. If assets were trading above the 200 simple moving average, they would look for long positions. Below the 200 simple moving averages, they would take short positions. Institutions still use that logic today. We as trend followers still use that logic today. Notice we're still using proven old school techniques that work. We're just using a layer of technology to remove all the boring work. All we then need to do is use that technology to make the right decisions. So it's very simple. use the S&P 500 in relation to the 200 simple moving average to determine what kind of market conditions we are in. Now, some of you guys will know that the S&P 500 between September and October of this year fell around 9.5%, 10%. But since the low of October, it's done a reversal and it's moved back above the 200 simple moving average. So this is what's happening right here. It's moved back above the black line, the 200 simple moving average. On the weekly, it's remained above the 200 simple moving average since actually 2010. If we ignore this sort of blip around Corona, where it fell below the weekly 200 simple moving average, the S&P 500 has been trading above the weekly 200 simple moving average since 2010. So mostly we are bullish. This is something that you have to be familiar with. We are mostly bullish in the stock market. There are particular times when you may want to consider shorting the market. So here's just a quick summary, guys. For a bull market, we want to be above the daily and the weekly 200 simple moving averages. Those are example years. For a bear market, you want to be below the 200, the daily and the weekly 200 simple moving averages, 2007 to 2009, the 2000 crash as well was another year that happened. And then, of course, we have sideways markets. This is where we want to stand aside, 2009, 2022, when it's above one average, but below the other. That's really a time that you want to be standing aside. Now, if you move across to this table, I want you to note at the very bottom there, I've gone back to 1990 just to sort of give you guys a rough idea of why we are almost always bullish. Since 1990, there's been around 23 years of bull market. I say there's a question mark there because we want to see how 2023 ends. And of course, that's coming up now. We're almost at the end of 2023, guys. It's not even a joke, right? Bear markets, we've had roughly 4 years. And sideways markets, we've had 6 years. We've had more sideways markets than bear markets since 1990. Yet, if you take note of our media channels, the media channels always tends to paint a very, very gloomy picture. The market is almost always bullish or sideways. Bear markets happen very infrequently. So we have to always, if you turn off your media channels, turn off the news, turn off your social media channels and focus purely on the charts, you would make far better investment decisions. I always tell people that there's got to be two people in you. There's the human in you, and then there's the investor in you. The human is someone who's informed, who knows what's going on in the world, looks across all different forms of media channels, it takes in as much information as possible, because when you're sat around a dinner table with your dad or with your friends, you can have an informed and sensible conversation. That's the human being in you. The investor in you has to be very, very different. The investor in you has to be mechanical, has to be ruthless, has to be calculated, has to have a strategy. And the way to do that is to turn off your channels and to focus purely on the charts, because you'll make much, much better decisions. And this table here is an example of that. Okay, so once the S&P 500 has confirmed a bull or a bear market, we then scan the market for opportunities. And this is where step 2 comes in. What stocks to invest in for maximum ROI? This is where asset selection comes in. So first and foremost, you've identified what kind of market conditions we're in. Step 1, you've looked at the S&P 500. Once the S&P 500 had told you, right, we're either bullish or bearish, well, mostly bullish, we then have to start thinking about what stocks to invest in this current bull market. And this is where asset selection comes in. This is step 2. So let me just give you a quick brief overview of how this works. How do you shortlist the best stocks? Well, I have created a 2-tier system. I'm going to explain each tier, tier 1 and tier 2. Tier 1, use professional scanners. This is where we take over 20,000 assets and we want to find that initial shortlist of 50 to 500 assets that meet a particular criteria. This is where MetaStock comes in. It cannot be, there's no competition in terms of what MetaStock offers as a scanner. We've been using MetaStock for a very, very long time. We've taken MetaStock, we've programmed it with our particular, what we call our blueprint. And that blueprint will take 20,000 assets and within a matter of minutes, go through 20,000 assets and give us the best 50 to 500 initial stocks, commodities, currencies that we want to be looking at. Now, there are various subscriptions for MetaStock. Jeffrey, of course, and Bobby will go through the various subscriptions. But guys, think about it this way. Every career choice needs the right tools for the trade. Think of your careers. Think of all the tools that you use to deliver the work. As an example, when I was in photography, we were using a Hasselblad camera to do our work. If you're not familiar with Hasselblad are the godfathers of cameras. Everyone's familiar with Nikon and Canon, which are great cameras, but the godfathers are Hasselblad. Hasselblad were the first lenses, for example, that were taken to the moon. The camera we were using was a 60,000 pound camera. We needed that to be able to deliver the work so that our images would go on the side of buses. It was a medium format camera. You've got to have the right tools for the trade. I cannot do what I do without Metastock. I'd be lost. So Metastock is essential. It takes 20,000 assets. We use our scanners that we've programmed with our blueprint, and we find that initial 50 to 500 assets. Now, what we're ultimately doing is we're scanning 11 stock sectors. I think this is a step that people tend to overlook. There's 11 sectors, and what we're doing as investors is we're trying to find the strongest stocks in the most robust sectors. If you look at the media channels, all they ever talk about is technology, NVIDIA and Microsoft and Apple, and that's all you ever hear about. Yet there's 10 other amazing sectors with very, very good opportunities all year round. I'll give you an example. In 2022, when the S&P 500 fell 28%, the money flew into healthcare. And there was one particular stock called McKesson Corporation, MCK, which we'll look at in a second. It went up 65%. So the money left technology, went into healthcare, went into energy. There were some really good stocks to look at in 2022. If you did the scanning, if you had Metastock, and Metastock would then tell you, right, where's the money gone? Because ultimately what happens is that money flows between sectors. Typically, we hold our positions for every 12 to 18 months. We're in particular sectors, we build portfolios, we hold for 12 to 18 months. Once the money starts leaving, the Metastock scanners are continuously telling us which sectors the money is flowing into. So we must do this step. We cannot overlook this step. You do not want to be focusing on what the media are telling us in terms of stocks. Everyone seems to be excited about NVIDIA because of AI. Yes, it's done well, but it's not the only stock. There's thousands of other stocks that you want to be looking at. Here's a little tip for you guys. Wealth is in the stocks, not in our media channels. I'm going to say that again. Wealth is in the stocks, not in our media channels. And I'm going to show you some of the stocks that we have found using the Metastock scanners and the Market Advantage Toolkit that we have developed. Okay, now our job as investors is to find the strongest trending stocks from the most robust sectors. This is our job as investors. You have to have a process that finds these stocks. This is what you are as an investor. If you cannot do this, you're not an investor. You may think you are, but you aren't. I can't be a photographer if I don't know how to take pictures and sell those pictures so that they go into magazines and on the side of buses. If I consider myself a professional photographer, if you consider yourself a good investor, this is ultimately what you're doing. Your job is to find the strongest trending stocks from the most robust sectors. We have created a number of explorers, scanners for Metastock to scan and shortlist trending stocks. So let's switch to Metastock. As I move through the 3 steps, I'm going to be jumping between the slides and Metastock just to break it up and make it a nice little presentation, okay? So if you're not familiar with Metastock, when you first open Metastock, this is what you are presented with. It looks, it just looks like a pretty unremarkable bit of kit at this stage, but Metastock has this lovely P in the top left corner called the Power Console. When you click on that, this is where the beauty happens. This is where the magic happens. First of all, you'll notice there's a bunch of buttons here on the left-hand side. The third one down is Explore. This is where the scanners come in. Now, if you look at the explorers that start with MAT, these are all the explorers that we have developed. Now, I'm not going to run a scan now because it requires at least, I would say, 10 minutes to run a good scan. But the 2 scans that I really want you to focus on, I mean, we have scans for everything, trend and bias on the daily, the monthly, breakout channels, pullbacks. I mean, we've created a scanner for everything that you would really want in terms of looking for the right setups. But the two that you want to focus on here are the two that I have ticked. That's the UK version. Let me just move down. It's these ones here. US 4-screen breakout strategy and US 4-screen pullback strategy. I'm going to show you what that 4-screen setup looks like. But ultimately, what these two scanners will do is go through 20,000 assets, find the best breakout setups and the best pullback setups. And those are the only real two entry points that you will need in a market. The way to know when to use breakouts and when to look for pullbacks is to be aligned with the seasonal movement of the stock market. There are particular years, there's particular months in the year where the market is trending and breakouts are happening, and there's particular times of the year where the market is pulling back. When you're aligned with the seasonal movement of the stock market, you will know precisely which one of these scans to run. Most of the time we're looking at breakouts because that's what happens most of the time, but there are a few times in the year where you want to be looking for pullbacks. And when you get in early, those are the stocks that are really going to go on to push your profit and your ROI to some wonderful, wonderful levels. Okay, so this is step 2. You want to have scanners that find the best assets for you to go through. So this is out of that scanning process, there's 2 tiers. This is tier 1, using scanners to go from 20,000 assets to that initial shortlist of 50 to 500 assets. Of course, when we go through the training that we do on this, we'll go through a lot more detail in terms of the actual criteria and the blueprint. There's complete transparency. This isn't a black box system where you're just going to blindly follow along. We explain all the parameters that go into this. Right now, and because I've got a time restraint, I can only give you a really decent overview of what we've created. Okay, I'm just going to switch back now to my slides. Okay, once I have scanned the market, I then take those 50 to 500 assets, again, still using MetaStock. I then want to find the 10 to 20 best assets that make it into my portfolio. We have developed bespoke charting tools, again, that match that blueprint that we had developed, a checklist system. And we manually go through 50 to 500 assets to find the best 10 to 20 assets that make it into your portfolio. Now, don't let this scare you guys. With experience, and it doesn't really take a lot of time, with the good training, if you do this at the weekend, you will have this whole process down to 1 to 2 hours. And as I said, if you're serious about having a system that's simple and repeatable, and having a system that consistently grows your portfolio year in, year out, and a system that you're going to stick to. Because one of the reasons why people sort of bounce around or fail is because they don't stick to a system. They try one short-term trading system, go to a scalping system, swing trading, day trading, value investing. They just seem to bounce around. And that was something that I was doing in my early days. And I got bored of that. I got tired of that, and I was close to giving up, until I read Way of the Turtle by Curtis Faith and understood trend following. When I came across trend following, everything changed. I found a system that was simple, repeatable, and as I said, I've been using it for the better part of a decade. Once you get it and know how to do it, it fits perfectly around your lifestyle, because preparation starts at the weekend. So what I'm showing you is what I typically do at the weekend, but I do it continuously throughout the week because I'm good at it. Okay, so we take those tier 2, we take those 50 to 500 assets. We then use bespoke charting tools and a checklist system to find the 10 to 20 assets that make it into our portfolio. Notice what I'm doing, guys. I'm continuously stacking the odds in my favor. I mentioned this earlier, waiting for the S&P to tell me when to be in the market, using scanners to find the best stocks. I'm scanning the sectors to find the most robust, the strongest stocks from the most robust sectors. And I'm then finding the 10 to 20 assets that make it into my portfolio. Time commitment, typically 1 to 3 hours daily. At the very minimum, you want to do this at the weekend. If you have time to do it every day, even better. Now, this is what my checklist system looks like. I have a set of tools on the monthly time frame, a set of indicators, a set of bespoke indicators on the monthly, on the weekly, and on the daily time frame. When this checklist system is met, I take a position. If the checklist system isn't met, I stand aside. Very, very simple, guys. What it does is it removes subjectivity. One of the challenges that people face is investor biases. There's 16 investor biases that bring in a lot of subjectivity, that bring in confusion, that bring in fear, greed, hope, all of those different elements that you do not want to be dealing with. You want to be robotic, you want to be clinical. And the way to do that is to have a proven checklist system that defines an edge. If an asset meets that edge, you take a position. If it doesn't meet that edge, you stand aside. Now, what stocks am I looking for? Ultimately, what I'm looking for are trending stocks that are outperforming the S&P 500. So think about it. The S&P 500 is an average. It's an average of a group of stocks. Some stocks match the average. Some stocks underperform the average. But there are stocks out there that outperform the average. These are the stocks that we want to scan, shortlist, and invest and add to the portfolio. Stocks outperforming the indices. In a bear market, you just want to reverse that logic. You want to find stocks that are weakening quicker than the average. Typically, as I said, we hold for 12 to 18 months before we rebalance the portfolio. That's that sweet spot. Day trading, scalping, too short. You're in and out of the market, you're working, your family, you don't have time for that really. It's not sustainable. Value investing is too long. It's too long. Stocks go through so many ups and downs that it's just too long a time frame to be holding 10, 15, 20 years. But a trend following, that 12 to 18 months, that's that sweet spot in the middle where you're continuously holding stocks, compounding, taking your profit, adding the next set of stocks. That's how you're consistently growing a portfolio. Because it's 12 to 18 months, it's still happening in the background. So this isn't something that you're glued to throughout the day. Few minutes a day, few minutes a week to manage your portfolio. Okay, so once again, let's switch to Metastock. Now I'm going to go to the chart here, and I've created a list of stocks because we don't have time to run a scan. I've created a list of stocks that have been picked up by our scanners in the last few days, and I've created a mini list of stocks here that we're going to go through. So I've chosen CBOE. I don't know if you guys are familiar with CBOE Global Markets. It's a fantastic stock that you must be familiar with. And I'm going to be looking at the 4-screen breakout strategy, which you can see here in the bottom right, and I'm going to open the chart. So just give it a second while Metastock does its magic. And now what we see is the beauty of our Market Advantage Toolkit. This is our 4-screen setup. We have the monthly in the top left. We have the weekly in the top right. We have 2 daily charts, bottom left and bottom right. The monthly, the weekly, and the daily in the bottom left is where I do my analysis and where I apply my checklist. And the daily in the bottom right is where I will find my entry points, my stop losses, my trailing stop losses, my levels where I look to compound. Everything is here on the system for you. Now, I'm just going to open up the monthly chart for CBOE. The reason for that is because I want you guys to see, let me just compress the chart. I want you guys to see that CBOE since June, July of this month has moved, this year rather, has moved around 20-25%. This is what we call a trending stock. This is a stock that's been picked up by our scanners, and then we did our analysis using the 4-screen setup. We added this into our portfolio, and it has moved around 20% since it started trending. Now, what's beautiful about Metastock, one of its really great features, is that it has a commentary feature. So if we go to view in the top and click on expert commentary, the commentary is telling you about what is happening on this particular time frame. It will tell you what's happening on the weekly and the daily time frame. And then in the daily in the bottom right corner, it will give you the entry points, the stop losses, the trailing stop losses that you can then transfer into your broker account. So again, I can only give you a really brief overview, guys, of what's happening on this particular stock, but there's some features that I want to show you. Notice our trend filter is green. The trend filter has been green since it started trending in March of this year. We started taking positions around this level here when it started breaking out and printing new all-time highs, and you can see how well it has been performing. This is this week's candle right here. It gapped up and it's continued. I think they had a positive reaction to earnings. If we go to the daily, notice again the green trend filter, which has been green since August, been performing really well. Notice how it's supported by the 20 SMA and the 50 SMA and the 200 SMA all angling up. Notice the commentary, guys, telling you at the bottom that the trend is bullish. So if we look across the time frames, we got bullish on the monthly, we got bullish on the weekly, we got bullish on the daily. So when all three time frames are aligned, the software is telling you that this is a stock that you want to consider adding into the portfolio. And here's an absolutely fantastic feature. This is a feature I didn't know existed until William, who works for Metastock. William's he's one of these guys that should be given an award for his ability to code, because he helped me code this system, and the features that he was showing me were just blowing me away. So if we have a look at this particular feature for Metastock, when all three timeframes are aligned, the daily time frame will start turning blue. So notice that the trend filter is now blue, telling us that all three timeframes are aligned, and this is a stock that you want to consider. We've also got these wonderful subcharts at the bottom, which tell you how bullish each of those candlesticks are. The green little diamonds that you can see, these are all entry points into the stock. So every time it breaks out, because this is a breakout chart, the diamond is telling you, right, consider an entry. And with each entry, you have, if you notice, there's a green line here. That's the entry point. You've got this red line here, which is the initial stop loss. You've got your target levels. And then you've also got the trailing stop loss following the chart. So if you entered when the stock first turned blue, as an example, you would still be in this stock because the trailing stop loss has not been triggered. So if you had entered in March of this year, we are now, of course, in November, you're looking at 8-9 months of being in this stock. And it's still not a stock that is reversing. It's still pushing up and creating new highs and trending. So when a stock is trending, what you want to be doing is not buying it, holding it, and you want to be compounding, which means buying more of that stock. So if you entered, let's say on this diamond here, if you entered on this diamond here, these additional diamonds, these are compound levels. So this is telling you that you can buy more of this stock at this level, this level, this level. So you can imagine if you've got multiple positions running across this stock, holding it for 12 to 18 months, that's how you will exponentially grow your portfolio. If you've got 5, 6, 7, 10 of these stocks, you only need a few of them, multiple positions running. This is how you will then outperform the indices. And again, as mentioned, there's a commentary that goes, I can't bring up the commentary on this particular time frame because it will give you the actual values of the stop losses. Those are for our members. But ultimately, everything is there for you to just learn to use and execute. This is a beautiful Metastock. You should be really proud of what you've achieved. It's a fantastic bit of kit. So let's move on. I just want to show you quickly some of the other stocks that we have discovered using, again, Metastock. Notice, guys, how many of you have heard of these stocks? So going back to that first stock, CBOE. How many of you have heard of CBOE? I bet you if I put a poll out there, it will pretty much be all of you have not heard of CBOE. If we move to CDNS, this is a tech stock. Notice this green line here, guys, is the high of last year. One of the key factors that we look for are stocks that are trading above the highest point of last year. If a stock is trading above the highest point of last year, it's trending. Notice that since, again, March of this year, CDNS has been performing well. Look at this month's candle, solid green candle. It's starting to push up. Now, what I want to show you is the daily. If I go to the daily in the bottom right, notice, guys, bullish on the monthly, again, bullish on the monthly, bullish on the weekly, bullish on the daily. Now, here's the thing. This is a trending stock. If I just compress the chart, just so that you bring the data in, what I wanted to show you is that this stock is trending because it's blue. But when the blue filter disappears, what does that mean? That means the stock is pulling back. So what do? You move to the pullback screen. When you move to the pullback setup, you will be potentially entering at these pullbacks. So you'll be entering on breakouts, and you can potentially be entering on pullbacks. This is the beauty of a trending stock, and this is the beauty of what we created with MetaStock, is that it's telling you which stock is trending, and then it's giving you entry points either on breakouts or pullback, and it's giving you specific values. So it's telling you where to enter. It's telling you where to put your stop loss. And again, guys, look at the trailing stop loss. CDNS has not hit the trailing stop loss. Since it started trending, which was around this level here, it has not hit the trailing stop loss. So if you had entered in any of these positions, you would still be in this stock 6, 7, 8, 9 months later. Okay, just a couple more stocks that we can go through, just so that you can see the beauty of some of the stocks that we're picking up. Right, McKesson Corporation, guys. This was the stock that I mentioned earlier. When the S&P 500 fell 28% in 2022, McKesson Corporation moved up 65%. So this is the trend of 2022. So we moved to healthcare in 2022 because why? MetaStock told us to. It told us that, hey, keep an eye on healthcare. There's some really good stocks in there. And we found McKesson Corporation. Look at what McKesson Corporation is doing now. It's trading above the highest points of last year, which it did in June. And it's now moved from roughly $400 to $460. Again, notice monthly is bullish, weekly is bullish, daily is bullish. And if we go to the trend filter, and if I just compress the chart, notice that the trend filter has been blue since June of this year. And again, where the blue trend filter disappears, that's where we go to the pullback page and we look for pullback opportunities. We have everything covered here for you guys. Okay, and I think there's one more stock. I think there might be a couple more stocks. PGR, another stock, guys. If you're not familiar with PGR, which is Progressive Corporation, look at the history of this stock, guys. If you look at it from 2016, it was roughly around $30. It's $160 now. How many people have heard of PGR? Exactly. A very, very, very good stock. Think about your media channels and think about all the stocks that they only ever talk about. NVIDIA, Apple, Microsoft, Berkshire Hathaway occasionally. These are the darlings of the media. Yet all of these stocks that I've just shown you, and these are just a handful of stocks. I can show you a ton of other stocks. JBL, ELF, ENTG. There are so many other stocks that have been picked up. These are the stocks that you want in your portfolio. Let me see if there's another stock. Oh, yes. SMPS. This is a stock that has been in our portfolio in the past, and it's now that one that we're considering again. Notice, guys, if we go back to 2009, this stock was trading around $20. It's now over $500. Again, where are these stocks in our media channels? They aren't. As an investor, you want to have a system that finds these stocks, first of all, and then you want to have a system that invests in these stocks, cuts out of losing positions, holds and compounds winning positions, and grows your portfolio. Simple, repeatable, and consistent. Okay, so that's it, guys. This is our two-tier system. We have tier, if I just click on that power console, we use the Explorer method, the Explorer functionality to scan the market. Once we've scanned the market, we then use our 4-screen system to find and shortlist the very best stocks. Once we've done that, we create our shortlist. We then use the daily in the bottom right, the daily in the bottom right to use the entry points, the stop losses to transfer into our broker account. Of course, you want to have risk management rules as well. Typically, I don't risk more than 1% to 2% per position. I then spread that risk and then do all the good stuff that needs to be done in terms of managing those positions. Okay, I'm now just going to quickly switch back to MetaStock. Okay, so just some comparative returns, guys, just so that you get an idea of what you will achieve with a good system that's consistent. Let's say you have an S&P 500 tracker fund, you start with $20,000, or you invest in individual stocks outperforming the index. Let's say you have two portfolios running side by side. Time period for both is 20 years. And let's say that you add a further $100, that should say dollars, I put a pound sign there. Let's say you add a further $100 a month to this system. With a tracker fund, I'm being generous. Let's say you typically get 11% a year. With stocks outperforming the S&P 500, 30% a year is not uncommon. It's not uncommon. Remember, guys, on average, I'm not saying you will consistently get this every year. On average, you may have a 0% year the first year, a 50% year the following year, 100% year the following year, but then the next 2 years could be flat, or you could have slight losses. You got to be in this for the long game, and if you're in it for 3, 5, 10 plus years, that's how you're rewarded. Now let's do the maths. If you start with 20K and you use this system with the S&P 500 tracker fund, you'll have around $250,000, which isn't bad at all for just simply set and forget. But with a little bit of work, with a good bit of software like MetaStock and with the Market Advantage Toolkit, you could be potentially sitting on over $4.5 million. That is the difference between investing in an average, like a tracker fund, and in investing in stocks outperforming the indices. Now, notice what else, guys. At the very beginning, I said, if you aren't going to learn this, who's going to teach your kids? Because the schooling system isn't going to do that for you. So what you will develop here is a set of skills that you will perfect, that you will then pass on to your loved ones. Financial literacy is just a buzzword. Generational wealth is just a buzzword. What you want is to be able to execute on them. And the way to execute on them is by understanding a system that is simple and repeatable and that you can then pass on to your kids. That is how you break the financial illiteracy loop the system keeps us in. And that is how you create, that is how you make generational wealth more than just a buzzword. It's got to be something tangible. That's a legacy to be proud of. Okay. Now, in short, just to summarize everything in terms of what we're looking for, I have created the 4PS method. This is what the 4PS method looks like. Things like Elliott waves, guys, done, dusted, outdated. We're better than that. MACDs, stochastics, RSIs, done. They've all had their time. We've evolved. We're better now because we've got technology like MetaStock that can help us become better investors. So what I'm looking for is what I call the 4PS method. Phase 1, a proven performance, a history of proven performance. If a stock has trended well in the past, it's likely to trend well in the future. So that's phase 1. Phase 2, a base, a consolidation. Think of it as the roots of a tree. If a tree has strong roots that span out, that tree will grow strong, tall. That's what you want the consolidation base to be. You've heard the expression, the longer the consolidation, the bigger the breakout, right? I typically look for consolidation bases of at least 3 to 6 months, at least. The longer that goes on, the bigger the breakout will be. Phase 3 is when the stock breaks out from that consolidation. So that's where patience comes in. Give you an example, guys, gold. Gold has been in consolidation for 13 years. 13 years. When gold eventually breaks out, if it ever does, that's going to really start trending. But for now, it's just kind of swinging up and down in this sort of consolidation. You really want to be standing aside. There's no money to be made in gold. You're going to just end up, there's some money, but there's no wealth. Let me rephrase that. There's no wealth. You might make a little bit of money. You're not going to make wealth. Wealth is made through holding and compounding positions. And you want to get into phase 4. Phase 4 is the new trend. All of those stocks that I went through just now, they're all in phase 4 at some way along that line of phase 4. Some are starting, some are very much in phase 4. Typically, it's that phase 4 trend that lasts 12 to 18 months. Okay, pro tip, investing is not about buying and holding forever. It's another fallacy people buy into. Hold stocks when trending, exit stocks when reversing, move between the cycles of trends across sectors, rebalance the portfolio every 12 to 18 months. So once we've shortlisted the best stocks and assets to invest in, step 3, how to invest in these stocks for maximum ROI strategy. This is where strategy execution comes in. So what is a good trend following strategy? You want an entry point that maximizes the chance of making a profit. Stop losses to cut out with a small loss if an asset fails. Remember, guys, we're playing on probabilities. There are no certainties. Even though we waited for the S&P to tell us when to be in the market, we've used MetaStock to find the best assets. We've used our charts and our bespoke system to really narrow down to the best stocks. There's still a chance that they will fail because we're playing on probabilities. And that's fine. There will be losses. If you can't stomach losses, this isn't for you. It's not about winning or losing. It's about profit versus loss. We just want to have a few winners that have very, very large profit and small losses from any of those positions that cut out. So it's not about win-lose rate. Sometimes people will say to me, hey, what's your win-lose rate? It's not about my win-lose rate. I could have a 30% win rate, but that 30% win rate can go on to make me millions. So don't think about winning versus losing. That's the gambler mindset. It's really the dumb money mindset. It's about profit versus loss. Risk management, never blow an account. As I mentioned, I never risk more than 1% to 2% per position, and I spread that across a number of stocks. Compound levels, add more of a winning stock at strategic levels to accelerate profit. So once you're in a winning trend, don't just hold it, buy more of it. Really exponentially milk the trend. Exit management, trailing stop losses. Think of it as a safety net. I showed you the trading stop losses on the chart. I'm going to show you it in a second just to remind you of what it looks like. But trading stop loss is a safety net that's locking in small bits of profit as the trend develops. Not too tight because you'll get stopped out on pullbacks. And that's really where fear comes in. You've got to be able to sit through pullbacks, but just to allow the trend to do what it does, which is to grow and move. Ultimately, a trend is a function of time. If you eliminate time, you eliminate the trend. If you eliminate the trend, you eliminate profit. I'll say that again. A trend is a function of time. If you eliminate time, you eliminate the trend. If you eliminate the trend, you eliminate profit. So we want a good exit management system that allows trends to develop over 12 to 18 months. You then want the strategy converted into tools for ease of execution, which we have also done for Metastock. So let's just quickly switch over to Metastock just to show you guys once again what that looks like. So we're looking at synopsis. We got the entry points here. You probably can't see it too well because it's behind the chart, but this green line is the entry point. This red line here is the stop loss. Here is our target levels and our compound levels. And if I just compress the chart, underneath is our trailing stop loss. So if we go back to CBOE, which is a really good example, and if I just compress that chart again, you can see for yourself that this red line is the trailing stop loss, how much space and time it's given for this trend to develop. So I've been getting on with my life. I've been doing what I'm doing, enjoying life, growing my businesses, training in my community, sharing and working with Metastock to develop the tools that we've developed. All the while, all this is going on in the background. All my wealth is just nicely growing and compounding away. This is what we teach our community members. This is the same system as well that we use for the Reversy Fund. So the sophisticated investors that are investing with us, we're doing this for them. Okay, so that now brings me to an end. The Market Advantage Toolkit, what do you get? You get the 16 explorations, 16 expert advisors, 11 bespoke indicators, 11 templates, a detailed manual explaining the whole trend following strategy, support structure from Sublime Trading, here at Sublime Trading, that's us, as well as Metastock, and also bonus live training. On the 7th of December, I confirmed this with Jeffrey today, from 12 p.m. to 3 p.m. US time, complete training on the Market Advantage Toolkit. Normally, we charge £1,000 per person for our live days of training. This is absolutely free, guys, no extra cost for our early adopters, the pioneers, who we call our pioneers of the Market Advantage Toolkit. This will be £199 a month going forward, but as this is a new add-on, it's only gone live as of last month. We've already got people snapping this up. We've already got people reserving their space on the live day of training. It is $99 a month, lifetime access. When we start putting the prices up, when this offer has gone, you guys will keep access to the $99 a month. We will absolutely honor that. But once the prices go up, we won't be going back to the $99 a month. In fact, it will only be, as you can see, guys, I think there's about 25 years of love and attention and hard work that's gone into creating this toolkit. We've done all the hard work, so our members don't have to. People are sick and tired of using systems that don't work. They've got one eye on their future. They're in their 30s, their 40s, their 50s. They've got kids now who are growing up. They want a system that they just can rely on, they can learn, and they can start getting some real serious returns. And this is what we're doing here with the Market Advantage Toolkit. That's our website, but I'm now going to switch back to Jeffrey Jeffrey's going to actually share the, I believe, the way to actually take up this offer because Metastock are doing all the onboarding for us. So Jeffrey, over to you.
Awesome. Let me go ahead and get switched over. Great job, too. Appreciate you coming in and spend some time with us. Let me tell you how to get it. You can give us a call, 800-882-3040. You can chat online with us at metastock.com/sales-chat. And you can go to metastock.com/conf promo. Now, we just set the date on this, but as part of kind of the initial entry, we're also going to do a live session. This may change, but we're kind of looking at the dates, and we wanted to get it behind Thanksgiving and all that kind of stuff. So the live session that we're going to be doing, we've got it tentatively scheduled for December 7th at 2 p.m.
2 p.m. Good. Sorry, I said 12 p.m. So correction on that.
Well, actually, that might have been just a typo as
okay,
well.
Well, we can confirm that.
Yeah. So let me go ahead, and I actually do think we agreed to 12 p.m. So I meant 12 p.m. Did I say 2 p.m.? I don't think so. All right. So that training session's live. It's December 7th. It's 12 p.m. Eastern time. Normally, this is $199 per month. You can get a $99 permanent rate, but you have to give us a call, 800-882-3040. I should be typing this in. Or you can chat with us. It's metastock.com/sales-chat, and it's metastock.com/conf-promo. We have a couple of questions here. Do you mind?
Absolutely. Fantastic. Yeah, love some questions.
Let's see. Well, actually, this is more of a compliment or a comment. Thank you for your wise advice, says Michael. Ivan says, this is an awesome system.
Look, we're in this together. You know, the days of me, that's over. We're in this together, you know. The more we can help each other, the better it is. So, thank you so much. Yeah.
Let's see. Arco wants to know how you look for stop losses or what you do for stop losses.
Yeah, great question. So the stop loss is based on a formula, an algorithm. It takes ATR into consideration, average true range. That way you're dealing with the unique volatility of that particular asset. So, let's say, for example, Tesla may move 300 points a day. Compare that to, say, Microsoft, which is more of a steady eddy, may only move $100 a day. So the stop loss takes the ATR of that particular asset and then creates a stop loss that's unique to the asset.
Marius wants to know if he's a subscriber to the Market Advantage Toolkit, if he can get other discounts on some of your other services.
Hey, listen. Once you're in, we can always discuss further.
Thanks for your interest in other services. Yeah, absolutely, right?
Of course, absolutely. Look, our goal is to grow a community that's happy and that's getting returns and results, and we're always here for discussion.
Jackie says, "Great presenter, right to the point."
Thank you.
Yogesh wants to know, this works on top of the Metastock subscription, right? And yes, it does use the Metastock engine and all that kind of stuff to run. So it's on top of that.
Just to add to that, I know Metastock have various subscriptions. There's live, and then end of day. Mm-hmm. The end of days, I think, is $59 a month, if that's correct. That's all you need. You need the end of day at the very minimum, because we wait for the market to close before we make our decisions. We're not intraday traders, so at the very minimum, end of day data is perfect.
Cool. And then, okay. And also, I'll add this too, Yogs. If you haven't tried Metastock, it's rated #1 for 30 years in a row. If you do the Market Advantage Toolkit to make it even that easier for you, you could either do a free trial, and we'll just give you a free month of Metastock, real time, end of day, whatever you want. Or you could do the extended trial that we've been talking about, where you buy a month and get the second and third month. But this definitely does take really good advantage of Metastock and the ability to scan, test trade, get that expert advice, get that commentary, get those signals, get those alerts.
Brilliant.
Zaheer, great job with this. I have one other thing I agree with you completely on. William is great.
we all need a William in our life. Honestly, if I could clone William, in fact, if I could take the original and give you the clone, I would absolutely do that.
You can have him.
There's some wonderful bonuses that we're giving away, which you've got access to. One of those bonuses is a free, what we call a portfolio accelerator call with myself. So if everyone on here who wants to jump on a call with me to just chat about your portfolio, your performance, absolute pleasure. I'd love to get to know the people at the end of this screen. So please book yourself in for a call with me. There's no dodgy selling on there. It's just a hello. Let's see what you're doing. Let's get to know each other. So I hope some of you will take advantage of that.
Marius says I'm in. I'm going to do the Phoenix Premium also. So.
Brilliant.
Welcome, Marius. All right, Zaheer, I want to say thank you. That was great. Again, guys, the contact number is 800-882-3040, metastock.com/saleschat or metastock.com/conf promo. Thank you again, Zaheer. Really impressive.
Appreciate it. Have a great day, guys. Thank you.
All right, cool.
Jeff, are you still there? All of a sudden, I can't hear you.
Thanks, Greg. I should hit this button that turns on my microphone.
Yes, I found that to be helpful. So it's always helpful, whether it's down here south in Texas or in Salt Lake City or really just about anywhere, to have the on button on your microphone on to make it work properly. Hey, aren't you next?
I am next, yeah. I'm going to talk a little bit about, yes, I'm next.
Well, let me just take a real quick moment to introduce
Well, let's
you.
give away a prize.
Oh, let's do that.
First, since you're here, we're not going to give up. We're not going to ignore an opportunity to give away a prize.
I don't think we should. Should we ask our audience participants to provide a number?
Yeah, anywhere between 1 and 10,686. I really need to update the list.
Okay, audience.
But I'm going to have to do that.
Any number between 1,100 or wait, what was it again? 1 and 10,000 and something?
1 and 10,855. Now, if you haven't registered yet and you're watching us on YouTube, hi, we're Metastock. Go to register. There's a link on the top where you can click on. It's a pinned comment, and you can actually come in and register. And then that way, after I get done presenting, I'll pull a new list and you'll be on it. And then you can also get a thing. Okay, we're getting some numbers in. Okay, let's see. I know what we're going to give away this time, Greg. Have you heard of Metastock before?
Metastock? Like I said, I think that's a Facebook company. Isn't that just for Facebook?
No, it isn't. It's actually, yeah, we do get some calls from people that want to figure out how to sell their Metastock that their grandfather gave us. No. So we're going to give away a 3-month subscription to Metastock, our software program that's been rated #1 in this price category for 30 years in a row. I'm going to give them the real-time version. How's that sound?
That sounds awesome.
I'm also going to give them a Zenith data, and I'm not even going to ask you what that means because I know you've got a snarky response comment.
Zenith real-time data and news. It's the most amazing package available to the retail trader. Why would I even hesitate?
Do you know they spent like $1 billion designing that?
Billion with a B?
Getting it out? A B, yeah.
I'm impressed.
They have like something like 3,000 reporters and 300 different news bureaus. It's kind of very, very similar to the same type of data you'd get if you were using Bloomberg. Like it's a very institutional quality data feed. We're going to throw in 3 months of that.
Yeah, and they don't. You can't get that for less than a couple thousand a month.
I'm going to throw in 2. I'm not done yet.
Oh,
I'm going to throw in 3
there's
months
more?
of Learn Metastock. Yeah, but wait, there's more. I'm going to throw in 3 months of Learn Metastock. Kevin Nelson's going to come in a little bit later and talk about a service he runs called Learn Metastock. But he has hundreds of videos on different trading strategies and that kind of stuff. So we'll throw in that as well. And I'm also going to throw in 3 months of RMO ATM. So the value of this, 355 plus 90, I think it's like $450 times
You must
3.
mean $45,000.
Well, maybe. So let's pick out some winners. Do we have numbers?
I think I like Dogleg 144's. He is 7,777.
Okay, we'll go with that.
That's just me.
Thank you. Thank you for that comment on YouTube. Oh, hello everybody too, by the way. So let's figure out who, like 7777. Okay. I have to make note of these right now.
Jeff, while you're doing that, I'm going to go ahead and start introducing you, so people don't have to watch you typing.
Well, Albert
Although
M.
Your profile does look great. Oh, go ahead. I'm sorry. I thought you're going to take a little more time to pull that up.
Yeah. And then let's go ahead and then let's pick somebody out of YouTube as well. Let's go with Michael's number of 2023. So let's pick that one, and that will match up to. You don't think the side of my head looks great?
I think your profile looks angelic.
That's Jason V. Okay, I've got those both saved. All right. So you can talk about me now if you want.
Well, so first of all, this is Greg. I'm the marketing manager for Metastock, and I've worked side by side with Jeff Gibby for almost 18 years. Jeff has been here at Metastock for about 26 years. I know he briefly served in the Armed Services to go as a pharmacist, as I recall. He was going to be a pharmacist. Somehow that didn't work out.
That's right.
Then shortly thereafter, he started his career at Metastock. I would safely say that Jeff has spoken to hundreds of live and online easily hundreds of live and online audiences over the years. And I've heard him spoke dozens of times, and every time he does a great job. Very genuine, has a great way about him. Anyone that knows Metastock knows Jeff, and I guarantee you, if you stick around for the next 1 hour, well, maybe 45 minutes, you will not regret it. Jeff, take it away.
Thank you. I appreciate that, Greg. I thought it might be a good idea, since I'm going to talk for 45 minutes straight, to read this or recite it from memory. So today's demonstration is designed to instruct you on using Metastock and the accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to using specific indicators and features within the software. The information, software, techniques presented today should only be used by investors who are aware of the risk inherent in trading. Metastock shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. So I want you guys to know I do try to pay attention to questions as they come in. If you have questions as we go, put them in the chat, and I will do my best to answer them to the best. I'm also going to say that today we're going to be talking about stocks that I might own, that I might have recently owned, et cetera, et cetera, et cetera. And I'm not recommending you own them either, but a lot of the stocks that I'm actually looking at are kind of that I bought into based on the scans I'm going to show you today. I may own them, I may not own them. I'm not recommending that you buy them if I do own them. And so there you go. All right. So today I want to talk a little bit about Steve Bigalow and his methodologies. And this is probably one of the it is actually the first conference where he's not officially invited. Steve just passed away about a month ago, October 3rd. I will say, out of all the people that I've met over the years, he's one of them. But he's also a great technician. We've worked really hard on creating his candlestick patterns and getting them available for Metastock. And I often come in and I talk about people that have had a profound influence on both me and the way I trade and what I look at in the markets. And Steve has just one of those guys that it was always so much fun to work with and so much fun to do stuff with. And somebody who I always admired, like his attitude and like the patterns that he uses. And so today, what I'm going to do, we've had also a long-running partnership with Steve. And for me, I'm trying not to break up a little bit here, but to me, I considered him a really good friend. And I absolutely loved him. I love the way that he looked at the markets. And I want to talk to him about some of the patterns that he uses in the markets and kind of just give you an idea of kind of what's involved in this. Before he passed, which was a surprise to me, I'd just spent a whole bunch of time actually developing the patterns out that he uses, and creating a really big update to his product. And so I'm going to talk about a few of them. I don't think I'll get through all 9 of the patterns, but I'm going to kind of just talk about some of the ones that I use, show you some examples, try and give you a good idea of kind of how well this works. If there's anything that I ever say that kind of conflicts with what kind of Steve would have said about it, Steve is always right. But let's go ahead and get started. So I'm going to discuss some of the patterns and kind of show you a bunch of examples. I'm going to show you all the work that we put into this. So there you go. In any case, the first thing I actually want to talk about is kind of the indicators that he used, because these are all the questions that we always get. And just kind of talk a little bit about what he uses them, how he uses them, and stuff like that. So I'm going to go ahead and swap over into, right now I've got WEC up, but I'll switch that over to DIA, mostly so I can see what the market's doing. Looks like it's selling off a little bit. And we'll just kind of go through the indicators that he uses on his chart, and then and how he kind of looks at them. So the first one right here is the 3 exponential moving average. It's this light red one. He calls that the mini T line or the mini T line. And what he would use that primarily for, to the best that I understood, is if he got in a trade and the stock was moving really, really quick, he could use that as a stop loss, okay? The 8 exponential moving average is what he would call the T line. The T line was initially a term that was framed by Rick Sadler. He uses it, I don't think T never meant anything other than T, but you can use it to identify trend, and you can use it as an easy stop loss. And I use it for both. So if we're in the down, we're looking at kind of what's going on, and we kind of want to identify easily how the trend is. If you're consistently closing above the 8 exponential moving average, you can safely say that you're kind of in a bullish trend. Okay. If you're in a position and you have a close below the T line, you can use that as a stop loss or a way to get out of the market. Okay. And that's kind of how he would use it and what he would use it. The other averages that he used are, and I'm cheating, actually I could just look at them. They're the 50 EMA, and that's the red line. No, I'm sorry. There's the 20, and then there's the 50, and then there's 200. And the 50 here is the blue one, the 200 is the red one, and the 20 is basically the black one right there. Okay. Now the real reason that Steve would like to look at these, and what he would always say is like, I use these because every broker in the world actually has them on the charts, and if that's what they're using, and if everybody's looking at it, I want to make sure that it's on my charts. Mostly what he'd use that is to identify key areas of support and resistance. So for example, if we're kind of getting into a trade down here, and we're down below the 200, you could use a 200 or the 50 or that kind of thing as a stop loss. It is not. It's the T line is the 80 EMA. Correct yourself. Not the 9 EMA. Silly. Metastock. Okay.
Oh, sorry about that. Yeah, I'll correct that right now.
All right. And then the other thing that he looked at was stochastics. He's just using a 1233 to identify overbought and oversold things. I'm going to just talk about a few of the patterns that he liked to use. Like I said, Steve is a great technician. I'm going to miss him. Every time I was getting ready for, every time he was such a big part of the Metastock business, and we did so much stuff with him. We certainly really appreciate Steve and all the contributions that he did. So anyway, let's talk about a couple of these patterns. These are a few of Steve's top trading patterns. I think I'll talk a little bit about these, okay? And we'll see how far we get. One of the ones that I kind of got really, really comfortable with and really, really familiar with was the Doji Best Friend. And we added to his add-on lately the Doji Bear Friend, okay? And when we were kind of naming it, I was going to say, I kind of was joking with Steve. I'm like, we should call it the Doji Best Frenemy. But we decided to call it the Doji Bear Friend instead. And I'm not sure exactly how many of these we'll get through, but I'm going to kind of talk them. I do want you to know that when I kind of put this together, this particular demonstration, I wanted to be really, really specific about kind of like what the patterns are and what you're looking for. And so I took a lot of the examples and a lot of the wording that we use from Steve and the stuff that he gave us and from the manual that we created from that work. So Doji Best Friend, let's go ahead and start with that one. The Doji Best Friend is a really, really cool pattern. This one is one of the ones I've probably traded with the most. And the reason that I've traded with it the most is one time we were in a seminar and somebody said, hey, Steve, what's your favorite pattern? And there is a hornet in that room in here. Hopefully it stays over there. And he said one of his favorite patterns was the Doji Best Friend. So the Doji Best Friend, this requirement or what we're looking for here is a doji or spinning top forms. A doji, if you're familiar with candlesticks, is a indecisive bar, okay? The next bar is a gap up above the range of the doji. So here you've got the doji, here you've got the Doji Best Friend, now you've got a gap up, okay? And so here, let's go ahead and kind of look at a couple of examples. There's one that I found just doing some scanning. This is Hess Corporation, right? And so right here you've got actually a doji. Actually, you have a series of kind of dojis, indecisive bars. Basically, what you're looking for here is the decision to be made after that. So if we ran a scan on this particular day, this would have been August 26th. This would have come up. We could have actually come in here and you can see this would have been a doji followed by a gap, followed by decisive trading right above that T line. This had been something that Steve would have really, really liked. And some great follow through. Now, if you bought this, I didn't actually buy this particular one, but if we bought this, a couple of rule of thumbs that you could look at to get out of that trade, because a lot of times what you want to do is have stop losses in place. One of the things Steve always used to say is don't eat like a butterfly and poop like an elephant. But one of the things that you'd want to do is you'd want to wait until either a close below the T line, or if you're initially getting into the trade, if you get a trade below this doji, you'd get out of the trade. The pattern would be over, okay? So in this particular case, you have your doji followed by the gap up. As soon as that traded up above the T line, that would be a really good time to enter. Not necessarily a recommendation, but then you can see how you had the trend kicker, you had a fry pan, and all of these things are just really, really well annotated. And if I'm just using the simple rule that I'm going to wait until a close below the D line, we can actually just follow this through, and there's no closes below that T line until right about here, and that's where you'd get out, okay? Based on kind of that rule of closing below the T line, okay? Here's another one. Again, I just found this on the Metastock scans. I'm going to show you some more of these, but just to kind of go through them. Here you had a series of really indecisive bars. You had that indecisiveness. You don't want to trade indecisiveness. What you had after that is a doji followed by a gap up above the T line and a strong move up, okay? If you're going to go ahead and trade that, what are you going to want to do? You'd put a stop loss underneath this doji and you'd wait for a close down below the T line, which didn't happen until maybe right here or maybe even right here, depending on kind of where that close actually is. Okay, so it's very, very simple. Here you had one that didn't work out. Stops are important. You have a doji. Here's your gap. Here's your doji. There's your gap. Here's where it closed down below the T line. That's where you're going to go ahead and get out. There's a couple of other examples, and these are examples that I've found with my recent trading. I just want to kind of show you the examples that I've got. So here's one that came up on a scan recently. It's called Adobe. Might have heard of that one. And I just kind of want to show you. I'm going to go ahead and scoot in here a little bit, okay? This is actually a trade that I took. I'm still in it. I haven't had a close below the T line or the 3 T line, but here you had a doji followed by a gap up. You've had a bit of a run up. Again, some significant movement. If we get a close down below this T line, I might get out down below this 3 T line, okay? But again, here's another one, cost. Came up on an exploration that we were looking at. Let me go ahead and zoom in on this, okay? And I just want to kind of impress exactly how easy this is. Like, okay, so we had a doji, we had a gap up that also ended up being a doji as well. We haven't had a close down below the T line, although it's been pulling back a little bit lately, okay? Adam says, Jeff, you speak often unclear and swallow the end of your sentences. Yeah, I got a little bit emotional, Adam. It's okay. I'll as we go on, we are here. So the other lines that we're using on the charts, thank you for that question, Adam. We're basically using the 8 exponential moving average, the 3 EMA, the 20, the 50, the 200, and the stochastic 1233. So there you go. All right. Okay, let's talk about, one more example. Let's go ahead and go with PKG here. Oh, wrong one. Another one that came up as a doji best friend, again, really recently. Again, here's your doji, your indecisive move. Here's your gap up, okay? Close up above the T line. Here we've had a nice little bit of a movement up, but we haven't had a close below the T line after that. So there you go. That's the doji best friend, okay? Let me go back in here. Let's talk a little bit about the doji bear friend. The doji are spinning top forms. The next bar, again, you have that indecisive bar, followed by a gap down or a doji bear friend, okay? And so here's some examples of that one. Here on Qualcomm, you had a doji followed by a gap down. Again, after that gap down, you had a huge, very decisive gap down that came back up. If you're trading this, if you were lucky enough to get into this stock, what you would do is actually either wait for a close above this 3 exponential moving average or the 8 EMA, okay? And so depending on how you wanted to follow that, if you would have entered a short position here, you wouldn't have had a close above that 3 EMA until right here, or close above the 8 EMA would be right here. So again, very, very simple, very straightforward, very, very easy pattern to use. So let's talk about the bearish flutter kick. So with this one, you get a moderate to large candle that forms at the end of an uptrend. The second day gap, excuse me. So you have a moderate to large candle form at the end of an uptrend. The second day gaps down below the previous day's open and forms a doji or a spinning top. The third day opens below the bottom of that doji. And this will be labeled as a flutter kick, okay? And so I did a scan for this. This is the bearish flutter kick. Here you've got that moderate pattern. You've got your doji. You've got some indecisive days followed by a decision. And look how good that worked out here, okay? And again, if we're trading that, basically what you're going to be looking to do is you're going to be looking to exit that position with a close above either the 3 EMA or the 8 EMA. Very, very simple. Thank you, Metastock. Glad to hear that my audio is okay. All right, cool. Here's another example. Again, you have that larger pattern followed by a doji, followed by a gap down, flutter kicker. And there you go. The bullish flutter kicker, you have a moderate to large dark candle that forms at the end of the downtrend. After that, you have a bit of a doji or a spinning top. Then you have a positive open. And that's a lot of what these candle patterns that Steve loves so much and taught so many people how to use, utilized. Basically, what you're looking for is a decision to be made after indecision. So right here, if we're looking at this, here you've got a large to moderate bear candle. You have that doji, you have that gap up, you have the flutter kick. So here you've got another one. One of the things Steve liked to look at was what he would call 2+2 analysis. So here you've got a doji sandwich followed by a little bit flutter kicker. When that kind of happens, he loved those patterns when they happened in a row or sequentially. So actually, let's go ahead and talk a little bit more. I'm going to go through a couple more. And then what I'm going to do is actually show you how I look at these. We'll run a scan right now, and we'll kind of look at some stocks, and we'll see. I'll show you how easy it is to find these different patterns. So this is the bearish kicker, where you have a moderate to large bullish candle that forms at the end of an uptrend. The second day gaps down below the open of the previous day, and prices move immediately to the downside. Bearish kicker presents an excellent shorting opportunity. This signal is even more powerful when it forms at a major support level like a moving average. Again, those major support levels that we're talking about are the 50, the 200, a place where price reversed in the past, those type of things. Again, on this one, you want to exit on any trading above the open black body's previous candle. Okay, so let me kind of go ahead and just show a couple of examples of this. And I think what we're going to do after that is we're going to run some scans. And I'm going to kind of talk about how we'd actually look at this. Okay, so right here you've got that kicker. Okay, here you had a kicker during the trend, and here you had a doji sandwich. And that whole time you're getting these signals. It just keeps going down. This is the Dow Industrial Average. It's actually, and this was in September of this year when we were just kind of looking at that. Okay, here we got the spider, the S&P 500. You had a kicker, you had another kicker, and the whole time it just keeps going down. Okay, and I'll look at the major indices with these patterns to kind of get an idea. Here, this was the QQQs. You had a kicker, you had a kicker. All of our indices were giving us pretty good kicker signals right before we had a major sell-off. I don't know if you remember this last month. Well, actually in September, it's 2 months ago. But the indices were telling us that there was a sell-off coming. So let's go ahead and instead of kind of going through the patterns, I want to show you kind of what's included in the expert advisor, in the toolkit, in all that kind of stuff that we kind of spent so much time with Steve on. Okay, and I think before we actually do that, I'm going to kind of bring up a list of the actual. Let's actually kind of just go a little bit ahead here. And what I want to do is actually just show you the patterns that we worked on. And this is one of the things. I'll talk a little bit about the Steve Bigalow candle profit systems, the 3 versions of them that we've kind of written, and kind of what's included. And then I'll show you how the scans work. I remember when we initially put this together, it was maybe 12, 13 years ago. But it took us about 2 or 3 years ago because some of the patterns are very, very straightforward, and then some of them aren't as straightforward. But I know that we worked a lot of time with William and Steve talking about how to get these more visual patterns like the J hooks and the fry pans exactly right. And Steve was a trooper with it. He was so into exactly what we were talking about. And so we got the first version of CPS done. I sent a copy over to a friend of mine, actually the late Dennis Peterson, and I said, hey, take a look at this. This is really, really cool. I think you're going to like it. It's Steve Bigelow's patterns. We've been working on it for a couple of years, and he really did like it. He gave us a really good review, and it went on to be a really, really popular product. People really enjoyed it. The second version we released several years ago. And I don't remember exactly how long that was, but at that point I had sent that version over to Barbara Starr. Barbara's another friend of ours over at Stocks and Commodities that does a lot of reviews, and she also gave it a very, very positive review. CPS has probably been our most successful, most well-liked add-on that we've created over the years here at Metastock. And it's certainly something that I love to write scans with and that kind of stuff. When Steve and I were sitting down to talk about exactly what we wanted to do with CPS3, one of the things that he wanted to do was include a bunch more patterns, but we were talking about ways that we could make CPS 3.0 more useful for people. At this point, we have a ridiculous amount of patterns. Here's a whole list of like all the patterns that are in there. And I would say that this is probably a comprehensive list of all of the patterns that Steve wanted annotated on the chart. So you've got your doji best friend, your flutter kickers, your trend kickers, all of that stuff exists. You've got your doji dynamites, your price patterns, your power patterns, and your major patterns. And so one of the things that we did, all of the yellow ones are the ones that we added, but we were kind of talking it through, and I'm like, Steve, one of the things that I think would be helpful is what are we should rank the patterns you really like. Like the patterns that we really want people to be able to use. Let's make them stand out on the chart. Let's make them something that's really, really important. And so he did go through this. Again, we were working on this back in the May. I think we released it for the May conference. And he went through and kind of selected his favorite patterns, the 18 or 20 that he really, really liked. And here you can see them all right here. All of these are his top rank patterns, what he called his top rank patterns. And then the ones that we have in yellow are actually new. So we have all these top rank patterns that he really likes. But in addition to that, we were able to include 1, 2, 3, 4, 5, 6, 7 or 8 new patterns. as some of the patterns that he really liked that we actually didn't have in CPS 1 or 2. And in addition to that, these other patterns are ones that we've added over the years as well. So one of the things that we wanted to do, and Steve and I worked on this quite a bit, was we wanted to make it obvious when these patterns that were his favorite patterns actually happened on a chart. So let me kind of go back in here and we'll just look at PKG. And what I'm going to do is actually just I'm going to let you notice how easy it is to recognize these. So right here, you've got the doji best friend. I want to point out that it's bigger than the other patterns, right? It's also green, whereas we've got this engulfing bullish that isn't as green and isn't big and bright and bold and beautiful, right? And so the reason that we wanted to kind of create the highlights that we did was when these patterns that Steve kind of rated as his top ranked ones showed up on a chart, we wanted them to stand out to you. So for example, when this doji best friend happens, it's very clear. It's instantly clear exactly what that means. And so that's what we did. And so right now, just looking at this chart visually, and this is PKG, just because that was the last example that I wanted to show you, it's right here on the chart and you can see. And then you can see over here, we had this doji best friend, that's also there. And here where you had the European breakout, that's also illuminated. And that's just one of the ways that we wanted, because we have 51 patterns in here. I mean, there's a huge amount of patterns, and it's important to know that this is an engulfing pattern, right? And that's a bullish pattern, but it's not as important of a pattern as the doji best friend. And so I'm really glad we got this done. Here you can see this kicker. This is another one of his favorite patterns. It's really, really well lit up. You can instantly see it. It jumps out on the chart for you. So I also want to show you, while we're kind of talking about this, the commentary that we put together for it, because Steve was very thorough in kind of the notes that he provided in terms of what we should put on a chart. So what I'm going to do here is I'm going to go to View, and I'm going to go to Expert Commentary. And what I'm going to do is I'm just going to highlight. You'll see there's a little bit of a triangle up here, okay? And what I'm going to do is I'm going to come back here to this doji best friend, okay? And it's going to say the doji best friend is a gap up with a doji or spinning top formation while prices are in the oversold area. This is a long opportunity. You can expect the strength of the uptrend to be greater if the last bar closed above the T line or the 8 exponential moving average. Now, one of the things I want to talk about with this is we had so many patterns in the commentary that we actually ran out of room to put text in there. And Steve had put together such good information about the comment about what to do with this pattern that we made sure to put all of that information in the manual. And so when you look at the doji best friend as the pattern that exists in the manual, it's going to have Steve's definition in it. It's going to have the way he used it and all of that kind of good stuff right here. Todd, thanks for the question. You can use this on any time frame. I like to use it on dailies simply because I run my scan right before the market closes or right when it opens or whenever I have a chance. But you can apply it to any time frame. In fact, like a lot of times Steve would run scans on dailies, but if he got in a position that was moving really, really parabolic in the direction that he wanted, sometimes he'd go down to like a 10-minute chart just to kind of keep track of it and use it as a stop. But one of the things that Steve would talk about over and over and over again is the periodicity that didn't matter. The pattern is the pattern is the pattern, okay? Either happens or it doesn't. So you can use it on any time frame you want. You can also apply it to any stock or instrument that you want. So let's run a scan real quick. What I'm going to do is I'll go ahead and I'm going to close up this commentary right now. What I'm going to do is just show you how easy it is to find these. So I'm going to go ahead and open up the Power Console right now. I'm going to go to the scanner. And what I'm going to do, I've got all 3 versions installed over here, but what I'm going to do is I'm going to just do the CPS 3 ones, okay? And we have all the scans that are here. Like these universe scans, if you're looking to scan a whole bunch of stocks, Steve always wanted to trade stocks that were $5, except for when he didn't. Sometimes he broke his own rules. We all do sometimes, right? But if you want to build an universe of stocks that are above $5 and have an average volume of over 200,000, this is the scan that you'd run. And you'd only run that like once a quarter or so. And that will just make a list that you can scan every day. Okay, so that's a universe and the universe oversold scan. If you're just looking to run a scan to find the patterns, that's what all of these other scans work for. So I'm going to kind of go back to my matrix here just to kind of show you. But right here, you've got all the top rank patterns. I had to break that into two categories, the bullish ones and the bearish ones, just simply because they wouldn't all fit in one scan. You've got your doji dynamites, the price patterns, the power patterns, the major patterns, and these will all match up to scans. So if I'm looking at that power console, right, and I'm looking at the scans, you've got your top rank bullish and bearish. This is the one I usually run, but if I wanted to find J hooks or major patterns or something along those lines, that's what I would do, okay? And so I'm just gonna run the bullish and the bearish for you. I wanna show you, again, how easy it is to kind of eyeball these. And then the scan universe that I'm gonna do is I'm gonna do the Dow Industrials 30, the NASDAQ 100, and the S&P 500, okay? So I've got two of them selected. I've got the bearish one selected, I've got the bullish one selected, and then I'm gonna run that. The scan universe that we're gonna go with is about 635 stocks. There's 500 in the S&P 500. There's the Dow 30, and but there's a little bit of overlap in those groups, and so it's about 630, okay? And then these are the ones that we're going to run. I'm actually going to have it run the bullish one first and then the bearish, okay? So I'm going to go ahead and click on the Start Scan button. I'm going to go ahead and let it run through this. And there you go. Let's go ahead and let it finish. Hopefully I kind of stopped following the end of my scan. It says that, Adam. Yoga's asked, would you use this when determining gap analysis? So Yogs, actually the doji best friends are actually a little bit of gap analysis if you wanted to kind of look at that. So if we're looking for doji best friend, which is what we're scanning for right now, we're looking for a doji yes on the previous bar, followed by a gap up, okay? Now that gap up, the definition for that is, I think, and I'd have to look at the code, and this is open, so I could go look at the code, but I think what we're looking for is a gap above the high, okay? So a gap up above that, not a gap above the body, okay? But really he wasn't concerned about the size of the gap so much. What we're looking for is that indecisiveness followed by a decision, okay? We want to trade the decision. We don't want to trade the indecision. So very good with that. How do you define a doji? Specifically, what percentage of the close open range? Huh. Okay. I can't, actually, I can tell you exactly. We did work on that with Steve. I remember that. I don't remember, Yogs, what I'm going to do, instead of actually going into the code and looking for you, if you want to drop me a message, I will be happy to look at it in a second and send you that. I do remember we kind of played with a lot of range definitions with Steve, and we came up with something we really liked. So I don't remember exactly what that is, but if you send me an email, I'll be happy to kind of tell you exactly what that is. One of the things I really like about this too is it's completely open. So if you want to kind of tighten things up, you can. It's not very hard. So, okay, we got the scan done. Right here, what I've got up here is I've got the top rank bullish and the top rank bearish, okay? Right here, I've got the doji best friends. If there's a 0 in this column, it's gonna give me nothing, okay? That means that pattern doesn't exist on the chart. So we don't have any doji best friends in that little scan universe today. We don't have any flutter kickers, we don't have any trend kickers, we don't have any kickers. We do have a bobble, a fry pan in an uptrend, and a fry pan bottom. So if I'm looking at Western Digital Corporation right now, not only do we have a bobble, we also have a fry pan bottom. So we could go ahead and take a look at that and show. If I wanted to look at the bearish one, let's go ahead and click on that. We do have Lowe's. Lowe's had a doji bear friend. And if I wanted to kind of take a look at that chart, I'll just go ahead and open it up for you. And this is really kind of a process very similar to what I do every day. I'll go in and kind of take a look and see exactly, okay, what positions am I in? This doesn't seem to be labeling for us. Here we had a doji. We had a bit of a gap down. I'm not sure why it's not labeled. Let me look here. Expert advisor, properties. Okay, interesting. All right, but here's our doji followed by the gap down. Here we had a bit of a 5-pound breakout. If we would have taken that, we would have been getting out of it. But I'm not sure why Lowe's is not giving me the signal that I kind of expected. But I'm sure it's something to do with the settings here or something like that. So yeah, this should have been a doji bear friend. To me, it looks like it's a doji bear friend, but it's not exactly labeling that on the chart, and I can't explain that right now. Here we had Pfizer that had a flutter kicker, and if we opened up that, would be able to see it as well. So in any case, that's kind of the product that we've developed. It's been hugely popular. Let's just go ahead and jump over to the DIAs, take a kind of look at the broad market, and just kind of get an idea of what it's telling us right now. Okay. So again, if I'm looking at this, and I just kind of want to point out how nice this is. So if I'm looking at the market, I had already shown this chart. We had the kicker, with the doji sandwich, and then we kind of finally bottomed out. Came into a kicker that didn't fell out. And again, if you're taking that, you always want to respect the stop losses. Okay, but again, the ability to have these labeled and kind of put on the charts really does work very, very nicely. It's a great little product. It's amazing how well it's been marketed, how well it's been received. And the people that love Steve Bigalow and have been following his work, absolutely. It's a good group of people. So anyway, I'm very proud of this thing. Here's a list of all the patterns that we've got in there. We've got their top rank patterns, the Doji Dynamite, the price patterns. All of those are included. One of the things that we actually put together as part of it is I also wanted kind of a learning mode that was put together. And so when we put it together, I did a full system. And the full expert advisor, I'm just going to show you the difference between them real quick. If we come in here, with the full expert advisor, you're going to get a labeling of all of the patterns, all 50 of them on your chart. So right here, all 50 of this. Here you had that advanced block right before we kind of started to go a little bit sideways. Here's your engulfing. Here you had a kicker. Here you had all 3 of your kickers, right? If I kind of want to more pay attention to only the most important patterns, what I can do is I can come in here, I can go to Expert Advisor, and instead of doing the full system, I can just do the top rank systems. And what I'm going to see is just those systems, those patterns that Steve ranked as his favorite, as the ones he absolutely liked. So in any case, there's 2 different Expert Advisors. I put that in there, and then later on I was like, well, actually it's pretty obviously which ones Steve likes. So I don't think anybody's really going to use it. I think the full one does a really good job of identifying Steve's patterns and the patterns that he likes. I would encourage you to try this. I showed you how to run the scans. It's an exploration I run almost every day. If I don't run it, it's because I looked at the clock and it's 2 o'clock and I haven't traded yet. And 2 o'clock right here in Utah is when the market closes. It's 4 Eastern. So the only reason I don't run this on a daily basis is because I missed it. So it comes. So the new things that we added for CPS3, again, this has been one of our highest rated, most loved add-ons that we've done. We've got decades of work put into it at this point, at least 15 years. But it's got the new features that we put in CPS3, put in 20 new patterns, including 7 of the new top ranked. We formatted those new patterns to stand out for the ones that are top ranked so you could really see them on the chart. We spent a lot of time on look and feel, making it look really nice and making it feel really nice. Because one of the things that with 2, I felt we were kind of getting a little bit cluttered. And so with the patterns that were top ranked, we made those really stand out. But the ones that weren't top ranked, what we tried to do is kind of abbreviate what they were called, kind of make it so that just the chart looked cleaner in general. Really think we did a good job with that. I remember as we were working on it, I'd kind of get done with the meeting with Steve where we kind of work on the patterns. And I'd be like, hey, Edward, do you like this or this more? Edward's a guy that sits right next to me. And David, hey, Dave, what do you think? Should I be this color or this color? So we spent a lot of time really kind of toning down the look and the feel. I'm really glad we got this done. We spent a lot of time on it. It's certainly a product that I'm proud of. So in total, the CPS3 is going to include 11 explorations, 2 expert advisors, 4 layouts, 58 unique patterns, a 70-page manual, and a getting started training video. The training video that I did for it, it just shows you how to kind of do all of the scans, how to kind of put together watch lists, everything that you need to kind of start to run it. And with this particular one, normally it's a product that we sell for $697. If you own an earlier version of the program, like CPS 1 or 2, I know that's probably really, really likely because we have sold so many of them. You can get an upgrade. The upgrade price is going to be $97. But if you want to get this, I'd recommend you do it. It's $547 here at the event as part of our conference. I'm going to give you a money-back guarantee. If you need a trial to Metastock, I'll give you a free trial. And it's a product that I think you're going to really, really like. And so you can do that a number of different ways. Give us a call, 800-882-3040. Metastock.com/conf promo will work, and metastock.com/sales chat. So we'll give you $150 off. Give it a go. I think it's one of the best. It's one of the best products. I'm so proud of it. I think it's so good. So 800-882-3040, metastock.com/conf promo, or metastock.com/sales chat. Todd says, Steve, trading ideas change everything about the way I trade the markets. Okay. I'm not sure what you meant, Todd, but there you go. Great look at the candle potters. Thanks, Steve. Yeah, thanks, Steve. That was great. I do appreciate Steve. I'm going to miss him going forward. So, but you should try that out. It's great. 800-882-3040, metastock.com/conf promo. Of course, we're Metastock. I'm going to move on. We've been rated #1 in our price category for 30 years in a row. Scanning is easy in Metastock. You can test trading ideas and see how they work. You can forecast price movements. You can get real-time alerts, commentary, and signals. All starts at $69 per month. If you want to get an extended trial, give us a call, 800-882-3040, metastock.com/conf promo, or metastock.com/sales chat. Thanks, Jackie. All right. I think we should give away a prize, maybe. All right. While we're doing that, thank you, CMT Association, for sponsoring today's event. We appreciate that. They've been great partners with us. Let's get some numbers. So give me a number. What I need is a number anywhere between 1 and 10,855. Go ahead and put that in the chat, and we will go ahead and pick a winner. What are you going to win? 1 in 10,855. Start typing, guys. The next prize that we're going to give away is Wendy Kirkland's Wealth Building Newsletter. This is a 1-year complimentary subscription to Wendy Kirkland's newsletter. Wendy came in, I believe she talked on Tuesday, and this is actually a newsletter that she puts together that kind of lists all of the stocks that she flags. And we're going to give you a free year of it. So Jackie, thanks for coming. You've been solid with the numbers, Jackie. And Eric and Chuck and Ron. Okay, let's go ahead and go with 5327 for this one. So I'm going to go ahead and do 5327. And it's Roger B. Roger B, congratulations, you won Wendy's prize. I'm going to go ahead and make a note of that. And we'll go ahead and move ahead. Okay. All right. The 9 EMA. Greg, you should know better. All right, very cool. Our next presenter is Kevin Nelson. Oh, actually, here's another thing for our Metastock program. I would like to reiterate, if you haven't tried Metastock, Metastock is blaming it on Greg is blaming it on a typo. Okay, cool. If you haven't tried Metastock, you should. We've been doing software for decades. It's been rated #1 for 30 years straight. One of the things that makes me really happy, actually, it's kind of happened a couple of times already. and this is actually not the thing I was thinking about. One of the things that makes me happy is when people interface with support. So a couple of days ago, we had one of our presenters in there. They were having a problem. They called Lucian, and Lucian fixed it. And they they were like, "Wow, what a great job!" William, and this help that he helped with earlier, just the job that he does. One of the things I think makes Metastock unique is the people, and the different is the people. I don't know the last time you called a software company to try and get tech support, but I wonder how that worked out for you. One of the things that we're really take pride in is the fact that we have more people in support than we have in sales and marketing. And it's not uncommon. In fact, it happens very frequently where all of our surveys come back for the week and it's 100% across the board. People are just happy with the amount of service that they got. I don't know a lot of companies that offer like a one-on-one white glove installation support where they'll sit down with you, show you how to use the product, make sure you understand how the tools work. In addition to that, we're going to give you a training disc that actually, well, it's actually not a disc anymore, but it used to be. We're going to give you a training course that you can go through that talks about some of our favorite methodologies in Metastock, and that's included as well. I mean, I really think there's a reason that so many of our traders have been with us for decades. I think there's a reason that so many people have been rated as number one over the years. And I think that there's a reason that when people come in and they say, how are you doing with your trading, that the vast majority of people say that they succeed when they trade. And for Metastock, I just love the fact that it's a mature product, all the stuff that's in there. And I think unlike a lot of the products that may have just been out for a year or two and something that you kind of just grow quickly out of, it's something that is really a tool you can continue to use. And as you get better at trading, it works better for you. And I'd encourage you to try out Metastock if you haven't already. Give us a call, 800-882-3040, metastock.com/saleschat or metastock.com/conf promo. Any of those will help you get set up for the program. Be happy to help you kind of get everything set up. So there you go. All right, cool. Our next presenter is Kevin Nelson. Kevin actually is the only person that I ever introduced that actually hired me here at Metastock. So one of the things that I'll say about Kevin is don't worry, Kevin, I'm not going to give out any of the stories. But one of the things I will say about Kevin is he's a great resource. Whenever I start a new sales rep on our sales team, we send them through learnmetastock.com, which is Kevin's company, which basically he's going to talk about it more a bit later, but he has hundreds of videos that help you understand Metastock, use Metastock, all of that kind of good stuff. And so without further ado, Kevin, should we see if your audio works?
I hope it does.
I can hear you. So that's
perfect. Okay, well, I'll go with that then.
All right, let's go ahead and make you the presenter.
All right.
I can tell some of the stories if you want.
No, I think we're good.
All right.
I think we're good. All right. So you're going to pass me over the screen or something, right? Or
yeah, let me make you the presenter.
Oh, there you go.
Also, make you the organizer so you can see any questions as they come in.
Good. Yeah.
And then I can see your screen.
So, I mean, just, go ahead and put them in there, and then we'll try to handle them as we go. And Jeff, don't hesitate to interrupt me if a question comes in that actually could be good, as I'm going through it. So I really appreciate it. So just real quick, my name's Kevin Nelson, and I started with Metastock back in the early 90s and worked for him for quite a while there, to say the least. And after that, what I did is I started this company here, which is called LearnMetastock.com. And what we do at LearnMetastock.com is we just help people with their Metastock program in a lot of different ways. So very proud of the site and proud of our service. I think it's actually really, really beneficial if you're interested in getting up to speed with Metastock quickly. And for those of you, who know a little bit more about Metastock, I've got some pretty advanced stuff here as well. I can help you in a lot of different ways, but what I'm going to do is I'd rather actually just kind of get into the presentation, what we're going to be doing here today. And I'll give you a quick tour of our website at the end of our presentation. But again, if you have any questions, just make sure and let me know. Just send me a message in the chat window and we'll try to go from there. And I'll just ask Jeff to kind of help me out and, yeah, don't hesitate to interrupt me if there's something I can help you with. Anyway, so what we're going to do today is we're going to do a presentation on a product which is called the Supertrend indicator. Basically, with the training that I do, primarily where I get most of my ideas and suggestions are from my customers. And what happened with this one is this was just something that a customer recommended that I take a closer look at, called the Supertrend indicator. At the time, I'd never heard of it. I wasn't really even sure what it was. But after doing some research, I found out that it's actually a pretty popular indicator. There's a number of different videos and so forth up on the internet about it and so forth. So I really kind of dived into it. And that's what I'll do a lot of times is I'll take a trading strategy out of a book, magazine, whatever, and I'll just show you how to duplicate it inside of Metastock. So that's what I'm going to do for you here today. So the Supertrend indicator itself is actually a trend following indicator, a lot like, for example, like moving averages and so forth. So if you are the type of trader that likes to trade in the direction of the overall trend, this is a pretty interesting indicator. And what's nice about it is it's super easy to interpret. There's really not much to it at all. In fact, I'll explain to you how it works, and you'll understand exactly how to use it in probably the first 30 seconds. So super simple. And one of the nice things about it is that it automatically adjusts for volatility. And the reason being is that one of the indicators that is part of it is called an average true range, or ATR. And what the average true range does is it measures how much something is moving over different time periods. And what's nice about that is, for example, as more volatile it gets, the indicator adjusts, and less volatile and so forth, again, the indicator adjusts down. So again, it'll actually move along with volatility in the markets. The other thing about this trading strategy itself, it's super customizable, a lot like moving averages. You can use whatever length and settings that you want, and there's countless combinations, but I'll show you how you can customize it. And probably the nicest thing is that you don't have to take my word for it. There's a lot of training available for this indicator out on the internet, and you can go and try all these different ideas. And what I'm going to do is I'm going to show you everything that I make available here to my clients. And what's nice about this, at the end of the presentation, when they make the recording available, if you just want to stop the video and make copies of what I'm showing you, you're more than welcome to do it. But the whole idea is to kind of show you the type of training that we can make available for you. So what I do for my customers, or I did for this product in particular, is I created a number of different tools that are downloadable directly into your Metastock program when you subscribe to our service. And what I created for this one is an indicator, an expert advisor, a couple system tests, and an exploration. So let me show you what I mean and how this thing works. So I'm going to jump over here to the program, and let's just go ahead and open up a chart. I'm just going to open up a chart, for example, of the SPY, which is ETF for the S&P 500, of course. Now, with this indicator, when you download any of the formulas from the Learn Metastock website, what I do is I always put the initials LMS at the beginning of our formulas or systems or whatever. LMS is an abbreviation for Learn Metastock. So you scroll down your list of indicators and find the indicator, which is called the LMS Supertrend indicator. And if you drag that directly on top of your price bars, what this is going to do, it's going to ask you for the settings that you want to use. Now, I originally set this up just to use the default default for the ATR to use the number of periods of 7, and then a multiplier of the ATR to be 3. But I'll show you, of course, with this, you can set it to however you like. But we're going to stick with the defaults here just for the time being. We'll click on OK. And then it'll ask you how you want to plot the indicator. And what's really important at this point is that you merge it with the price scale. And if you don't, then it's not going to make a lot of sense. So make sure that you merge it with the price scale. In my case, I got my price scale over here on the right-hand side. So I'll go ahead and click on OK, and that'll plot our indicator. Now, this indicator, all you're really doing is looking at what the prices are doing in relation to the indicator, meaning like are the prices above the indicator or are they below it? If they're above it, you're bullish. If they're below it, they're bearish. And that's pretty much it. As you can see here, if you get a good run, as I was saying before, this is a trend following indicator. And if you get a pretty good run, you can see that this type of indicator can do really well. So similar to like a moving average. You get on the right side or using the right type of moving averages, guess what? You're going to be very, very happy. What happens with any type of trend following indicator is if you get into choppy sideways markets and so forth, and you don't make any adjustments, a lot of times you'll get what's called whipsawed, where you get in late, you get out late and so forth. But if it trends and you're using the right settings, again, it can be a really good indicator. So as I was saying before, super simple to interpret. If the prices close above this line, you're bullish. And if the prices close below the line, then you're bearish. So I'll just kind of zoom in here for just a second. So right here, where the price closed down below this lower line right here, which it did on this candle, then the line flips to the upside. And then, of course, you're either out of your long position or you're bearish. Or on the other side of the coin, if you're looking to buy, prices are moving up, then you're looking for the prices to close above the upper line. When they close above it, like they did on this big green candle here, then the line will reverse, go underneath the candles, and then, of course, you're bullish. So super simple, super easy to follow. All right. Now, let's go in and talk about some of the different indicators and some of the tools that I created here. So the first thing I want to do is I want to go into the system tester here. And the reason why I want to do this is because when I plotted this indicator, I just used the defaults of 7 and 3, 7 for the number of periods and 3 for the multiplier. But as you might imagine, these settings aren't going to hold up for every security out there in the market. And again, this indicator can be used on anything that you want, any time period, whatever. So let's say, for example, that, okay, it looks like this is a pretty good indicator for the SPY, but, are those the best settings? So what I did is I created a couple different system tests. And to find our system tests, one thing I like to do is in version 18, they added the search capability to the different power tools that I really like. But I'll just type in LMS, for example, and that'll group a lot of my systems that I have on this computer together. So the system I'm going to look for here are the two Supertrend systems. I have two different ones. I have a regular Supertrend system test, and then I have another one with OPT, which is an abbreviation for optimization. So that's one I want to take a look at here first. So I'm going to go ahead and double click on it, open it up, and this will open up the Supertrend, all the formulas and everything else behind it. So as you can see here, underneath the general tab, I've got a quick explanation of how this indicator, works in general. And a quick shout out to William Golson over there at Metastock. William actually is the person who actually created this formula. I don't know if he created it for me, but when I asked him, he's the one that actually created this one. So again, I just want to shout out to him. He did a great job with this. And then once he gave me the basic formula, then I created the different system tests, explorations, experts, and all that other good stuff. So anyway, but then underneath the buy order here, you can see the formula. And what you'll see here is that up here at the very top, there's what's called a deviate and then an ATR periods. So the periods, of course, are the length of the ATR, and then the deviate is the multiplier. So as you'll see, there aren't any numbers here. It just says OPT1 and OPT2. These represent what we call optimization parameters. And this is where we can tell the system tester that I don't know exactly what length, ATR that I want to use. I want to test a range of data, and that's what this is going to do. So if you go over here to the stops tab here, this will show you, the optimizations tab. This will show you the two different optimization variables that we've got set up, OPT1 and OPT2. So OPT1 is going to basically do the different calculations and the different multipliers for the ATR. And what it's going to test, it's going to test anywhere from 1 multiplier up to 10. And then OPT2 is going to test the length of the ATR. So this is going to test anywhere from 2 to 40 periods. Now, if you look down here underneath the total number of tests, this is going to test 200 different combinations because it's going to test every one in between these and, again, put them all together. So I'm going to go ahead and get this started here, and I'll tell you a little bit more about this here in a minute. But now to run it, what I want to do is I want to go ahead and click on, make sure that I've got the right one selected. Up here at the top, I'll enter in the symbol of SPY for SPY. Over here on the right-hand side, I'll tell it to test just going to the long side using the last 1,250 records. And by the way, that's going to equate to about 5 years of data. You can roughly figure about 250 trading days in a year. So 1,250 is going to give you about 5 years. Then I'll test it on daily data. And then underneath the trade options, let me just show you very quickly just my trade settings. So underneath the account, I'm going to run what's called a points only test. And this is just going to return back a raw number of points that were gained or lost. And very quickly, the reason why I use this one a lot is that it's super simple to compare the results against these different systems against each other if you're just looking at raw number of points. You can also test it on money or equity and so forth and do it that way, but this is just the way that I prefer to do it. Now, underneath the broker, by choosing a points-only test, that also takes out of the equation any type of interest rates or margin requirements. So that's another thing that can really kind of muddy the waters when you're trying to compare system test results. But the points-only test, we're just looking at the number of points. Over here on the right-hand side, this is just saying that we're using 0 for commissions. And then lastly, underneath the trade execution, you'll see that we're going to trade everything at the opening with a 1-period delay. Now, what this is going to do is that if I get a buy signal, say, for example, when I come home on Wednesday after work and I want to take a buy signal that was triggered that day, that's going to simulate that I got in at the opening on Thursday. And then if I got an exit signal, say, for example, like on Friday, this is going to simulate that I got out of the trade at the opening on Monday. So every time I get a signal, I'm going to get out or in on the next bar. All right. You'll see I've got nothing set up for slippage. And down here at the bottom, you'll see I've got 100 of the most profitable results for the optimized test. I'll go to that here in just a second. I just want to get this started because this is going to, if we look down here in the lower right-hand corner, this is going to run through 200 different combinations. Now, the first thing I want to talk about as this thing is running is I'm going to run through 200 different combinations here, testing on the ETF of the SPY. Now, as you saw in the setting just a second ago, it said to only keep 100 of the most profitable system test results. Now, the reason being is because that's the maximum when you run an optimization. It doesn't keep all 200 results. It only keeps one. The maximum that it can keep is 100. So that's actually what we'll be looking at here. Now, the other thing too is that even though I'm running this on daily data, keep in mind, I can run this on any time frame that I want, whether it be in 10-minute bars, 5-minute bars, whatever the case being. And in addition to that, any type of security as well. So if you're, a Forex trader or whatever, I mean, this is just an indicator that you can test based on, what the prices are doing, going back, however you want to put it together. So anyway, so when it's finished, we'll go ahead and click on View Results. And here we can see our results. And as you can see here, now I ran through 200 different combinations, and it looks like everything that I test is profitable. Well, keep in mind, when I ran that optimization, I ran through 200 systems, but this is only showing 100 of the most profitable systems. So there is a chance that, we definitely had some, losing trades somewhere or losing systems, but this is just looking at the top 100. Now, we can sort on the results here of any of these columns here. So say, for example, I'll just sort on the net profit, for example. Excuse me. And you'll see that the most profitable one generated over 154 points. It had 8 total trades. There were 4 winners and 4 losers. And then the average profit to average loss was 4.2. So let's just stop here for just a second. When you are running system tests, what you generally want to find is you want to find systems where the average winner is substantially larger than your average loser. If your average winner is 2 or maybe 3 times the size of your average loser, what that allows you to do is that allows you to actually be wrong more often than you're right and still make really good money with that trading strategy because the average winner is that much bigger than your average loser. The problem is that if that falls down around the 1-to-1 ratio or even less, statistically, if you trade a strategy like that long enough, that'll literally wipe out your account. So whenever I'm looking for a trading strategy and system and so forth, I try to shoot for at least a 2, if not a 3-to-1 type of ratio. And as you can see, that's well above it here. So that's good. So then for the optimization periods, you'll see that the OPT1 has a value of 5 and OPT2 has a value of 38. So what this represents, the 5 represents the multiplier, and then 38 is the length of the ATR. So that's what it came up with. And we can go ahead and open it up and double click on it. And then we can take a closer look at the results here too. So when looking at the results, I don't want to get too terribly much into this. I mean, we don't have all that much time, but if we're looking at the results, we can see that this generated 154 points, for example. So the question is, well, is that good? Is that bad? Well, the first thing that I always just kind of really quickly look at is just the buy and hold. If I would have just bought this thing and held on to it for the last 5 years, I'd be up 172 points. But if I chose to trade the strategy, I'd be up 154 points. Okay. So then you think, well, gosh, I mean, that didn't really even beat the buy and hold. Why would I want to do something like that? Well, let's keep going down here. And there's a number of things that we can kind of look at here. But say, for example, if we look at the actual trades where there are 4 winning trades and 4 losing trades, you can see that your average winning trade was over 50 points, 50.8 points, for example, and the average loss is a little over 12 points. So that's that really nice ratio right there. That's that 4.2 to 1 ratio that I was showing you a minute ago. That's saying that your average profit is substantially larger than your average loss. Now, why this is important is that, again, this is just statistically going backward, averaging going backwards. We don't know what the future holds, what the markets are going to do, but we can try to be as objective about this information as possible. And this is just a really good tool that you can use to help kind of put the odds more in your favor. And that's what all this is about. So if we scroll down, another thing that a lot of people overlook is this number right here. This is the out of market timing. This is saying that you were out of the market a total of 474 bars. Well, remember I said a second ago or a couple minutes ago that there's typically about 250 trading days in a year. So that's almost 2 years of time. Now let's go back up here to the top. And so what that means is that you generated 154 points in about 3 years. But in order to generate 172 points, you had to be fully invested for 5 years. So this is another thing to kind of think about when you're evaluating these different trading strategies. And then the other thing I like to look at here, for example, is like the equity line. I like to see what, how this system really did. And here you can see this is a really nice trend here. Obviously, there are some trades in here. And it just like, this is the kind of curve that we're really looking for. When we see this start to step down like this, then I can see, like, for example, like these big flat areas, that just means that you weren't in a trade at that point. And if it's going down, that means that you got into a trade and then you closed it out for a loss. And again, what we're trying to accomplish is, of course, we're trying to accomplish, as smooth of a line as possible up to the right-hand side. Then the other thing I'll do is I'll click on this plot on chart, for example. We'll close this down and then close this down, okay? So this is our equity curve up here at the top. We've already seen this, so I'll go ahead and close that down. And then what I like to do at this point here is then take a real close look at these different buy and sell signals. Now, as you can see here, some of the buy and sell signals are really hard to see. Like this is an exit signal. And I think it's just because of the color of these candles. So what I'm going to do is I'm going to go ahead and I'll double click on the candles. And I'm just going to change the colors of the candles or change them to a bar, first of all. And I'll change the up color to white and the down color to white. Click on OK. And that way we can really kind of see the signals a lot clearer. So here's a buy signal and here's a sell signal. Now, to make sure that we're looking at the right information, the next thing I'll do is I'll double click on the indicator and then I'll just adjust the parameters. So for example, like the number of periods, I want to change that to 38 and then change the multiplier to 5. Click on OK. And now you can see this is exactly why it bought right here. We'll kind of zoom in on this little section right here. And the reason being is because this bar closed above that upper line. And for that reason, you would have gotten long at this point. And so as you can see, the prices actually moved against you. They didn't actually come down and they didn't violate that lower line, which is good in this case. And here you can see they dip down below it. But remember, in order for it to actually reverse or stop, it has to close below that line or close above the upper line. So in this case, it opened below that lower line, but it didn't close below it. So you stayed inside the trade, kept going. And as you can see, this one actually worked out pretty well. And you got out here at a nice profit right there. So that's one thing that you want to do, is that whenever you are looking at these different strategies and testing them out, plot them on your chart, make sure that you understand exactly why these things are buying and selling at these different points, right? All right. So once I actually kind of get to that point, then the next thing I like to do, if, for example, like I want to trade something other than the SPY, one of my thoughts is that whenever I create a strategy, and if I can get something that works well in the SPY, the idea is that if I know as a general rule that the majority of the securities follow the overall markets, meaning that if the market is generally up, the vast majority of the securities are going to be up. If the market's overall down, I know the vast number of the securities are also going to be down. So the idea is that if I create a strategy that works fairly well on the SPY, then maybe I could actually take this type of information and then transfer it over to individual securities and see how they do that way. So one thing you could do with this idea here is you could go back into the system tester, for example. And what we could then do is we could then run those settings, those fixed numbers that we came up with, and we can test them on individual securities. So for that reason, I created this system test, which is just called the Supertrend system test. And we'll go ahead and open it up. And with this one here, you can see that this is the multiplier feed up here at the very top. And then the length of the ATR is the second field. Now, these are the two fields that you can change to whatever number that you want. But one thing I always recommend is that not to change original formulas. Instead, make a copy of it and then make as many changes as you want to that copied version, because that way you always have the original to fall back on. So that's what I'll do is I'll right click on it. I'll choose copy. And now you can see I've got a copy of that system test. So I'll go ahead and open it up. And now again, I can make whatever changes that I want. I'll just make sure I'm looking at the right one. It says copy at the end, so that's perfect. So then what I can do is up here, then I can modify this and do whatever I want. So for example, for the multiplier in this case, I'll go ahead and change that number, for example, oops, let me go ahead and try that again. Change that, for example, from 5, and we'll change the length of it to 38. And if I do this for the buy side, I think I want to do the exact same thing for the sell side there as well. So again, I'll change the multiplier to 5, and I'll change the length of it to 38 and click on OK. So now at this point, what I've done is I just put in those hard numbers into this one system test. And now if I want to run it, for example, maybe like on a group of securities, then I'd go down here and then choose like the group that I want to run it on. So in this case, for example, I'll just run it on the S&P 100, and then I'll click on my start system test. So down here in the lower right-hand corner, this will give you an idea that we're going to run through 100, in this case, 101 securities, but we're testing just those fixed numbers, the multiplier of 5 and the length of 38 on it. Now, the other thing too is that I went ahead and just clicked on start system test. And what I didn't do is I didn't make any changes over here. So I just want to make sure that I'm still testing it alongside, you know, using 5 years of data and everything, and all my other settings, like my points only and so forth, is all set. Now, the other thing too is, the other thing I'm doing too, as you saw earlier, is I'm putting in a 1 period delay. And this is another thought that depending on what you're actually testing and the type of program that you have, if you've got the Metastock real-time or professional version, another thought or idea is that if you want to try to speed up these signals, in theory, you could actually run these types of system tests close to the end of the day of the market before it closes, come up with your signals at that point, and then get in, for example, at the close of the market rather than waiting for the open of the next day. So this would really only work for those of you who have the Metastock real-time or professional version, but it's just another thought or another idea. So I'll go ahead and click on our view results, and let's take a look at this. Kind of open this up. All right. And here you can see, it looks like we've got kind of a mixed results, but I'll go ahead and sort, for example, on the net profit column here. And you can see that the majority of them looks like about, I'd say about 60% tested profitably, maybe 40% tested unprofitably. And then what we can do is we can start to go through here and take a look at them. So Broadcom, for example, you can see was the top producer. It actually produced over, 585 points. It had 6 total trades, 3 winners, 3 losers, and the average winner to average loss was 5.83. So that's a really high number. We'll kind of open that up, for example, take a look at it. You can see in this case, again, it didn't beat the buy and hold. The buy and hold during that period of time was 682. This was 585, so about 100 points less. But we traded a total of 6 times. And again, down here at the bottom, you're out of the market over 400 bars. So you weren't in the market that whole time. The other thing about that, too, is that if you're not in the market for that whole length of time, obviously that frees you up to do something else with your money as well. So that's Broadcom. Let's take a quick look at the equity curve. And you can see the equity curve is not bad. Actually, it looks like it had a real nice run here. This one looks like it closed up, but this one actually was a real nice run right here at the very end. So again, you can plot those on your chart and so forth. The next, by the way, what I did is I just closed out of those results of that system test. If you want to go back into a system test result, if you look at the end of the system test, if it has an R inside of a set of brackets, that means that there's a report available for it. So the way that you can do that is just right-click on it and then go into the report, and you'll be right back to where you were. So you can select the system test, click on View, and again, we're right back to where we were a second ago. So I'll go ahead and sort on the net profit, open, and again, we'll kind of make this a little bit bigger. So the next one down here, you can see is NVIDIA. NVIDIA did very well. 4 winning trades, 4 losing trades, and the average profit to average loss is over 10. I mean, that's a really big number. Netflix, look, the next one down, Netflix did 326, 6 trades, 6 winners, no losers. So for that reason, it couldn't even calculate the average profit to average loss, meaning all 6 trades were winning trades, so it couldn't calculate the losses. Kind of open that one up. You can see that on Netflix, for example, if you would have held on to that for 5 years, you'd be up 163 points. But trading this really simple system, you'd be up 326. So again, some pretty nice results. And again, this is just really, really simple, really basic. And you can modify this as much as you want. And the other thing too, of course, is that let's say, for example, that you really like to follow one particular security, for example. You don't have to run it, on the entire group, of course. Then you can zero in all your system tests and everything else on that one individual security and kind of dial it in for that one. So, and I'm just trying to show like blanket results here, but I'm sure you could do quite a bit better on a lot of these securities by zeroing in on them. So now, in addition to that, what was I going to do? So one other thing that I want to talk about with system testing that I came across in my research is that I saw a lot of examples of where they took this trading strategy, but they combined it with other types of methods. So for example, let's go ahead and close this down here for just a second. And the idea here is, as I was saying before, this is a trend following indicator. Right. So if your security is trending and you're using a trend following indicator, obviously it's going to do fairly well. Well, so the question is like, well, how do you know if it's trending or not trending and so forth? That's a whole nother discussion, to say the least. But one really simple way that I saw a lot of people actually combining with this strategy was just taking a very simple 200 period exponential moving average and just saying that if the prices are above the 200 period exponential moving average and you get a buy signal, go ahead and buy it at that time. But if the prices are below that average, ignore any buy signals. So here's something that we could do. We'll go ahead and close this down here for a minute. And let me just show you how we could do something like that, or how you can do it or actually modify it. But I'm going to go back into this system test, this copy. So I'm going to go ahead and open that back up. And I'm going to go to the buy order here. So in this buy order formula right here, this last line right here, this is what triggers the actual signal itself. And that is, it's identifying a buy signal when the closing price crosses up above the indicator, which is this STI indicator, which is then referenced in this formula. Something you may or may not want to know. But anyway, so this is what's happening here. This is how you get a buy signals, because the closing price crosses up above it. Now, what if we wanted to add a second criteria or a third criteria, or whatever the case may be? In this case, let's just add a criteria of saying that the closing price has to be above a moving average in addition to this buy signal. So to do that, what I'd do is I'd put the word and at the end of this, and then put in my second criteria. My second criteria is that I want the closing price of the security to be greater or above its 200-period exponential moving average. Now, this, of course, is where you kind of get into the formula language and so forth of the program. And I know not everybody out there wants to learn about formulas and everything else, but I do want to say that Metastock is a really powerful program. And the more that you understand about it, I think the more that you're going to get out of it too. And I've got a lot of different ways that we can help you with our training and so forth. But the formula language, even if you don't want to become a programmer and create your own indicators and systems and everything else, at least if you understand what the formulas are telling you, it will be that much more beneficial. It'll be that much more helpful to you if you can at least understand why this thing is telling you to buy or why it's telling you to sell. So in other words, so let me continue on, and let's just say that what I want to do here is I just want to identify the closes above its moving average. So how do you write a moving average? I'll just jump down here real quick and just show you how we could do it. Down here at the bottom, the lower right-hand corner here, let me close that window down here for just a sec, is that whenever you're inside of any of the power tools inside the program, you'll always have access to the different formulas or the formula library. And inside of this window here, you'll see there's a button called Functions. And if you click on this, this is going to open up another dialog where you can access the library of pre-built written formulas that then you can use in your program. So if you want to, say, for example, include a moving average in your system, but you don't know how to write it, you can open up this functions library. And then over here on the left-hand side, these are the different categories that we could use. So as you can see, there's a lot of different types of categories. And if you're not sure which one to go in, just keep it on the all category up here at the top. Then over here on the right-hand side, then you can scroll down through this list, or you can just start typing like MOV for moving average, and that'll take you down to those groups of indicators. Now, to help you out here, if you look down here underneath the format, this will give you an idea how the formula is actually written. So in this case, it says move, data array, periods, and so forth. And then down here at the bottom, it says paste arguments and show English names. So if you have those both selected and click on OK, that'll paste it right in there for you. So all you really need to do is replace these different areas with the items that you want to know about. So in this case, I want to create a 200-period exponential moving average of the closing price. If that's the case, I want to replace data array. I'll replace all that with the word close. And for the periods, that's the length of moving average that we want to use. So we're going to use 200. And then these are the different types of moving averages. E is exponential, S is simple, T is time series, TRI is triangular, VAR is variable, W is weighted, VOL is volume adjusted. I know it's a lot. So I'm going to go ahead and just get rid of all these other ones and just leave the letter E, which is a abbreviation for exponential. So in other words, our formula is the closing price is above its 200-period exponential moving average. So this is what I'm looking for. I'm looking for this to happen and the closing price to be above its average. So let's click on OK. All right. And now let's go ahead and rerun this one. Let's go ahead. Let me go back in here for just a sec, just make sure I got that. That looks okay. That's right. Okay, good. A lot of times I can get moving pretty quickly here, so I just want to make sure and check it. So let's say, for example, I'll just go ahead and rerun it on that same group of 100 securities here, and we'll just kind of see what we come up with here. So the only change that I made here to this system test is that we're still going to be looking for long positions. We're going to be looking for the securities that are breaking or closing above that upper line. And then what we did is we said only take that long position if the closing price of the security is above its 200-period exponential moving average. And if it's not above that exponential moving average, then don't take that trade. So we'll just kind of see what happens. But these are the kinds of things, once you kind of learn more about the program, these are the kind of what-if questions that you can ask the program and just to see if you can improve on something. So I'll go ahead and click on View Results. And let's take a look. We'll take a look at the net profit here. And let's see what happened here. Okay, so here's what we've got here is, as you can see here, by adding that particular condition to this, we've got about half winners, about half losing systems. And up here at the very top, it looks like NVIDIA is actually the one that did the best at 437, then Broadcom is at 403. So in fact, it looks like the results on Broadcom actually went down a little bit. So the one thing that I've kind of have found over the years is with system testing and system development and so forth, is a lot of times the simpler the system, the better the system. I think a lot of people sometimes try to just add so much to a particular trading idea. They just want to add one more thing. And man, if I could add one more thing, that's going to make it perfect. That a lot of times it doesn't help overall. And that's kind of what I've found anyway. But let me just show you what we're looking at here with Broadcom. So I'll go ahead and open that back up. And here again, you can see we're at a little over 400 points. Of course, it still isn't bad by any stretch of the imagination. But what's interesting is now look at this out of market timing. You were out of the market 847 bars. So, remember, there's 250 trading days in a year. So now you're out of the market over 3 years, maybe 3.5 years. So meaning that you generated this number in about 1.5 years. So this is where this kind of stuff gets pretty interesting, is when you can go in and start asking at these types of questions. And of course, what we always want to do is we want to take a look at the equity line and say, okay, so look at this. So you weren't even in the market during this whole stretch. You're in the market here. It looks like you had a losing trade here, but looks like you had a great trade here. So let's go ahead and plot it on the chart and take a closer look at this. So up here at the very top, this is our equity curve, like what we saw before. Go ahead and close that down. And let's go ahead and add the indicators into this one as well. So I'll go ahead and grab the Supertrend indicator, and we'll go ahead and plot that out here on our chart. And we want to make sure we're using the same parameters that we came up with before. So this is 38 periods. The multiplier is 5. We'll click on OK. Make sure and merge it with a scale. All right, so that plots our indicator now. And then the second thing what we want to do is we want to add a moving average to it. So let's go ahead and grab our moving average. We'll drag that on here. And this one, we want to make a 200 period exponential of the closing price. You'll click on OK, and that's our blue line here. So this is our two conditions now with this one, is that we're looking for the prices, number one, to be above the moving average, which they were just barely here at that buy signal. And then what happened is when that bar, I'll kind of zoom in here so you can see this here a little bit better here. But you can see that this closed above that 200 period moving average, and it also closed above that upper line. And for that reason, you got that buy signal. And that's what generated that signal here at the end of this move here. So those are the kinds of things that you can ask the program to do. Is you can come up with, of course, with your own questions and put these things together and so forth. But this is the kind of stuff that I help people with a lot. So, and again, this is where this whole idea is of this particular class even came from. And that is a suggestion from a customer to begin with. So I just, again, get my best ideas from my customers. And this is what I do, is just literally help people do this kind of work. So the other thing here too, that I created in addition to this, of course, is an exploration. And with this exploration, this will allow you to go out and search or find securities meeting these different criteria. So again, up here at the search dialog, I'll go ahead and type in LMS for Learn Metastock. And the one that I want to open up is this Supertrend exploration. So we'll go ahead and open this up. So this exploration here, you'll see I've got a little explanation right up here. It'll give you the closing price, the day of the month. It'll give you a 1 underneath column C if there's a buy signal, and a 1 underneath column D if there's a sell signal. Now, for the buy signal, you'll see the default is just 3 and 7. So I want to change those values. But before I do that, like I did with a system test, instead of modifying the original formula, I want to make a copy of it. So I'll right-click on it. I'll choose copy. All right, and make sure I'm working with a copy up here. Then I'll go to the buy formula here, and I'll change the multiplier, for example, to 5. I'll change the length of the ATR, for example, to 38. I'll go to the sell, and I'll make those same changes there as well. So I'll make the multiplier 5, and again, the length of 38. All right, so let's go ahead and run this one. We'll click on OK. And let's go ahead and make sure we've got the correct one selected, which is copy. And then down here at the bottom, I'll run it on the S&P 100 using the last 5 years of data up through the most current data that it can get. So we'll go ahead and click on Start Exploration. And then, of course, this will begin the process of scanning through those 100 securities. Now, if we wanted to also add, for example, that moving average criteria to it as well, that's another thing that we could add to it and say, hey, besides just a buy signal, I want the security to be above its 200 period moving average as well. That would be a really simple addition if you just follow the same steps that I showed you in the system test. So with this one, you can see there's 2 different securities here that came up. Gilead actually has a sell signal, and Walt Disney, for example, has a buy signal. So we'll open both of those up and take a quick look. So for example, here's Walt Disney. We'll kind of zoom in on this one. And let's go ahead and plot our indicator. I'll go ahead and drag that again directly on top of our prices. I'll make the changes to the parameters here. We'll number of periods of 38, the multiplier to 5. Click on OK, and then click on OK. So here's why you got a buy signal here on Disney, is because we had a very strong bullish candle here to end out the day. Quite the little gap here from yesterday's trade right there. So that's Walt Disney. And then we've got, let's go ahead and close that one down. And then we've got Gilead, and this is the opposite. This one's actually given a sell signal. Again, same thing. I'll change the number of periods to 38 and the multiplier to 5. And the reason why we're getting a sell signal here is exactly the opposite, and that is this large candle here is breaking down below, or broke down below this lower band right here. And for that reason, it's then indicating a possible sell signal, okay? Now, in addition to this, what I've also have created, let's jump back over here, for example, to the SPY chart. I'm gonna go ahead and open that back up. I'm gonna go to my chart. I'm gonna open up the SPY. Now, in addition to this, I also created an expert advisor, which can be helpful as well. So, for example, the way that you could work with that is go to your expert advisor, open up the LMS Supertrend Expert, click on, well, first of all, edit it if you're going to change the periods on it. And you'll see underneath the symbols tab here, I've got 2 different signals. I got a buy signal and a sell signal. So I'll choose the buy signal. And if you want to modify this for the settings that you found before, this is where, of course, where you'll do it. So I'll change the multiplier, for example, to 5, and I'll change the length of it to 38, and then do the same thing for the sell signal. So I'll go into that, and then again, change the multiplier to 5, and then the length of it to 38, and again, click on OK. All right. So once you've got that, you make sure you have it selected, click on Attach down here at the bottom, and then click on Close. And then what this will do now is this will actually give you the signals when they occur. So here's our large sell signal here on this particular bar right here, because this bar closed below that lower line. And if we go back here, for example, you'll see that this is giving you that large buy signal here underneath that because of this bar closing above that upper line. So pretty easy. I mean, pretty simple to kind of follow along here. But, you know, the nice thing about creating an expert like that too is that these signals will automatically update with the data. One of the questions that I've received numerous times, and that has to do with the signals generated from the system test. And the question is like, well, do these symbols from the system test, do they update when you get more data? And the answer is no. The only time they do is when you rerun the system test. But this is why you want to create the expert advisor, because what the expert advisor does is the expert advisor will give you real-time buy and sell signals as they occur, as you get the data. You don't have to rerun anything. All you have to do is open up your chart, make sure the expert advisor is attached to it. So again, a lot of different ways to use this to really kind of pull this whole thing together. So at this point, that's kind of what I've got here for you. I hope that that's helpful. And if it's okay, I'd just like to give you just a real quick tour of what we do here at Learn Metastock and, you know, and different services that we offer. But our website, again, is up at learnmetastock.com. And you can click through these different tabs up here at the top. But primarily where you want to go is you first want to take a look at this live classes. We do 3 live classes per week on Tuesdays, Wednesdays, and Thursdays. Our schedule is always changing depending on what we're showing at the time. And once you become a member, you just click on this join live class at the time of the class. And then, of course, you can join right in. And the nice thing about the live class is you can come in, you can ask questions. And what's really nice, too, is that if we really need to, we, of course, can also share computer screens there as well. So that can be really, really helpful if somebody's kind of stuck on something. Now, where the majority of our customers spend their time, though, is underneath this section, which is called the video library. And what we do is inside this library, we have well over 100 different instructional videos here. So one thing is that if you are interested in attending our live classes, but you live outside the US or you are working during those times, you can't attend our classes during those periods, well, we always record our classes, and then you can always go underneath the live class recordings, and we put up the previous week's recordings up there for you. So you'll never miss a live class if you'd like to see it that way. It'll just be recorded there for you. So that's always available for you. But in addition to that, then we have a number of different types of ways that we can help you. But say, for example, if you're just getting started with technical analysis, you might want to start here and go, just start clicking on these different ones and start watching some of these different videos. And one of the things that can be really helpful in kind of getting you up to speed with these different concepts and so forth is with a lot of the videos that we've got is we've also created, for example, quizzes that can go along with the video. And all these quizzes are really going to do is they're going to help reinforce, what we were teaching in the video. And then it'll give you a score at the end of the quiz there to help you identify any strengths or weaknesses. Now, in addition to that, you'll see that we've got all these different categories here, whether you're just getting started with Metastock or you want to jump into some of the different tools. One of the things I always recommend everybody to get started with is this section, which is called Getting Started, is to watch these first 4 videos, Metastock 1 and 2, Next Step, and Metastock Advanced. And if you watch all 4 of those videos, that's going to give you a really good head start with the Metastock program. It's going to give you a very good foundation because from there, once you understand the basics of how everything is kind of put together and how to use it and so forth, you can then jump out to these different power tools, for example, and jump right into them. And you're going to have that much more of an understanding of really kind of what to look for. And as you can see with the Expert Advisor, Option Scope, System Testing, we've got classes on all of these. And there's really helpful videos depending on what you want to get up to speed with. And as I was referring to earlier, if you want to learn a little bit more about the formula writing, we've got a number of different formula writing videos that we can help you out with. Videos on the RMO. Here's a section just on stops. And this is an area that a lot of people tend to overlook, especially newer traders. That is, they spend so much time trying to find that perfect entry that they kind of don't really think a lot about where they're going to exit. They're just kind of like looking at that, wow, that perfect buy signal. Man, the price has shot up from there and I would have made all kinds of money. But, concentrating or figuring out where you're going to get out of the market when you get into the trade is just as important, if not more important, if you ask me. But the majority of the area where people spend their time on this site too, where I get a lot of feedback and a little different ideas of what to present, is this section here, which is called the trading strategies. And this is where we'll take an idea, whether a video, a book, a magazine article, whatever the case is, and show you specifically, how to actually duplicate it. So this is what we did today is the Supertrend class. So if you want to watch it on your own, of course, you click on the watch now. You can watch the video on it, number 1. And then whenever we create the formulas for these different systems, over here on the right-hand side underneath the resources, you click on that and you can download all of our formulas directly into your Metastock program. So I can't guarantee or promise you a lot, with our training, but one thing I can guarantee and promise you is that I can save you a massive amount of time and effort if you spend time going through our training, because I've been doing this for, I don't know how long, 20 some years now. So, I've got a pretty good understanding of this stuff, and I think I can help you out if you need some help there. And I put all this together here for you. So hopefully you don't have to struggle going through all this stuff and make this whole thing that much more useful for you. And then start using this thing to trade on your own. So that's what it's all about. So that's what I've got here for you. Jeff, I'm going to go ahead and hand that over to you. Are there any questions or anything that I can help out with?
Well, we did point out that when you said, hey, thank you, William, that was probably the third time today. Somebody said, thank you, William. Yeah. We also had a comment earlier from about Lucian a couple of days ago, and we always get good feedback from everybody over there. They do such a great job.
Yeah, they really do. And I mean, like you were talking about in your previous presentation, how good the support department is, and I couldn't agree more. I mean, they are super knowledgeable and super helpful. I think you'd be hard pressed to find anything better.
Now, Jackie had a question that I was a little confused on, so I'm going to read it to you. She said, "Is the recorded class only from the previous week?" But I know there's like hundreds of videos out there.
Right.
So is there a specific? And I was actually doing some coding over here myself. So do you know what she might be talking about?
Yeah. So that's a really good question, actually. So for example, like what I do in this live class recordings is we just put up the previous week's live recordings, right? But let's say, for example, like the week before that, we did a Formula Writing 2 class or Formula Writing 1, for example, and you wanted to see that video. Well, everything that we do will be inside of here. So if you wanted to, see Formula Writing 1, you could either go down here to the Formula Writing section, for example, and then you could just watch this one. And this is basically the same concept. Again, like I say, except, we did it previously and we put it up on the site. So I hope that answers your question. But the point being is that everything that we do live, you will find a recorded version of that subject on the site.
Cool. Yeah. Let's see. Oh, yeah. One of the things. Okay, Kevin, that's all the questions we've got for you. I do want to talk a little bit about the special offer that we're going to do, and I'm going to make myself the presenter. I also wanted to say, hey, thanks for hiring me here.
Keep up the good work.
All right. Thanks, Kevin. And as I said a little bit earlier, every time we bring in somebody, it's just such a good resource for us. I remember, every time we bring somebody in, whether we're starting them in sales or support, the first thing that we have them do is we have them log into learnmetastock.com, and we have them spend like a couple weeks up there and just learning about it because it is such a good resource. So you got 3 live classes per week. You've got hundreds of videos, including basic videos, expert advisor videos, system tester videos, videos on stops, the risk of ruin video, so many videos that are included. One of the things that I really like that is included in there is actually one of the things that Kevin will do is he'll take an issue of Stocks and Commodities magazine, and he'll take a system out of that, and he'll create an expert advisor and scans and system tests for Metastock, and then he'll make those available as downloads on his website. But because he's not really kind of invested in the systems, you basically kind of get a really good kind of objective overview of kind of like how the system works and what kind of the pits and maybe the hazards might be. And I think he does a really, really good job with it. And so, as part of the LearnMyTheStocks.com subscription, you get access to all of those systems. There's 21 complete systems. It includes 9 templates, 62 indicators, 14 expert advisors, 28 system tests. I'm noticing I need to, this side a little bit, and 13 explorations. So it's very, very extensive in terms of what's available there. And we are basically it's $99 per month as a subscription. The thing I like about Learn Metastock is it really does. Metastock is a tool. The more you understand how to use it, the better it's going to work for you, right? I always would tell people it's like a toolbox. There's a screwdriver, there's a hammer, there's a power screwdriver, there's a wrench set, and there's some incredible tools in Metastock. but those tools are only going to be as effective as your ability to use them. And so what I would recommend is if you've been using Metastock for a while and you want to understand better how to use it, do a subscription. If you're just starting Metastock, this is a great thing to pair with the subscription, because what we're going to do is going to give you a 3-for-1 on it too. So if you subscribe to learnmetastock.com, you'll pay $99 and you'll get 3 months. You'll be able to use it December, January, February 9th. It pairs great with Metastock because it's going to help you learn it. It gives you a lot of time to kind of go through videos, all that kind of stuff. And it is a great thing. I mean, even if you just pick up a little bit from it, it does really help you get the most out of the tools that you're running. So to find out more about that or to get that, go to metastock.com/learnmetastock 3-for-1. Give us a call. We'll be happy to set that up for you, 800-882-3040. Or you could also go to metastock.com/saleschat and get it that way as well. So, and let me go ahead and type in the URL right here. Learn. Okay. I can't see what I'm typing. Okay. All right. So thank you very much, Kevin. Appreciate that. And another great session. 3, 4, 1. Okay. All right. Let's go ahead and go do some thanking of the sponsors. And I think it's been a minute, and let me go ahead and do this one instead. I don't think I've talked about AAII, and I definitely have talked about. So let's talk about AAII for a minute. It's been a few sessions. AAII, we want to say thank you to AAII for sponsoring, the American Association of Individual Investors for sponsoring the event this week. You can find out more about them at AAII.com. Nonprofit, been doing nonprofit work. It feels weird to say been in business since, if it's a nonprofit. Been doing nonprofit work since 1978. Helped millions of traders do all kinds of stuff from market research, sentiment surveys, portfolio analysis, all kinds of stuff. So AAII.com. So there you go. And I think that makes it prize time. So let's do a prize. We're going to do a random prize draw on here for people that have chatted in with us a lot. So, it'll be the last prize of today. What's it going to be? I'm glad you asked. Let's find out. So, where is my prize sheet? Okay. All right, this prize that we're going to give away is Melissa Armo's Stock Swoosh Monthly Market Subscription Report. And so this is basically a prize by Melissa. Melissa came in a little bit earlier this week, and she talked about the gas strategies that she likes to use in the markets. Let's go ahead and pick 2 random winners. Okay, let's do it. Okay, I'm not looking. Try not to look. That chat is huge. Okay. Out of YouTube, if your name is, and I'm not sure you're registered or not, you're going to have to email me. Metastock is going to put my email address in the thing, but your handle is dogleg14. So if that's you, go ahead and get in touch with us. Send me an email, and I will go ahead and get you set up for that. Let's pick out one from the GoToWebinar platform. So here we go. Just scrolling a little bit. Okay. Oh, Jackie F. Okay. Write that down too. Jackie got picked randomly. Jackie's been here for days. I'm glad she won. So Jackie, congratulations on that. And let's go ahead. And thanks for participating. Thanks for being here. I hope you guys are all enjoying the session. Jackie. Okay. All right. Now for prizes, what's going to happen is next week, when I have a second, I'm going to send all the prices to the people that are going to distribute the prizes. So you'll hear directly from like Melissa or Stocks and Commodities or whatever the case may be on your prize. And that should come in early next week. So let's go ahead and kind of, of course, we are Metastock. The Metastock has been rated #1 in its price category for only 30 years in a row. We've talked a lot about how we love scanning and the ability to scan markets and find those opportunities, the ability to test trading ideas and figure out what works well. The forecaster, Scott talked a lot about our patented forecaster and how it works and the statistics that it uses to kind of help you identify the probable price movements in the future. And then, of course, real-time alerts, commentary, signals. Great package. Been rated #1 30 years in a row. So the offer that we're doing today is if you subscribe for a month, we'll give you a second and a third month for free. The Metastock DC is only $69 a month. That's our end-of-day version. It'll cost $23 per month to try that out for 3 months. For real-time, it's $265. It includes that institutional quality data feed. So we'd love to help you get set up with Metastock. Metastock.com/conf promo, Metastock.com/saleschat, or 800-882-3040. So very good. All right. Our next presenter is awesome. And also, I think maybe joining us from a cruise ship. So Daniel Sinnig has been creating indicators for a long time and for Metastock for a while. He's got some really, really cool technology that he's going to share with you. He's got the ability to go in and do kind of like an automatic system test. If I'm going to say anything about Daniel, he's a good presenter, but he's a really, really smart technician, and we love having him in here. And so, Daniel, how are you doing?
What's up, Jeffrey? Nice to be back on your show. How's everyone doing?
We're doing great. Let me see. I just made you an organizer, but also let me make you the presenter. So, and that way you can see all the questions if they come in as
Thanks.
well. And then I know Nicholas is here to help you, so I'm going to make him an organizer too, because he's not going to be much help unless he can see the questions as they come in. So that's all taken care of. Daniel, it's all you. You ready to go?
Thanks, Jeffrey. So thanks, everyone, for staying on so long. I know this is the last presentation of today. So I'm really grateful that you guys stuck it out so long, and hopefully I do it justice to by giving you something that you can take home, and perhaps it will enrich your trading life or trading future from now on. So the topic. Can you guys hear me, Jeffrey?
Yeah. You're coming through good. I was just going to say I'm going to get out of the way, but I should have just got out of the way. So it's all you, Daniel.
Perfect.
We can hear you great.
Awesome. Okay, so the title of this presentation may sound a bit cryptic, but there's a meaning to it. So it's called Spearhead Scanning for High Probability Trades. And I've chosen this title on purpose because it serves two things. First of all, I want to highlight, and I see this every time I come on, what kind of a great scanning feature Metastock has. It is my favorite feature of Metastock. It is so awesome. It saves you so much time. It saves me a ton of time. It is part of my daily routine. It's awesome. It's really cool. I'm going to employ this technique today to find some really cool trade ideas. And the second keyword of this title is high probability. And we've come up with something that will estimate for you how high this probability actually is for your next trade. It's like a crystal ball of some sort. And these are the two topics of today's presentation. Before we get into this, let me expand a little bit further. Just assume for a second, if you will, how would you trade if you knew the odds of your next trade before taking it? If you knew, for example, that the odds of my next trade would be 73%, I have a success rate of potentially 73%. Wouldn't that be cool? Or perhaps vice versa. If the odds of your next trade would be perhaps only 21%, what would you do? Well, I think it comes down to a very simple answer. If the odds are in your favor, you would take the trade. And if they are not, you would stay away. And oftentimes, not taking a trade, staying on the sidelines is the best trade advice that you can get. And this is what this presentation is all about. Now, I come on Metastock quite often. And the last time I came on was actually just a few weeks ago on the Euro Summit of a Metastock event. And in there, I proposed a trade idea. It was my trade idea of that time from October 23 to short Team. Team is Atlassian. It's a great software company, but the stock has its ups and downs. I called this trade to go short on October 23 at a price of 186.30 for a profit target of 160. Now, currently it is trading, I just checked today, at 170.28. The way I found that trade 3 weeks ago was by simply using Metastock's scanner and then looking at the estimated probabilities. These two things come together. It makes it very easy for me to find these trade ideas. And guess what? I did the same exercise this morning. And once again, used Metastock scanner using our indicators, and they found another trade. This was my trade for today, which is for Synopsys. In this case, it's going long. The current price around 507 with a profit target of 558 and the stop is at 466. And how I found this trade and why I picked this trade in the first place, I will discuss in today's presentation. All right, so please be comfortably seated. Let's get started. All right, so a few words about myself. My name is Daniel Sinnig, and I believe my path or my career, or my background, I should say, is perhaps a bit different from the backgrounds of the other speakers that you have seen on this event. I was actually a software engineering professor in software engineering and computer science. And for many years, I've been teaching at the university level. I've been doing research. I even have reached my professor profile. But you know what? I was always fascinated by the world of trading. I started trading on the side, picking my stocks or doing some day trades, all these fun things. But you know what? After donating quite a few funds, quite a bit of money to the market because things didn't go so well, I came to the hard realization, oh man, trading is difficult and I need help. And for me, as a software engineer, needing help meant I need better tools which can help me in my decision making, which will help me make better trading decisions. And so I started programming. I rolled up my sleeves and I got to work. And the first tools that I have written, they are still available on our online store, tradingindicators.com, because I realized, well, if these indicators are helping me make better trading decisions, perhaps they would help others too. And this is really how the story behind tradingindicators.com started. Now, over the years, this has been like 10 years ago, over the years, we've written more than 500 trading indicators, fully automated strategies, trading dashboards, trading scanners for clients all over the world. Many of the educators that you've seen on this conference, like Jeff Tompkins, they've used our services for their indicators. So we cater to retail traders, we cater to trading educators, we cater to institutions, and we have all one common mission: to create tools, to create indicators, which will make us better traders, who will make better trading decisions. So this is our mission. Anyways, enough about myself, enough about tradingindicators.com. Let's get to work for this presentation. Before I start, a quick reminder that, of course, as you know, trading does contain risk and is not suited for every investor. If you trade, make sure to only use risk capital, which is defined as capital that, should you lose it, actually, it should not affect your lifestyle. When it comes to backtest performance or hypothetical performance, keep in mind that this is not necessarily indicative of future performance. All right, so the lawyers are happy. I am happy. I hope you guys are comfortably seated. Let's get started. And back to the original assumption that I presented to you at the very beginning, where I proposed the idea, is it possible to estimate the odds of your next trade before entering it? Can this be done? Is this possible? Well, the easy answer is yes, it can be done, thanks to what we call our instant efficiency technology, which displays to you directly on the price chart, or in case of Metastock, in the expert commentary, the odds, the estimated odds of your next long trade and your next short trade. So for example, here 91% for your next long trade and 87% for your next short trade. But then you may, and this is possible because the indicators that we have developed, they analyze historical price action, they analyze historical signals, and based on all this, they come up with these odds. But you may ask yourself the question now, well, hey, hold on a second. This is based on historical data. Didn't you just say, Daniel, that Historical performance is not indicative of future performance. That was right in the disclaimer. What's going on? Good question. I would have asked the same question myself probably. And in fact, we did ask ourselves this question. In fact, what are these odds? What are these numbers actually telling us? Is there any value in these numbers going forward, going into the future for the next future trade? So to get to the bottom of this, if these odds are actually useful, we conducted a very comprehensive research study. So we went back to the drawing board and we conducted a system test, where we tested a swing trading system which would trade 84 big US stocks like Tesla, Apple, IBM, Microsoft, and so forth. And as a typical swing trading system, each trade lasts approximately 1 week. And it was run from January 2022 all the way till the end of 2022. And over the course of the system, it generated 6,827 signals, both long and short. All right, so we got all these signals, and then we looked at the performance. And the first performance that we looked at was, what if we would have traded every single signal? Meaning 6,827 signals, resulting in 6,827 trades. And this was the performance that we got. Whew, not very pretty, you probably will say. This is quite underwhelming. And nobody in his right mind probably would trade a system like this. It's a losing system. Not good at all. And this was the unfiltered performance where every signal would be traded. But then we did something. We looked at the system again, and we then did the test again, and we only traded the signals when, at the time of the signal, the odds were in our favor. The estimated win rates were in our favor at the time of the signal. So we were not cheating by looking at it at the very end. So if a signal came up on, let's say, May 2022, you would look at the odds as of May 2022. So we rerun the test, and this was the resulting performance, where we only took the trades where at the time of the signal, the odds were in our favor. And as you can see, it's a difference of day and night. Suddenly, we had a winning system, a great equity curve, and simply by taking into consideration these odds that I just mentioned. So 6,827 signals resulted in only 2,599 sweet spot trades. So we ignored basically 2/3 of the signals because at the time of these signals, the odds were simply bad and not in our favor. And this gave us so much motivation, so much momentum that we decided to develop a whole suite of indicators based on this principle. Each of these indicators that we have developed is equipped with our technology, which is able to predict or estimate the odds of your next trade before entering it. So let me quickly introduce to you what these indicators are all about. So we call these indicators the Power Bundle 360. And this name was chosen on purpose. 360, meaning that they really do a 360 of the market. We have one indicator for trend trading, one indicator for reversals and counter trend trading, and one indicator for trading breakouts in a sideways market. So by having these three really complementary indicators, well, we basically cover each market cycle and many different trading styles. So whether you're a trend trader, we'll definitely find an indicator which will work for you. If you're a reversal trader or counter trend trader, you have an indicator. Or if you're trading breakouts, you covered as well. And each of these indicators are equipped with our AI-assisted trading technology, which will estimate these odds that I just mentioned. So before we look at charts, let me quickly give you an overview of what these three indicators are all about. So the first one is our trend indicator. It's called a 1-2-3 strike. And it gives you an entry signal if a strong trend is confirmed. And it does this by looking at three things. It's looking at directionality. So price must either be moving up or down for quite some time. So it must be trending somehow. And there must be evidence that this trend will continue. And it does this by looking at two things, at volatility and then increase in volume. And if both things happen, in combination with directionality, an entry signal is generated, giving us evidence that the trend is likely to continue. Okay, so this is our trend indicator. Our second indicator is called divergence cloud. As the name suggests, it is based on the concept of divergence. And perhaps you're familiar with this concept. It's basically a disagreement between price move and an underlying indicator. So for this indicator, we have developed in our lab our own form of divergence, which we call volatility momentum divergence. And it seems to be quite accurate. We've done so many tests that oftentimes outperforms the classic forms of divergence, which is, for example, RSI divergence or stochastic divergence. So when this indicator senses divergence, it will give you an entry signal either to the bullish side or to the bearish side, which can indicate a trend reversal. And our third indicator is called volatility crusher, which is our breakout indicator. And it will give you a signal when a strong breakout is confirmed. And in our books, a strong breakout is a breakout where price is likely to continue in the direction of the breakout. And you as a trader, you can imagine how you can take advantage of this. You can simply enter in the direction of the breakout in the anticipation that price will continue for quite some time. All right, enough theory, enough talking. Let me switch over to Metastock. Let's look at some charts together, shall we? All right, so let me find my Metastock. There we go. All right, let me just minimize this for a second. There we go. So what do we have here? Here we have Pfizer on the daily time frame. And I went ahead and I've applied our first indicator to this chart, which is 1, 2, 3 strike. And right off the bat, you can see a couple of things. So the first thing you can see is that some bars are colored greenish, like these ones here, and some bars are colored reddish. This is our trend indication, our directionality indication. Greenish means we are an upwards price move. Reddish, we're in a downwards price move. It's as easy as this. But of course, as a trend trader, you don't just want to follow or blindly buy into a trend. You want to wait for the right moment. And this is where the entry signals of this indicator come in. So if you look at these arrows here, these big green arrows, these are our long entry signals. And we also have big red arrows, which are our short entry signals. These are indications for you that now there's evidence that the uptrend is likely to continue. Therefore, you may enter into the trade. Or vice versa, if you have a big red arrow, there's evidence that the downtrend is likely to continue for quite some time, and you get this big red downwards facing arrow. But you know what? Entering into the trade is only one part of the story. It's only one side of the coin. Because once you're in a trade, what do you need to do? Well, you need to close the trade. You need to manage the trade. And this is where our exit suggestions come in, which you can see here in form of these reddish arrows. These are our exit suggestions. So for example, here, if we entered into this long trade here, the indicator will tell you, okay, at this point, momentum is slowing down a bit for this uptrend. Perhaps it's time to book some profits, take something off the market. And here again, and here again. And then we finally close the trade. Same for the short trade here. You have one exit suggestion here, another one here, another one here, and we finally close out the trade. The number of partial exits that you will get can be configured in the settings of the indicator. All right. Okay, so now you may say, okay, Daniel, this is pretty much standard. I've seen so many indicators which give me entry and exit signals. So what's the new stuff? Where's the cool stuff of your technology? Well, I haven't shown it to you yet. So let me open up the expert commentary. So I'm going here to Expert Advisor, and I'm going to Commentary. I'm going to open this up, and here you can now see something. Look at these numbers here. The statistics which I mentioned are displayed right here, which are basically showing you what are the odds, or what have been the odds of your long signals and your short signals. And the different word for odds is a win rate. What are the win rates of these signals? Basically giving you feedback right off the bat how well the indicator has been working. I'm just going to quickly check what this message here. No, it's all good. Okay. All right. Perfect. I thought there was an audio issue, but it seems to be all fine. All right. So these are the odds which give you feedback how well the indicator is working. So you can see that long signals have been working out better than short signals so far. All right. That's pretty cool. And from this, you can infer how confident should I be as a trader when a new signal comes up, whether I should follow the signal or perhaps ignore it. All right, but there's one more thing which is very handy when it comes to these statistics. Have you ever wondered, let's change pace for 1 second, if you will. If you use an RSI indicator, for example, have you ever wondered whether a period of 14, which is the standard period for an RSI, is really the best period? Maybe a period of 18 would be better, or 21, or something else. It's the same for our indicator. It also comes with parameters. But how do we know which parameter is best? Maybe a different parameter would be working best for this symbol and time frame. Well, let's try it out. So let's keep in mind what these parameters are, these statistics, 67 and 56. So I'm going to go to the settings of the indicator real quick. I'm going to edit it. And let's say I'm changing one of these parameters. Let's say this one here, volatility period. What they do is not so important. We have master classes recorded for what all these parameters do. Let's just pick randomly volatility period and change it from 7 to 10. I click OK. I close it, and I will reload my chart and observe what happens to the statistics. So I'm reloading it. And after a few moments, my statistics will show up again. Oh, it changed. Now it's 63 and 66. I think that's slightly better. So we're no longer in the 57 that we had before. All right. Okay, maybe I should change it again. Maybe I should even go higher with this parameter. Let's do it again. Maybe from 10 to, 14. Changing it again, closing it, and reloading. Let's see if this further improves my success rate, improves the quality of the signals. Ooh, it went down. 59 and 51. Maybe we went too far. But you may ask yourself the question now, oh man, this seems too tedious. I have to go into the settings all the time. I have to change the parameters, look at the statistics again. Too much work. I'm not going to do it. And you know what? This is exactly what we thought as well. And this is why we have come up with a technology in our latest generation of these indicators, which will find the best settings for you, so you don't have to. We call this the auto optimization technology. So let me show you how this works. So what I'm going to do, I'm going to remove the indicator, and I will now apply our latest generation of the indicator to the chart, which is called 123 strike AO. Just scroll down here. Everything is grouped under trading indicators. So here we have 123 strike AO. AO stands for auto optimization. I apply it. It looks exactly the same as the previous indicator, with the one difference that now the parameters have been auto optimized for this symbol and time frame. For Pfizer, on the daily time frame. So if we scroll down here, we can now see that, wow, our statistics, our win rates have gone up to 77% for long trades and 86% for short trades, simply by finding the best parameters to be used for this symbol and time frame at hand. And I'm telling you, this is a huge time saver because you no longer have to fiddle around with these parameters yourself manually, which takes a long time. The indicator now will do this for you. And this is possible for our latest generation of this indicator. All right, let's change pace a little bit. Let's go to a different symbol. And from now on, I will only be using the auto-optimizing version of the indicators. I was going to hide the efficiencies, just to speed up loading a little bit. Okay, so let's move on. Let's go to a different symbol. Let's perhaps check out NVR. All right, so here we have NVR. Also 123 strike is applied. You can see the candle coloring. And of course, you can see our long entries or short entries. And here, look at this nice short entry. Here, we really almost picked the top of this uptrend to signal that now a downtrend will start. And just as a heads up, none of these signals repaint. So we don't, put this short signal here after we know that a downtrend happened. These happen in real time, and they will stay there forever. So none of these signals do repaint. Let's change it one more time. Let's go to, let's say, GE, General Electric. Okay, let's put it up. And once again, we have 123 strike applied. You can see our long entry sequence. You can see our partial exits here, and so forth. A nice short entry here. But there's one thing I wanted to point out. Typically, with this indicator, our winners, because it's a trend indicator, so if you catch a trend, the winner might be quite substantial. Our winners are quite bigger than our losers because the indicator is designed to cut short losers, losing entries very early. So look at this short trade here. So we got a short signal here. Obviously, the market didn't go short, but shortly after, we got this long signal. This was a loser, of course, no question, but it was a relatively small loser because we closed it as soon as this long entry comes around, where we reversed the position and ended long into the market. And now, under the assumption that losers are typically smaller than winners, even when you have a win rate which is only around 50%, an estimated win rate, you can still be profitable because typically the winners, if they happen, they will outpace the losers. So in this case, let me see what we have. We have a very good win rate, 91% for long trades and 71% for short trades. So you can clearly see that long trades have been working out better, but even for short trades, even at 71%, that's still a really good percentage, especially if winners are bigger than losers on average. Okay, so this was our first indicator. Let me quickly switch over to the second one. All right. And by the way, guys, this is not just a trading system or indicators for the daily time frame. They work on any time frame. I just had, I found quite a few examples for the daily, but we're also going to look at a smaller time frame in just a bit. All right, so changing it up one more time, let's go to... which one do we pick? Let's go to Norfolk Southern. Okay, so in this case, I have applied our divergence cloud indicator. All right, and we can see, let me just quickly get rid of the expert commentary. There we go. So we have a bit of a bigger view. Okay, we can see a couple of things. The first thing we can see is that, again, some of the bars are colored greenish, reddish, or sometimes black. What does this mean? Well, in this case, it's a bit different from our 1 to 3 strike indicator. When a bar is colored reddish, it means that the indicator detected bearish divergence. A sign that perhaps an uptrend is coming to an end and a downtrend may start. When bars are colored bluish, or greenish, I should say, it's the opposite. The indicator detected bullish divergence. You can also see this here in this ribbon below the price chart. So maybe you can't really see what the candle color is. The ribbon below will also tell you whether we have bearish divergence or bullish divergence. And if the ribbon or the price bars are colored black, it means at this point in time, there is no divergence. Now, very similarly to 1 to 3 strike, this indicator will also give you clear entry signals for short and long entries, and also exit suggestions, which are the smaller arrows here. That's quite the same principle. And of course, also this indicator comes with our odds prediction technology, which we call the instant efficiency technology. You can see it here, the estimated odds for this indicator applied to this symbol and this time frame. All right, changing pace one more time. Let's go to a smaller time frame. Let's open up Bitcoin. Bitcoin has been recovering quite a bit lately. I've had a big upwards move this week. But let me open up Bitcoin real quick. There we go, Bitcoin. And this is Bitcoin on the, let me just get rid of the expert commentary for a second. Oops, there we go. Make this a bit bigger. This is the 5-minute time frame of Bitcoin. So it's really intraday right now. So as I said, our indicators, they do work on all time frames. There's no restrictions. And I mentioned that Bitcoin has been moving up a lot as of late. And you can see this here. We had this amazing, we had this short entry here, which was perhaps a small winner or perhaps break even. But then we had this long entry very early on. This is our counter trend indicator. It is designed to identify trend reversal very early on. And look at this amazing signal here at the onset of this big price move up. And guess what happened then? The price moved up. Great. We had some awesome signals here, some good winners. But then early on, we had this great short entry signal here while price was still quite up because the indicator sensed there's now bearish divergence, an indication that this uptrend may come to an end and perhaps will reverse to the downside. And this is exactly what this indicator has done. So we predicted this reversal early on today. And look at this follow through that we had ever since. All right. one more indicator, 1 to 3 strike. This is, volatility crusher. This is our breakout indicator. It's quick. All right, so for this, I'm going to open up Accenture. If I can find it. 1 second, Accenture. Where are you? There we go, Accenture. Perfect. All right, so this indicator looks a bit different from the other two indicators. It is really a breakout indicator designed to detect strong breakouts. And the philosophy of this indicator is that, a breakout occurs, and if it's a strong breakout, chances are that prices will continue in the direction of the breakout for a bit of time, but not forever. So this is why this indicator is designed to only look for a smallish price move, not a huge one, and then close out the trade. So it's like, no, one shot, one kill. You do it, you go in, and you go out fairly quickly. So oftentimes, let's see if I can find a good example. You have an entry here, and a couple of bars later, you're getting out of it. Here we had a short entry. A few bars later, you're done. You hit both targets. Sometimes you have a long entry, you hit your target 1, and you may get stopped out. Here we had a long entry, we had target 1 and target 2. Here we had a long entry, we hit both targets at this point, and so forth and so forth. So you can see that, this indicator is designed to take on small price moves and then close out the trade. That serves a different trading style. But there's certainly a point in there, because when a breakout occurs, chances are it will not last forever, because typically after a strong breakout, a retracement will follow suit at some point. And to avoid this, this indicator has chosen its target to be fairly nearby. And of course, also this indicator comes with its estimated odds prediction. If you go to expert commentary, you can see it just like for the other two indicators, that also this indicator will estimate the odds for you. And sometimes the odds are as high as 100% in the look back period. This is because, and for this indicator, let me just get rid of this. Oftentimes the winners are a bit smaller than your losers. It's by design, because we only want to take a bit out of the market and then close out the trade. So we're not aiming for a huge price move, just for a fairly small one. This is typically why the odds or the win rates for long and short signals are higher than what you would see with 1 to 3 strike and divergence cloud. But of course, this is by design. Winners here are a bit smaller, typically or on average, than the losers. Whereas for 1 to 3 strike and divergence cloud, winners tend to outpace the losers. All right. So Nicholas or Jeffrey, are there any questions at this point? I've been talking for a long time. Maybe not. Can you guys still hear me?
I think you're good to continue, Daniel.
Oh, okay.
Yes, we can hear you.
Perfect. Maybe I thought maybe I've been talking for the last 30 minutes. And anyways, okay, great. I will continue.
Yeah. If you guys have questions for Daniel, let him know as you go. So
yeah,
or let us know.
To address any
Type
question.
him in.
Awesome. Okay, let me quickly go back to my slides. So what we have seen so far, we have seen our Power Bundle 360 indicators, which really work great with Metastock. They give you clear entry signals and exit signals. They run on all time frames and asset classes. There's really no restrictions. So on the daily time frame, no problem. On the 1 minute time frame, no problem. Whether you trade futures or stocks or currencies, no problem whatsoever. And they all come with our real-time statistics, which will estimate for you the odds of your next trade. And with the latest generation of our indicators, they also come with the auto-optimization technology, which will find the best parameters for you based on the symbol and time frame at hand. All right, but there's one more thing, guys. There's one more thing I really need to cover in this presentation. So please don't stay focused if you can. There's one last piece. And this is what we call super signals. Super signals through confluence. You may say, what? Confluence? What is that? Well, let me explain. So confluence is basically, or more or less, a fancy word for when the good stars align. Or in the world of trading, when multiple indicators line up and forecast the same price move. Let me give you an example. Completely different example. Let's look at this chart here. So what do we see? Well, we can see, for example, that we do have a falling trend line up here, the black line. we do have a price, bouncing off the SMA 200, which is the blue line here. You can see it here. We are on a down, price has been going down, and we just retraced, you can see it here, nearby the 61.8 level retracement, which is a popular retracement area after a strong move. And we can also see that the stochastics, you can see it here, is currently overbought. So what do all these things suggesting? Well, what does the falling trend line suggest? Well, price approaching the 200 SMA resistance level, or a 61.8 retracement after a strong downwards move, or an overbought stochastic. What do all these things suggest? Well, they all suggest that price will continue to move further down. And this is what we call confluence. Multiple indications that price will move down. Not just one, but multiple indications. And if this happens, doesn't happen very often, but if this happens, you may be in for a great treat. So we have designed an indicator called super signals based on this very concept, based on the concept of confluence. And guess what? We are using our power bundle indicators to find out whether there's confluence. For example, let's say two of our power bundle indicators, let's say 1 to 3 strike or divergence cloud suggesting a downwards move. Well, that's a form of confluence. Or perhaps 3 of them are suggesting an upwards move. That's all a different form of confluence. And depending on what the degree of alignment is, we get different signals with our super signals indicator. For example, we have Bronx signals, where at least 2 out of the 3 indicators are suggesting the same price move, and the third one doesn't contradict it. That would be a Bronx signal. Yeah. A gold signal, for example, would be if 2 indicators are having an entry signal on the very same price bar, which is very rare. Or we have platinum signals, where all 3 indicators are having the same entry signal. For example, a long entry signal on the very same bar, which almost never happens. But when it happens, there's really strong evidence that price will continue in that direction, or will move in that direction, because all 3 indicators, which are actually based on very different principles, which are mathematical principles, are forecasting the same price move. This is something very important to point out. All 3 indicators that you have seen today are mathematically completely different. An indicator that identifies trends uses very different techniques than an indicator that looks for divergence, or an indicator that looks for breakouts. So they're all based on very different principles. But if coincidentally they all forecast the same price move, good things are happening. All right, so enough talking, enough theory. Let's look at some charts again. So real quick, back to Metastock. And let me open up Starbucks. I'm going to close real quick the commentary just to make it a bit faster. Going to my window. Starbucks. Where do we have Starbucks? There we go. Starbucks. All right. Opening up Starbucks. And here I've applied our super signals indicator. And let's see what we can see here. So for example, we can see a couple of Bronx signals here. Here, Bronx signal. Here, Bronx signal. Here we had a long Bronx signal which didn't work out. Here, a short Bronx signal. Let me just scroll back a little bit. Here, for example, we had a gold signal. I told you this before. The gold signals are quite rare, and they only happen if 2 of the 3 indicators are having a long entry signal on this very price bar. It's quite rare, but if it happens, you may be in for a great treat. Here another Bronx signal, and so forth. You get the idea. And this is what our super signals indicator is all about. Now, let's bring this full circle. All right, so we started off with Pfizer. So let me go back to Pfizer and apply our super signals to it. So originally we had 1 to 3 strike applied, but let me now apply our super signals indicator to it. So I'm just picking it here, trading indicators, super signals, applying it to the chart, and let's see what we get. And I did this on purpose, guys, because I knew, because I scanned for it before, that Pfizer today, at the end of market close, actually does have a Bronx short signal. And in fact, I was considering this one for the trade for my trade of the day today. But I decided to go for a different one for some other reasons, which I'm going to explain in a second. But yeah, this could have been a very interesting candidate. Pfizer has been in a very strong price move ever since the COVID highs, a downwards move. So we are approaching pretty much the lows of around 2020-ish, this area. Then price, of course, went up a lot with the whole COVID story. But now, since then, it's been in a very strong downtrend. And now we do have another wrong signal at the very last price bar, potentially indicating that Pfizer will continue to move down. And if you look at the signals that we had in recent history for Pfizer, we can see that, especially the short signals have been working out quite nicely. So the short was a big winner. Just long, not so much. This short would have been a winner. Here, another winner, and another winner. Of course, these are all wrong signals, which are the most frequently occurring super signal. But nonetheless, there's strong evidence that Pfizer will continue to move downwards for a bit more. And so this is our super signals. Nicholas or Jeffrey, any questions at this point? Or should I move on to the last topic I want to cover, just to bring it full circle? Okay, thank you. All right. So there's one more thing when it comes to super signals, which is the ability to create your own super signal. So there, the bronze signal, the silver signal, gold and platinum, these are all built in and predefined. But you can also define your own super signal. Basically telling the indicator, okay, these are the conditions that I want to see for a super signal to happen. For example, you want to see that maybe divergence cloud is bearish, while Supertrend, for 1 to 3 strike has an entry signal, and volatility crusher also has an entry signal on the same bar. That's the condition we didn't cover yet. You could define it with our BYOS feature, which is called Build Your Own Super Signal. So this is also possible with this indicator. All right. So last topic for today. How do we know which symbols currently have signals? Because I can't go through all of them manually, apply the indicators and see if there are signals. Way too tedious. Well, luckily, we do have Metastock, and we do have one of the most powerful scanners available in the industry. All right, so we're going to use this in a second. I want to ask you one more thing. So, okay, let's see if we can find out which symbols do have signals. Let's say we scan 1,000 symbols. Chances are we're probably going to find 50 or 60 of them which currently have signals. It is likely. Then the question comes, how do we know which of these signals have the most chance of being successful? Because we can't trade all of them. That's typically not a good idea. So we need to have some way of finding out which signals are the best ones of these. Well, this is our new scanning technique comes in. We call this the Generation 3 scanning, which pushes the Metastock scanner to the next dimension. I promise you. Okay, let me quickly explain. So in the plain old scanning, we call this Generation 1, you simply use Metastock to scan for entry signals. And you can do this with basically any indicator. Now you can run the scanner, and the scanner will tell you, okay, these symbols currently have entry signals or exit signals. Okay, so that's pretty much standard. But if you want to push it a bit further, so Generation 2 is to scan for entry signals, but being able to rank them, to sort them by the degree of confidence, how likely it is that these signals will pan out. And we can do this with Metastock by adding a column to the scanner, which will show you directly in the scan results what are the odds of your signal, what are the particular odds of this signal. And by having this directly in the scan results, you can simply sort by it and then pick the result that you got with the highest probability, the highest odds first. Now, it's going to save you a lot of time. But that's one more thing that we did, which we call Generation 3 scanning. We have developed a technology which will allow Metastock to scan for signals where the parameters of the indicators are optimized on a per symbol basis. So instead of using the same parameters for all the symbols, like one size fits all, the scanner will find the optimal settings first and then check if that symbol currently has a signal with the optimized parameters. And this really brings scanning to a completely different level. Typically, it stops at generation 1, but we brought it all the way down here. We are able to rank our signals by the predicted odds, and we are using optimized parameters on a per symbol basis. This is exactly what I have done this morning. I run exactly the scan. These are all predefined of our indicators. So if you get our indicators, you will get all these predefined scan queries. So I simply ran this scan this morning, and I ran, for example, for divergence cloud signals. These are the results. And look at what happened first. My number one hit was synopsis, the very trade idea, which I presented to you in the very beginning of this presentation. It was hit. It has a long entry signal. We can see this here. And it has a 93% predicted odds of being successful, which is amazing. So I sorted my signals. You can see it here. They're all sorted. It's all long signals. I sorted them by the estimated win rate. And the number one winner was synopsis. And this is exactly how I picked this symbol this morning for this reason, which made it very easy for me, because running the scan perhaps took, 20 minutes. I was running in the background. I was doing other stuff. I then looked at the results. I sorted my results by the estimated win rate, and then I opened up the chart from highest to lowest. When I open up the chart of synopsis, I could, for example, see, let me just start here, that synopsis has been making all-time highs very recently and has been a very strong uptrend. So if you look at this in Metastock just for a second, if I can find it, where is it? Synopsis. There we go. It's all the way on top. All right. So if I open this up, if I zoom out a little bit, you can see that, man, this has been trending up for a long time. Look at this move. It's huge. This is stock goes even further than this. So this is a stock which is highly bullish. And now we did have a divergence cloud entry signal. We had it yesterday at market close. Today, nothing really happened, but this is why I picked this trade. And it's still very valid. This setup is still very good. So if you want to follow suit, there's a possibility here for an entry around the current market price. I picked the stop around this support zone here. You can see that price bounced off these swing points or pivot points quite a few times, which indicates a strong support zone. And then I simply used a 1-to-1 profit target for this entry. But the beauty of this trade idea is that I was able to identify it simply by running the Metastock scanner, which has become my daily routine. It runs for a couple of minutes. I look at the results. I sort the results by the estimated win rates, and I focus on the ones with the highest win rate. So this could be a very easy, fast process for everyone. And of course, just to confirm to you, the estimated odds for this long signal is the one that will indicate in the scanner at 93%, as you can see it here. All right, so this is what we call generation 3 scanning, and this is exactly what I have done to identify this trade idea. All right, so if you're asking yourself the question, are these indicators for me? Should I consider these indicators? Let me perhaps help you a little bit. So first of all, it doesn't really matter whether you are a day trader, a scalper, a swing trader, or perhaps an investor. It doesn't matter, because our indicators, they work on all time frames and chart types. No problem. It also doesn't matter whether you trade stocks or FX or futures or even cryptos. It doesn't matter, because these indicators, they will also work on all asset classes and symbols. And if you are an engineer like me who believes that good tools can make your life easier and should make your life easier, and if you're a trader, it should make your trading life easier, then you really should consider these indicators, because especially the auto optimization functionality, which will find the best settings for you on a per symbol basis, so you don't have to fiddle around with the parameters, is such a big time saver. And of course, being able to scan for entry signals on an optimized basis makes also a big difference, because it makes it so much easier to only focus on the symbols which currently have signals and which have the highest predicted odds of being successful. So by being able to filter down to just a few candidates and then spend your mental effort on those can make a big difference in your trading. All right. So guys, as a special thank you, I'd like to extend an offer to you. So typically, we retail our power bundle indicators together with these super signals for a price of $1,497. This is for lifetime. Yeah, so this would include all these super signals. It would include our 1 to 3 strike indicator, our divergence cloud indicator, our volatility crusher indicator. They will all predict the win rates of your next trade, and they come with auto optimization. Yeah, this is all included. But as a special thank you, and thanks to Metastock also to make this happen, we have something better for you today. So thank you for attending. So we call this the Super Signals Special. You will get all what I just mentioned, but in addition to this, we will also throw in 2 bonus offers. You will get our trend radar indicator. I haven't even talked about this one, which is a retail value of $197. You will get it complimentary. You're going to throw it in. And we're also going to give you access to our weekly members-only live trading sessions. So we typically offer these for $997 a year. You will get these sessions complimentary. And one last thing, as a special thank you, we decided to slash down the price from $1,497 to only $997. That's a savings or a discount of $5 for a limited time. So if you guys want to take advantage of this offer, simply go to metastock.com. We arranged this, of course, with Metastock/sales chat. They are aware of this deal. And if you want to take advantage of it, simply mention the Super Signals Special to them from Trading Indicators, and it will be made available to you. And once you have it, you will also get access to these 2 bonus offers. And real quick, bonus offer number 1 is our Trend Radar Indicator, which allows you to find medium-term, long-term, and short-term trends at a glance without cluttering the chart. And it does this by printing such a heat map below the chart, which is either greenish or reddish. And you can see, by simply looking at this heat map, whether we are currently in a long-term uptrend, for example, but in a pullback scenario, which is one of my favorite patterns when it comes to trend trading. A pullback is the best trend when it comes to trend trading because it gives you a much better entry price, and you can enter into the trade at a much better, with lower risk because your stop loss is nearer. And the Trend Radar Indicator allows you to identify these pullbacks very easily. As you can do this, and you will also get our second bonus offer, which is access to our exclusive weekly trading sessions. They happen every Tuesday at noon. They're all recorded. So if you can't make it for one, no problem. You will get the recording afterwards. And the next one is already scheduled for November 14th. And of course, this is not tomorrow. This is next week. This is just a typo. So for next week, November 14th, the next session is already scheduled. So you get all these offers. And if you want to take advantage of this, I encourage you to simply go to metastock.com/sales chat. All right, so let me see what time we have. So Jeffrey, I think I've pretty much maxed out the hour. Are there any questions which I can address?
Yes, where's my mute button? I'm just kidding. We've been joking today about how we can never find the mute button at the right time. We did have a question, and I like this question from Mitcha. Mitcha wanted to know if there's an Explorer available in the Power Bundle.
What, an Explorer?
Yeah, an exploration.
Oh, like a scanner. Yeah, yes, yeah, of course. They're all predefined. So what I've shown you. Sorry, maybe I used the not Metastock specific terminology, but when I mentioned, let me just quickly go back, the scanner that it comes with predefined scans, I meant there are predefined explorations that come from our Power Bundle. So we have all kinds of explorations, not just for entry signals, but you can also scan for symbols which currently have open trades. They may not have opened on the recent bar, but maybe 5 bars back, but they're still open. There's still value for you because maybe there's still a good price to enter into it. You can scan for that too, for example. So yeah, lots of different explorations available, and they are all based on what we call the Generation 3 scanning, which will use optimized settings on a per symbol basis.
All right, very cool. I think it was you that said, and maybe I'm putting words in your mouth, but that you love the scanning that's available in Metastock.
It was definitely me. I love it. Yeah, it's super powerful.
Yeah.
It's such a huge. Yeah.
It's such a good offer too. Power Bundle's been so well received in the Metastock database. This is just brand new available. In order to get it, go to the metastock.com/sales chat. You can also call us at 800-882-3040. And that's all the questions. I thought you might be done. Are you done?
I'm done with the technical parts of it, but maybe just one last thing, Jeff.
Yeah, my bad.
Before I can be quiet. When you become a member and join our trading sessions and use our tools through this offer, for example, it's not just a one-off thing. You are really joining a community of traders, of users of the Power Bundle, but also with us from tradingindicators.com. And we do have one common mission to help each other. This is really a mutual helping of each other to become better traders or to offer better trading tools. So oftentimes I hear about ideas from fellow traders. They tell me, hey, Daniel, I just found this symbol, which worked out great with this indicator. Or what if you added this feature to your indicator? And oftentimes, if it's possible at all, we will add these features into our product. So these are not, products which will not further evolve. These are live products, which we constantly changing and evolving and adding new features to it. So if you join our community, you will be part of that entire evolution as well, which is pretty exciting.
All right, very cool. Thank you very much, Daniel. I appreciate it.
Yeah, you're welcome, guys. Well, thank you so much for staying on for so long. I know it's late. It's time for dinner.
All right, all right, and thanks for coming in. I appreciate it, Daniel. Let me go ahead and do this. So we're going to wrap up. Let's see. Thank you. All right. As we wrap up, just want to say thank you again to all of our sponsors. Stocks. I might as well turn on my camera, I guess. Stocks and Commodities Magazine. Again, great partner. We've done a lot of work with them over the years. CMT Association, cmtassociation.org. You can find out more about them. We're also going to have somebody from CMT come in and speak tomorrow to close up. And then AAII, of course. We really appreciate all the sponsors, everything that you've done. Today we had, just to kind of recap, we had some really good offers today. And, let's get here. Of course, Daniel, speaking, here, this is tomorrow. Actually, this is Saturday. Of course, Daniel talking about the super signals and the power bundle and the auto optimization. We had Kevin Nelson. I talked a little bit and didn't do justice to it, but Steve's add-on and what we worked on together to create that. We had Zaheer. Zaheer's new product looks great. Very, very excited to bring that on board. AJ Brown came in and talked. We had Peter Dalal talking about the Magic Trader, the Trade Trend by Jeff Tompkins, and of course, Adrian Manz. So I hope you enjoyed today. We had a great lineup. So far, I was talking to Greg about it. We think the summit's going well. I hope you're enjoying it. We have another great day tomorrow with Serge Berger, Fausto Pugliese, Sonny Harris, Bobby, our very own Bobby Hiller and Jerry Allison, as well as, it won't be Tyler, but we're still waiting for an updated bio and pick, but we will have a confirmed CMT speaker tomorrow, but not Tyler. So we hope to see you again tomorrow for a bit of a shorter day and again on Saturday. Thank you for coming to the conference. It's really good to see you. I hope you're enjoying it, and I will see you bright and early tomorrow.
Hi, Kelly Clement here from Metastock. Before you go, I have two quick things for you. One, thanks for joining us today. We love having you here at our webinars and viewing our videos. So what I'd like to invite you to do before you go is like and subscribe. Like the video, subscribe to the channel. It helps us a great deal, and it helps us bring you more awesome content like today's video. The second thing is we have a great ebook on trading that you can get for free. If you go to metastock.com/YouTube book, you can get a free copy of The Secrets of Successful Traders. It's a great book with lots of content from traders just like yourself who can teach you some of the secrets that they have learned. Thanks for taking a second with me and learning about those two things. Thanks for joining us, and keep on trading.